the world's wealthiest person paid no federal income.
I completely agree. It was unbelievable reporting. Jesse, I don't know how he got it. If that's really
We don't know how they got
if
it.
that's the subject of the investigation, is
They
how
don't
he
seem
got
to,
it.
even, was it hacked?
Welcome to the stream, guys. We're having a nice rally pre-market right now. We have a lot of high movers here. We have Wish going up. It's around 1456 after hours, if not a little bit more. We have Clover Health here also making big moves. We're at 2706. Massive squeeze on Clover Health. Right now we have Wendy's at 2850. AMC, where is AMC here? AMC is down slightly at 5182. And we see also, if we go to Go EV, it's also up after hours around 1237. And we're seeing a lot of action here. We're seeing a lot of action. Some are squeezes, which is not a squeeze. This is highly owned by an institution. So we're just seeing a flood of buying on Wish out of nowhere. So this is my current position here. And the market's about to open in 10 minutes. So it looks like we're back. Money's back in stocks and SPACs, meme stocks. And it looks like we're back. For those of you who have been following me and trading these stocks, it's been about 2 to 3 months that we've been completely dry. And, it's only recent that we're starting to see the money come back to stocks. So this is very exciting. Tomorrow we have CPI number, Consumer Price Index numbers coming in. So tomorrow might be a catalyst for possibly a down move. So tomorrow we have to be a little cautious about our positions tomorrow with inflation data coming in. So the market's going to open right now in about 9 minutes. And some of my positions, I'm already up here on my shares. So pre-market is going to be, it's looking pretty explosive. I have shares on some of these stocks, and I also have the options. So Omar, hi. Welcome to the stream, Omar. Thank you for joining us. So it's pretty exciting stuff here. Pretty exciting stuff. Before the open happens here, I just want to show you guys Discord. I've been working hard on Discord lately. I have a lot of, I'm following a lot of people on Twitter here. I also have podcasts. I have news feeds, YouTube feeds. So I encourage you guys to go check it out. Check out the Discord. I have a lot of information there, inside market, inside news articles coming right on as the information comes out, so you don't miss a trade. And I also post my trades live and my positions on the Discord. So I encourage you guys to go take a look. And for the most up-to-date information, I also have some of Kathy's information, ARK Invest buy and sell alerts. I have Bloomberg feeds here, Reuters, Benzinga. So I have everything that you want to follow on one platform if you guys want to check it out instead of switching between like 10 apps. I mean, I made it extremely easy. I have also Ortex giving you a feed here on the latest short interest. We see that Rocket continues upward momentum, currently up above 5% pre-market. So we have short interest on Rocket. We have Workhorse, short interest on Workhorse. So you get the latest news if you check it out. I have a beta testing, and it's out now if you guys want to check it out. So right now, let's go back to the market here. Let's see Workhorse, what we find. Workhorse up 17 at 1731 from 1560. So we're seeing this rotation into stocks. Let's see if we continue to see this flow going here until the end of the week. Tomorrow is CPI numbers, so that might do something to some of these stocks. A lot of action finally. I don't know if some of you guys were holding. A lot of action and money coming back into stocks. Very exciting. If we look at the market, overall market, the S&P and the NASDAQ, they had their run, and now they're let's see here. NASDAQ is up pre-market. They had the run, and now they're holding at this area, almost going back to all-time highs. And we see S&P 500 breaking all-time highs now. But This is what we want to see if we're going to have some of these names coming in here. We're names getting some money inflows of the SPACs and lower cap stocks that we trade. We want to see also the market going up with it. So very exciting stuff. Here we have Wish just above $14. We're a few minutes away from the open, but things looking really good. Wish all-time highs close to $33, $34. Anything is possible. It's currently here at this resistance level here. Let's draw a ray. I'll draw a horizontal ray here. We want to see a break around 1450, and then on our next target is going to be around $20, and then we're off to the races. We will be off to the races somewhere around $33. So this is kind of what we're looking at. Based on my position, I have longer term contracts, so I'm gonna wait this out. It has potential for this to go back to $30. I'm not saying this week, but there's potential here for a nice big move over the next few weeks. So a lot of great opportunity. A lot of these tickers getting a lot of great money inflows right now. Clover Health seeing a massive squeeze here. Workhorse also getting a squeeze here. So some of these names are getting squeezed, and some of these are not a squeeze. Wish is not a squeeze. There's not a lot of short interest. It's just a lot of institutions owning it. Let's see here. Another good name. Let's see. Clean. Wow, look at this. Clean Energy Fuels, 1364. I called this one out on the first day it rallied for potential squeeze, and it's gone. I did not get into Clean. This was one that I was talking about on my Discord. Wow, Clean up about 1376. Let's check out Palantir, slightly up. Rocket slightly up at 2237. So we're seeing the money coming in. It's going to be interesting to see how long this run lasts. Nokia flat at 555. Let's check out SNDL. SNDL flat around 117, just 1 cent above. Let's take a look here at GameStop. GameStop 306 here. GameStop at 306. AMC at 5180 here, slightly down. And Wendy's holding strong here at 2892. So Wendy holding its ground with potential for more upside. This one has a market cap of 6 billion. So this, based on this market cap, has a potential to 3x from here. This can go easily to 60 or 70 if it continues to rally based on the market cap. So great open here. Very exciting stuff. Let's see what else we have here. So that's basically what is trending here on this watch list. Let's take a look at some of the other positions here. Wish, Clover Health, at 2765, seeing the best performance out of all the other stocks pre-market. Let's take a look at Wish here at 1478. Awesome. And where is here? I'm gonna throw my other one here. Let's take a look here. Go EV is another one that is also squeezing here, looking great. So I'll put it here. Go EV does have some short interest and institutional owners, so Go EV has potential here for sure to come back. Let's do some price targets here for Go EV. I'll draw some horizontal rays. We want to see it break around $16, and then after that, there's some resistance here at around $19, and then around $20, and then we're off to the races. It's seen about all-time high of around $25. So I'll just draw 3 levels here. Go EV is another one that I currently have right now, so for longer term. So a lot of potential here. This one is squeezing. Workhorse is squeezing. GME, AMC obviously squeezing. And what else do we have? Let's take a look at GTT. So GTT was another one that I had on the watch list, and that one's currently squeezing, but it looks like the juice is out. It might be taking a breather here, but potentially can go back up. It might be coming back to my 10-day moving average on the daily. but we'll see how this works out in the next few days. Let's take a look at BlackBerry. BlackBerry slightly down pre-market. Tilray was another ticker that we saw over there trending. Right now, this one's at 2068. Bed Bath and Beyond slightly lower at 3620. And let's take a look at Virgin Galactic, slightly higher at 3837. Nokia, we already went over Rocket. Rocket, seeing one of the top tickers here getting some of the inflows here for, and we're open. We're off to the open. Strong opening here. Looking great. Wish at opening at around 1467. And let's see here. Let's see here some of the news here. This is my Discord. Workhorse short interest. Short interest remains very high in Workhorse, yet the stock is up over 10% in pre-market. Estimated short interest is currently at 44.47% of free float with 51.14 million shares shorted. Workhorse still short interest looking very great. Workhorse. That's the latest on the short interest. Let's look at some options alert here. Posted earlier. New options listings for 6/9, including Bitwise, Crypto Industries Innovation ETF, BITQ. Some of the latest on options alert. So Wish here pulling back now. It's at 1347. Massive pullback here. And let's see if this is just taking a breather here.
These IPOs are very interesting. I was spellbound at how interesting this Marqeta was. I mean, it's really, again, in fintech. It's the, David, when we start seeing this buy now, pay later phenomena is another phenomenon as a teenager you would have liked.
Yes.
You mean the Affirm sort of economy?
I had Affirm one. I think it's fantastic. Not everybody has enough money to buy everything. And by the way, when you have to start paying your student loan again, you're going to be needing this buy now, pay later.
Yeah.
How many trillions in student loans? Clover.
I know. Taking a look at Clover, of course, which is, I mean, the volume in these names is also unbelievable.
It's amazing.
Clover, even before the open, I mean, that Wish had traded 28 million. Clover's already traded 40
but Carl pointed out,
million shares. Its 30-day average is 46 million, so it's basically already traded its average full daily volume.
But there's not a lot happening, and these people are having the time of their lives.
All right.
That's what Mullis said yesterday. See that headline? 70 to 80% of meme investors are just having fun, said Ken.
There's nothing.
Did Ken actually say that?
Yeah.
Or yeah.
I mean, this is what the wires.
They just want to have fun.
Ken. Yeah. All right. Why not? Everybody should have fun.
It's a Cindy Lauper market.
I do know the cohort to a certain extent.
Cindy
Lauper. College freshmen, sophomores, they're out there on their phones. They're doing this stuff. They're buying these things, selling it. Also crypto. It's fun.
Well, I just think if you educate them a little more, they'll actually be able to.
The fun will stop. They will lose money.
I called for education this morning, and my tease was going, and that was.
Okay, so we see the stock. It took a breather here, and now they're going back up here. Clover also taking a breather. Let's take a look at Wendy's, AMC. AMC slightly lower here. GME, Sundial, Workhorse here at 1721. Wish, let's see if it goes higher. We're at 1435.
What's the dividend?
Yeah, they got a dividend too, about 3.8, somewhere in there, right?
Dividend?
3.8.
Is that like the Subtrahend or something?
Yeah, there it is, 3.5. There's a look at Merck. It's up 1%. This is a story I've been following closely, of course, because I know Ridgeback Biotherapeutics quite well and its founders. But molnupiravir, that's the antiviral that they have that's in phase 3 trials. Now, those trials, you got to follow people for 29 days, which is not a very long period of time, but finding them is the hard part. Enrolling people who know they just got the virus, but aren't overly sick, but are also in a higher risk group, for example, over 60 years old. And they got to enroll a lot of people. All that said, probably the fall is what Merck continues to point to when we'll get the results of the phase 3 trial. The news, of course, is the U.S. government has said we'll pay $1.2 billion for 1.7 million courses of molnupiravir. And you can do the math because that's sort of applicable. It's about $700 a course. 10 million plus courses will be available by the end of 2021, and one would expect other countries will also step up in a similar fashion to have this on hand. There are any number of people who aren't vaccinated. There are variants of the virus that will continue to, unfortunately, be around. And the expectation is this antiviral will be able to knock those down if given early, particularly for those who are in vulnerable populations, but even for everybody. As I've said many times, as a Tamiflu. Now, all of that, of course, is pending it actually getting emergency usage authorization and/or final FDA approval. But there's a look at Merck because it could become a substantial generator of revenue for.
Well, look, this is really important because, as Dr. Gottlieb said this morning, it's not when you're protected by these vaccines, they're still like 85% as opposed to say 90%, and that's 15% is a lot. That means it's somebody you hug or shake hands with.
It is.
If you do it 100
cases
times.
Have tended to actually be when they do get a breakthrough case. It's not that if you actually know you have it, it ends up not being great.
Although, I mean, as Fundstrat said last night, we're on pace to maybe fall below 10,000 cases next week. Yeah, we had 18 states yesterday.
It was an aerosol issue, and they just did it all wrong. Now they're getting it right.
Talking here.
Or
in
here
India.
too.
Yeah, here too.
But India, I just feel so bad. I mean, oh my, it's just so hard to watch. I mean, we want to do anything we can to help them. Anything.
Guys, a couple of research notes caught my eye this morning.
We're seeing Wish right now at 1450. We had the pullback here, and we had the pullback at the open. We had the gap up. We're already trading at 36 million volume at an average of 42.5 million. And now we're gapping up here at 1464, breaking here from the gap up. So it pulled back, took a breather. I was looking, this is a 5-minute chart on Wish, and I was looking for potentially pulling back to the 10-day moving average, but it didn't, and this is very bullish. It's holding its ground. We see a lot of volume here, almost trading at the average volume, and it's only been about 7 minutes of the market open. So Wish looking very strong here, and getting a lot of the money flows right now. If we take a look at Clover Health, gapped up to around almost 29 at the market open, now at 26. Wendy's slightly lower here, and looking to hold its ground. AMC is slightly lower here at 49.88, and Wish trying to sustain these prices at 14.64. So we're seeing a lot of action today. We're seeing the money coming back in, and things are looking good for small cap and SPACs and short squeeze type of momentum trades right now. These are some of the more trending ticker symbols right now. Clean Energy at 1381. This was trading at $9 earlier this week. And if we look at dailies on Clean Energy here, I released a signal on Clean Energy when it was trading around 950, getting this momentum. And this is one that I missed, but I'm in others that are working out. Clean Energy right now currently at 1382. So Wish here, it took a breather. Nice long wick at the bottom. That's what we want to see. This is the daily chart. These are some price targets that I drew. We see resistance at around 15.50. We see resistance around $20, and then all-time highs at around $32, $33. So Wish has a long way to go. And Wish is not a short squeeze. This is just a ticker that we see a lot of institutions owning. And I guess, yesterday morning they all decided to jump on Wish the same day. And then if we take a look at Clover Health, as Clover Health goes higher, we see the short interest go higher. So I don't know where this Clover Health ends. There's a lot of potential here on Clover Health. Wish here at 1450. Let's take a look at the 5-minute chart and take a look at it slightly closer here. 1426.
And it's without corporate.
Look, I think it's also a lot of fun. I mean, we used to, for my program, for Bull Market Fantasy, we'll derive questions, kind of like that, who's going to have the most touchdowns this week. But if you look at the DraftKings come-ons, it'll often be like, listen, if Aaron Rodgers, starts for an NFL team this year, because obviously he didn't show up to Packer camp.
I'm aware.
It's a big deal.
I follow him closely, Mr. Rogers.
Oh, you do? Because he's taking that Jeopardy job.
Yeah, it's the competition.
He wants the Jeopardy job.
He wants it. He wants it bad.
Devontae Adams, forget it. He wants the Jeopardy job.
Doesn't he have enough? I mean, really? Can't he just leave a little something for the little guys?
Shailene Woodley. He's got these.
You think he has everything?
Football 100 yards. He's one of the greatest QBs of all time. He looks like that.
Don't be jealous, David.
Man.
Don't be jealous. That's a really
Anyway,
very ugly.
We're talking about sports betting. Sorry, right?
Yeah. Oh, David. By the way, ATT got a $725 million veterans contract, 12 years.
Okay, that's.
I just
good
wanted to
know.
say something positive about ATT.
Well, I'd love to come back quickly. The meme stocks. This clean energy is also.
All right, so that's
CLNE.
Okay, that's Andrew Littlefield. I used to have him on all the time.
Did you really?
Littlefair, I'm sorry.
All right, it's up 38%.
Okay, so you have to look. This is long-haul natural gas. Also, it does short stuff. But what's really important here is that in 10 years, they've only had 1 year that they've had income. And I know, and I happen to love their technology. But the fact is, it has, every time it has thought to be taken off, you get the actual trucking companies, many of whom I've met with on this, just saying, look, that it's not going to happen. It's just going to be small time. But Andrew Littlefair communicated recently with me, and I was skeptical because of the problems with them actually not making money. But that has not stopped a lot of the mean people because the concept is so good. We would love to have natural gas be a cleaner, better.
Well, and I know you discussed Lordstown with Becky a moment ago. Back to 10. Strangely, RBC initiates today with a $5 target. They don't see EBITDA break even until 2025. Says they got to raise another $2.25 billion to remain solvent. We know about the ongoing concern. Yeah. Is this not a lesson to those who wrote it into the mid-30s?
Is it ever a lesson? And I had them on, and the company was highly promotional about orders. And if you didn't get a going concern letter, I would have to think that, that's a tough thing to get.
Yeah, it is. It's not a good sign when you need to raise that much if you're not Elon Musk.
So, it's suboptimal.
If you aren't an incredible promoter.
I mean, but when the company came on air, I mean, to me, the guy was kind of presenting himself as the next Mary.
Well, March 18th, Phil LeBeau took the CEO on this very topic. Here's what happened.
Great?
Never said we had orders. We don't have a product yet. By definition, we can't have orders.
So we see here GameStop at 294, Wish pulling back here massively at 270, and we're going back. This is a 5-minute chart. We're going back down to around the 10-day moving average, and pretty much yesterday's close. So we're coming back down around $12 here. We're only a few cents away. Clover Health still holding up pretty nicely here from the bunch. So Clover Health looking strong here. Wendy's slightly lower, continues to trickle down. AMC lower today at 49. GameStop holding around 295. Sundial Growers at 118. Workhorse here at 1763. So we have Workhorse and Clover Health both being the better one from the bunch. We have GoEV here at 1127. GTT going lower. It's 270. BlackBerry 1478. So what we're seeing here is Clover Health and Workhorse being the true winners right now, defending its ground. Tilray getting some action. It closed yesterday around 2020. It's at 20 21.50 right now. Tilray looking great here. Bed Bath & Beyond slightly lower. Virgin Galactic here at 37.15. Let's look at Rocket. Rocket also defending itself, staying up there. It's around at $22 right now. Rocket looking pretty good. And Clean Energy here, it looks like it's profit taking on Clean Energy. So if we go back to Wish here, we're at $12.86 on Wish.
Some supply issues. Inflation is the common theme. Every country's printing to the tune of, are there enough trees in the forest? And yields globally are going down. Does that sound like we have confidence to be able to count on price discovery to reflect the true risk reward of the interest rate complex? Because I think therein lies the issue. Look at a 24-hour chart of 10-year, 140s now. And if you open the chart up month to date, this is the 7th session of June. Right smack in the middle, you see where all the drops started, where yields started to move down? 8:30 Eastern on Friday, Jobs Friday. Jobs Friday really underscored so many different dynamics that we are reopening on a hot scale, and many countries are ultimately going to be there with us. But the issue is that as we are opening up, not only do we see that we have, in a way, created policies that are inhibiting a better opening. We can't seem to find the people that are unemployed to take the jobs that are being offered. You could put forth any reason you want, but there are lots of little glitches along the way. And should 10 years close at current levels be the lowest yield close since, well, the back end of February, as you see on this chart. Now, if I think about inflation, the equity markets just seem to be a natural place, especially now that the complex of the treasuries just doesn't seem to reflect that concern. Let's look at a chart pre-COVID, September 2019, of crude oil and the Dow Jones Industrial Average. Boy, they certainly seem to rhyme a bit, don't they? And finally, today, we saw the release of Producer Price Index and CPI in China year over year. The PPI in China, hottest since July of 2008. Carl, Jim, David, back to you.
All right, Rick.
Very big stuff.
Yep. Let's get to Bob Pisani as well. Morning, Bob.
Good morning, Carl. Hopefully we'll close at a new high today. We've been waiting for days to see if that'll happen. It's a little bit of disappointment because those bond yields Rick was referencing should be helping stocks. Not so much. Just take a look at the sectors, though. Tech generally leading early on. A lot of debate about whether growth is going to come back in the second half of the year. Energy and REITs have really been the big winners this month. Flattish, as you can see today. Banks down because of yields keep dropping. Rick was right on top of all of that, of course. Why are the bond yields lower? Look, I mean, you saw what Rick was talking about here, the slow descent that we've been seeing. It started even before what was going on with the jobs report, but there's a number of good points that the traders down here keep making the last couple days. Maybe some less lavish spending from Washington is partly responsible. A lot of people talking about the potential for slower growth in the second half of the year. Some believe, maybe the Fed's right. Inflationary pressures are transitory. A lot of different debate about the causes, but one thing's for sure, costs are going up. Do you see what the Campbell CEO said this morning? Our results impacted rising inflationary environment, short-term increases in supply chain costs. This is the CEO, and some executional pressures as we continue to advance our agenda primarily in our snacks division. But a lot of people, a lot of companies talking about higher costs here, not just Campbell's. And by the way, their earnings revenue were below forecast. Brown-Forman talked about higher input costs. Sherwin-Williams' higher costs. They're raising prices as well. Chipotle hiked menu prices by 4% recently. The Times had a big story the other day on Uber and Airbnb raising prices. Forget about low-cost taxi rides. That's not going to happen anymore. So it's definitely costs are going up. We're all going out a lot more. CPI is tomorrow. That's what a lot of people down here are going to be focused on for a good read on inflation. Keep an eye on that one. Meantime, growth versus value. Everybody's trying to figure out the second half of the year. I know Marco Kolanovic and Kathy Wood were out talking about growth is going to outperform. Okay, here's the story. Value has been up twice as much as growth so far this year. It inverted beginning about February. The index guys point out the obvious. Stop debating this. If you would have just owned the S&P 500, you'd split the difference. You'd be right in the middle. Value and growth are very confusing categories. Like, value is things like oil stocks. It's things like retailers like Gap, commodities like Freeport, and some of the banks like Wells Fargo. But there's other stocks like L Brands that are right in both of the categories. So it's a little bit difficult. Growth is not just technology stocks. Caterpillar's a growth company, for example. Deere's been a growth company for the last several years. These are not easy categories to figure out. I would simply say split the difference. The index guys certainly have a point just owning the S&P 500. Finally, Power Lunch today. Want to talk about meme stocks? Let's talk about it with the guy who's in charge, Gary Gensler, the head of the SEC. We'll talk to him about Robinhood. We'll talk to him about what's going on with all the meme names that Jim and everybody else has been talking about. We'll talk about payment for order flow. We'll talk, of course, about what's going on with climate change and the SEC's efforts on top of that. And, of course, what's going on with Bitcoin as well. Be a very interesting time there. Carl, back to you.
All right, Bob, thanks. Bob Pisani. So we got the NASDAQ up for 4 days in a row. We haven't had a streak longer than that since early February. And despite all this churn, the S&P is trading above a record close. We're back in a moment.
So now we have here volume on Wish, 94 million shares traded with an average of 42.5 volume, average volume shares. So we already crushed by double the average volume on Wish. So we see a lot of people coming into Wish today, and we're seeing a lot of money coming into stocks. It's coming back to high growth SPAC and short squeeze stocks, lower cap stocks. Basically all the stocks I like to trade. So Clover Health here at 25.40, and let's look at Wendy's. Wendy's melting away here a little bit at 27 from yesterday's close of around 28.80. So we're down about $1 and some change. AMC right now at 49. GME at 296, basically flat here. Sundial Growers was getting some love here, rallying up to 123. Right now, slightly back at 121. So slightly up maybe from the open, about 4 cents, 5 cents. Right now, it's up 3.45%. Workhorse here at 17.31. And then we have Go EV. Here was another number that was another name that was squeezing right now, currently at $11. GTTT, this was another squeeze. This one's pulling back. We have BlackBerry. BlackBerry defending itself, coming back up. We'll see if the 10-period moving average here rejects this pullback here, or if it holds and goes higher. So we'll see in a few minutes if BlackBerry holds or if we go lower. Tilray rallying up from yesterday's close of 2020 all the way up to around $22.10, $2, pulling back right now. Let's take a look at some more short volume here. The latest from Ortex. Tilray short interest update. Tilray is currently trading up over 7% today. Short interest has slightly risen. So estimated short interest is 6.44% of free float, with 27 million shares shorted. So this is not too high. 6.44 for Tilray. Some of these other stocks that we're seeing right now, we're having that 20%, 30%, and that's the kind of short interest that really moves. But regardless, this is a ticker symbol that likes to move, so not to be ignored. And Workhorse, this update, we went over it earlier. Let's see if we have any recent news here. Yahoo Finance. CNBC, anything exciting? Okay. And we're seeing melting away here. Wish at 12.32. So we're going to give up the gains here, and we're going back down to around 11.50. So we're seeing a sell-off here. Let's see what's going on here with the Nasdaq. Nasdaq gapped up and now getting hammered. Let's look at the S&P 500. S&P 500 trying to break all-time highs here. Basically just slightly away, broke all-time highs and getting rejected right now. Let's look at the VIX. VIX slightly going up here, 1720. Just remember, guys, tomorrow is CPI. We're possibly going to see a lot of volatility tomorrow. Very important CPI numbers. Could potentially, if we get a higher number, we're going to potentially see some downside. This will not be good for interest rates. So Wish, you're basically giving up all the gains here from $15 down to $12.21.
If there's margin compression. I happen to think Sherwin-Williams is a great company, but I know analysts say, hold, if margins are under pressure, we don't want to be in it, hence the stock going down.
Although this Credit Suisse upgrade of Colgate suggests that margins could surprise up.
That was surprising because the TiO2, which is whitener, is just on fire. I don't know how they're going to do that, but I know Colgate's making a lot of right moves. Other people jealous, trying to figure out what the heck they're doing, given the fact that toothpaste, whitener, is going to cost a fortune.
CS says 95 target on CL.
That was a good piece.
Which is a 14% upside. What's tonight?
Okay, so I have CrowdStrike, which is one of my favorites on Palo Alto Networks when it comes to cybersecurity. Got to find out what's going on with Bitcoin, obviously. And then I have Tim Massett, old friend from law school, former head of the CFTC, who's very critical of a chain in the command of crypto, which is Tether. And we're going to talk about it tonight because Tim has scared me. And Tim's a smart man. Tim Massett. Look him up because you'll see what he might be saying tonight when we talk about it. Because it's not. I'm pro crypto, but I'm worried about this one part, and I'm worried about getting 8.6% on my cash and account crypto. 8.6.
No explanation.
Doesn't make sense.
Doesn't. Something wrong with that.
All right. Thank you, guys.
All right, good one. We'll see you at 6. A lot more on the meme stocks when we continue. Don't go away.
So for now, for the open, looks like momentum is dying out here, pulling back. We're currently at 1246. So Wish pulling back from around $15, and now momentum is dying. So 30 minutes into the market, and we saw this pullback, and already Wish trading double its volume. Clover Health also here, giving away some gains here, going back down to yesterday's close. So Clover going down to 2304 here. Wendy's, another name here at 26.71. Wendy's. We have AMC here holding and slightly pulling back up here. Let's change these colors here. Let's go with the... Let's go with this blue here. Second color, we'll go with this blue here. And same for the bottom. And for the colors here, we'll change this to
We do have the Nasdaq up for a fourth day in the row, and the S&P trading right around a record close. Wholesale trade data is out, and Rick Santelli's got it. Rick?
Yes, our April final read on wholesale inventories comes in at up 0.8, which is exactly what the mid-month read was, so it remains at 0.8. Just for context sake, if we look at the high water mark, because of course we are definitely in search of inventories, it was up 1.4 right at the beginning of the year in January. That was the best level month over month of inventory increase since May of 2011. On the trade side, also up 0.8. Now, this is just one read. We don't have a mid-month read, and it follows sequentially 4.6. So we could really see it tapered off for a variety of reasons, not the least of which is some of those and certain parts of the manufacturing world, of course, that have eased back a bit while the service sector kicks in fourth gear. Morgan, back to you.
The whole picture for wholesale sales. Rick Santelli, thank you. We are 30 minutes into the trading session. Here are the three big movers we are watching right now. We're going to start with Campbell Soup. That's down big following an earnings miss, with revenue also coming in below forecasts as results lagged those year-ago figures that were boosted by pandemic-related demand. As you can see right there, the shares are down 6%. Plus, Fox getting an upgrade to buy from hold at Wells Fargo, with the firm saying that that stock could benefit from Fox's presence in sports gambling despite pressures from cord cutting. You can see those shares are up about 3.5% right now. And we will end on what else? Something we talk about so often. Bitcoin bouncing back as the crypto's volatility continues. This as El Salvador becomes the first country to adopt Bitcoin as legal tender. We are going to take a closer look later this hour at those dynamics and potential opportunities around it. Carl.
And speaking of volatility and an expanding universe of tickers, our Kate Rooney has a lot more on the ongoing meme trade. Hey, Kate.
Hey, Carl. Good morning. The Reddit crowd has a new target this week, Clover Health, and it hasn't been a great week to bet against this stock or a lot of the other meme trades. Shares of the Medicare insurance startup jumped more than 85% on Tuesday. It was one of the most mentioned tickers on Reddit's Wall Street Bets forum, which now has more than 10 million members. One thing that tends to attract these so-called Yolo, or you only live once traders, is heavy short interest. When they see a large amount of investors betting against a company, they often try to gang up and prove them wrong and make some money in the process by piling into the other side of that trade. Reddit traders know this tactic well after GameStop in January, and this week are encouraging each other to take advantage of the short interest in Clover. About 44% of Clover shares are sold short. That's according to data from S3 Partners. That's basically more than double what AMC and GameStop have. They've been adding to those positions lately. Over the past 30 days, the amount of Clover shares shorted went up by about 25%. As shares rallied on Tuesday, short sellers lost roughly $500 million in a day alone. And these bears could be adding fuel to the rally this week in what might be a short squeeze. These heavily shorted stocks suddenly jump, and then the people that bet against them are forced to buy back shares and close their positions to cut some of those losses. Meanwhile, rallies in AMC and GameStop this week added to the recent pain for those short sellers. Losses have climbed to $7.3 billion for GameStop short sellers so far this year and $4.5 billion for those betting against AMC. David.
Thank you, Kate. Well, as Kate just mentioned, of course, not all the attention anymore is on GameStop or AMC. Christina Partsinevelos has a look at some of the other names that are being watched right now, and you never know who's going to be next, do you, Christina?
Yeah, and I sense a theme right now, David, right? Because we've been talking, yes, GameStop, AMC, all of these companies rightfully gain all the headlines. But there are others that are lurking in the subreddits of Wall Street Bets, FinTwit, and online platform Discord. Take, for example, Context Logic. Ticker Wish. You can see the stock price is up just about 11% so far after gaining nearly 50% on Tuesday. It was the second most mentioned name on Wall Street Bets subreddit over the past day and could be seen as a short squeeze, which Kate eloquently explained, with an 11% of the float shorted. Another one, Car Lots, a used car and consignment dealer, continues to climb. The stock popped over 28% yesterday, although there was no specific company news aside from a new hub in Virginia. Lots chatter, though, thrived on FinTwit and Discord. Right now, the top industries with the most online mentions are electric vehicles, cannabis, crypto, and anything to do with gambling. And speaking of cannabis, here's the Tilray CEO commenting on his Reddit followers on Closing Bell yesterday.
It's a great base of shareholders to have because they're so educated about your company and educated about your products. It's amazing when you come back and look, what they're posting about our products.
They may not be AMC or GameStop, which still, of course, I have to, point that out. They have a heavy following online, but there are other trending names like Clean Energy Fuels, Fubu TV, Sundial Growers that are lurking in those subreddits. So what does it take to be one of these memes? Have a bump in trading volume with no major news catalyst or a large short interest along with a ton of support in online forums like FinTwit, Reddit, and Discord, or the simple belief that these stock prices will shoot to the moon. Morgan?
Rocket emojis abound. All right, Christina, thank you. It is a great place to start with our next guest. Joining us now is Sarah Levy, the CEO of investing platform Betterment. Sarah, welcome to the show.
Thank you. Thanks for having me.
All right, so I realize that Betterment is more focused on passive investing. We're talking about digital advisory firm.
Options alert. We have unusual heavy options volume today. Open include CPB, ticker symbol CPB. We have TROW, ticker symbol TROW. We have SYF. We have CLX. And we have KMI. So that's latest on the options alert here. Wish here holding yesterday's high, bounced back up, rejected, and now we're trading within a range. Trading within the 10 period moving average here on the 1 minute chart. We have unusual volume, ticker symbol TRIP, 5 times market weighted volume. We have 9,695, which equals 45.1K projected versus 90-20 advance, 98% calls, 4% of open interest, 1,056 trades, 995 calls, 261 puts. So we're seeing a lot of volume on ticker symbol TRIP on the option side.
from some of the incumbents. So we saw 118% growth in net deposits in the first quarter as an example, just of how comfortable people are now, interacting with an innovative, easy to use platform and seeing that as really the key to unlocking their financial future.
So how does retail investing evolve, and how are you investing in the company for that?
Sure. Well, I think personalization is really one of the things that's driving kind of the emotional connection that you're seeing in the meme stocks, right? It is a game, but there also is a sort of values alignment and an engagement opportunity. And so as we think about kind of the robo investors of a decade ago, it was really more of a set it and forget it idea. And as we think ahead, we think that there's an opportunity for what we're calling guided choice. And so we'd like to give kind of more personalization opportunities to our customers and allow them to engage, but do that within a guided framework and offer the education they need to be making smart choices.
Hey, Sarah, I wonder if you can sort of characterize how this meme audience is handling loss. Because we've seen examples where stocks, either on fundamental news or not, do go negative, but the meme is diamond hands. And I guess, are they demonstrating over time that they really do have tolerance that we're just not used to seeing?
Right. Well, I think the challenge that we see is that a lot of people are going to lose money gambling. Right. This really is gambling. And so the data suggests that, on average and over time, you're going to do better in a long-term diversified solution. And so for us, we think the question is, can we find a way to really make that emotional connection, but make it in a more long-term diversified way? And so we're seeing, as an example, socially responsible investing. That's a great place where this generation can sort of vote with their values, put their money where their emotion is, but do it for the long term and do well while doing good. And I think that's kind of an example of matching the emotional piece of what you see in meme stocks without the fear of, outsized losses.
Sarah, it was only a couple years ago that we were hearing that millennials were underinvested in the market, that these were some of the dynamics with this generation having come out of the financial crisis and seeing their parents burned, that this generation had not been participating in the bull market that we had seen pre-COVID. The fact that we're having this conversation today, whether it's day trading, whether it's longer term investing, which I know you're focused on in the millennial market, does this represent a moment or a shift in which younger adults are finally getting into the market in general?
Well, first of all, these millennials are finally coming into wealth, right? They're entering their highest wealth earning years. There's going to be, a much reported transfer of wealth from the boomer generation, nearly $30 trillion coming to them. So I think what's exciting about the opportunity is that, these are customers who are interested in working with brands that believe in them, that share their values, and that represent innovation. And so we do see this as an opportunity for them to begin to enter the market, and importantly, to begin to save really for the long term, right? And for us, we'd actually turned some of our focus, a meaningful part of our focus, to retirement for this reason, because now that they have the assets to invest, we want to help educate for the long term.
Sarah, something else that we've been covering closely, perhaps overshadowed recently by this meme trend, is ESG. Of course, probably a lot more important for the long term. What are you seeing amongst your client base there in terms of raising assets around that, given how important it seems to become for the index funds, for example?
So we love ESG, and we actually talk about it as socially responsible investing because we think it makes more of an emotional connection when you talk about it that way. And we launched last year 3 socially responsible investing portfolios: a broad portfolio, a climate portfolio, and a social portfolio that focused on gender and racial inequality. And we have seen incredible adoption. We've accumulated more than $1 billion in assets in under 6 months in those portfolios, and they're growing at literally twice the pace of any of our core portfolios. And again, we think it's because we're meeting the moment, we're striking a nerve, and we're connecting. And emotional connection and money are a really important place we think we can play.
Yeah, quickly, Sarah, crypto, will you get involved in some form or fashion, offer some sort of product?
I think we will ultimately, but right now we're thinking about how to do that within a long-term balanced framework, and to think about it through the guided lens, and to think about it as an asset class to hold for the long term, not in the vein of watching the daily fluctuations.
Sarah Levy, thanks for starting the hour with us.
Thanks, I appreciate it.
Well, as we head to a break, here's a look at our roadmap for the rest of the hour, and it is a big hour. Bitcoin bouncing back after another volatile week.
Plus, the hunt is on for the tax leaks that revealed major financial information on some of the world's wealthiest individuals.
And a rough ride for Lordstown Motors. The company says there's substantial doubt about its ability to continue as a going concern. More Squawk of the Street continues in a moment.
So we have some bull flow on ticker symbol IBB, bull flow, put to call ratio, 429 versus 10,000 plus. So we see a lot of bullish flow on the call options on ticker symbol IBB. We also see nice put to call ratio on XBI, 4,300 versus 12,000. XBI, seeing some bull flow here. This is the latest on the Robinhood IPO. Robinhood Markets is set to now target July for IPO. So Robinhood looks like it's pushing back until July for its IPO. That's going to be very interesting. Right now we're seeing Wish here just giving away those gains at 1184. Wish melting away. Let's take a look at Clover Health. Everything giving away here. Wendy's, Clover Health, we're seeing Wish. AMC getting some of the love now. So now some of the stocks that gapped up are now giving away the gains, and now we're seeing the money going into AMC and GameStop. GameStop now at 300. So we're seeing some of this money rotate now. Sundial Growers down to 121. Workhorse down 1639. So all the stocks that gapped up have given up their gains, and all the stocks that were down are now up. So we see a rotation here. Go EV giving up here at 1057. Go EV giving up some gains here at 1057. BlackBerry 1496. Tilray at 2151. Bed Bath & Beyond at 3487. Bed Bath & Beyond here slowly just going back down here, getting going back for a pullback here. Virgin Galactic 3683 here. Nokia 555. Rocket Companies here at 2151. So we're getting crushed here. Hard pullback here on all the stocks and all the trending stocks. And we see here new alert Twitter put to call ratio. Put 9,000, calls 56,000. So Twitter, a lot of inflow on Twitter.
This morning, the S&P, well, you can see it right there, just up 0.02%. It is just below its all-time high. Joining us now to discuss some of his top picks, Oakmark portfolio manager Tony Coniaris. Tony, good to have you this morning. I mean, it's funny, the story of the morning is probably in the bond market, not the stock market, with that 10-year yield backing off to below 1.5. You know, I'm curious, does that have any impact overall on sort of how you view the market from here right now, given growth versus value, and obviously where your focus is at Oakmark?
It really doesn't. At Oakmark, you know, we look at investing one company at a time, bottoms up. We look for good companies with good management teams at discounts to intrinsic value, and really try to strip out the near-term macro noise, such as, you know, whether interest rates are up or down on any given day.
Yeah, well, you guys have been doing a pretty good job doing that as we take a look at the Oakmark Global Fund or the Select. You've been outperforming at least this year. So what is it, you know, we've had you on a few times. The portfolio doesn't change too much, frankly, which is good. You're a long-term investor. But what is new here? Any new themes that you want to sort of stress with us, or new names?
No new themes. A name that we bought a couple of quarters ago across a couple of the funds that I find really interesting today is Fiserv. Fiserv is the merger of Fiserv and First Data that happened in 2019. It's a financial services software and payments company, and it's sort of valued like a dinosaur in the payments area, but it's really anything but. And the management team has been making investments to make this a relevant payments player for the long term. When you look at the valuation on the stock, it sells, including synergies from the transaction, around 16 times earnings. That's a 30% discount to the overall market. This is a company that deserves a premium to the overall market. It has a terrific management team led by Frank Bisignano, CEO, who at the most recent Analyst Day committed to allocating 40% of the current market cap in mostly share repurchase over the next 5 years. That's an 8% return without the deserved multiple expansion that we think the company deserves in a world where treasuries are, like you said earlier, 1.5% this morning.
Tony, I realize that you're not necessarily paying attention to daily moves across your portfolio or when it comes to rates, but just looking out to this year and beyond, what are you anticipating in terms of a rate forecast and what that will mean for equities, especially as we talk about the Fed talking about tapering and inflation and everything else that is drawing investors' attention right now?
Yeah, look, we own financials, so you have to think about interest rates. The way we've done that is take a fairly passive view in the short term, look at what the futures market's projecting, and then eventually assume 4 or 5 years from now that there's a very small real rate of return on risk-free assets, which if you look historically is not a wild bet to be making. But again, several years out. And if you factor that into the financials today, they do look pretty attractive.
One more part of the macro discussion today is why equities, some argue, specifically over at Morgan Stanley, why equities are not looking to the bond market for signals about how to re-rate in advance of some kind of tapering cycle. I just wonder, do you consider the bond market a good tell these days?
The bond market can be a good tell. We tend not to focus on that. Okay, we like I said earlier at Oakmark, we go one stock at a time. What do the future cash flows of this business look like? What are the risk factors? How do you discount it? Do we like the management team? And if it's selling at a great enough discount for us and meets our quality and management criteria, we're going to buy it, irrespective of any sort of noise in the interest rate or market environment.
What's the average hold time in the portfolio these days for your average position?
Turnover tends to be between 25 and 30%. We don't manage to that, but that's typically how long it takes for value to be realized. When you buy companies at a discount to value like we do at Oakmark, sometimes the market takes a couple of years to agree with you.
Yep, we have seen that happen, and we've watched it as well with Oakmark. Tony, always appreciate your updates. Thank you.
Thank you.
We're going to turn to UPS now, which is in focus as its investor day is underway as we speak. The delivery and logistics giant laying out 3-year financial guidance, including a 2023 revenue forecast of $98 to $102 billion. UPS posted $84.6 billion in revenue last year, just to give you some context there. The company targeting adjusted operating margin of about 12.7 to 13.7% in 2023, which analysts note would be a big improvement versus recent years and the performance we've seen there on that metric. Capital spending for 2021 to 2023 is expected to be $13.5 to $14.5 billion, with adjusted return on invested capital ranging from 26 to 29%. But UPS also unveiling ESG targets, saying it aims to be carbon neutral by 2050. To get there, by 2035, it is looking to reduce CO2 per package by 50% from 2020 levels in its small package operations. It's looking to power all company facilities with renewable electricity and have 30% of its aircraft fuel mix be sustainable jet fuel options. So UPS is joining FedEx in those efforts after FedEx announced its own plan in March to be carbon neutral by 2040. As you can see, shares of UPS are down this morning about 2.5%. However, they are up more than 90% over the past 12 months.
Quite a run. Speaking of quite a run, Dish shares have actually had a very nice move this year, but they are down about 4% today on a JP Morgan downgrade to underweight. They cite increasing competition in the wireless industry, which Dish is yet to fully enter, of course, but has the spectrum to do so for 5G. The window, though, getting tighter and tighter for them to really have what at least JP Morgan believes will be a competitively dominant product, if you want to call it that. Price target $45 a share, though, actually went a bit higher. Squawk on the Street. We'll be right back.
So we have an AMC short interest update. AMC share price is slightly down in the first half hour of trading, but still up 100% month to date. Short interest is increasing today and currently at 11.2% of free float. So this number was at 20%. So this one you can see that a lot of shorts already covered, and that yeah, they probably locked in a lot of losses because I'm sure they weren't trying to cash out at $50. So short interest slightly increasing here and lower overall from the past 3 days. We see here massive pullback, and this is a position I plan on holding. Wish all-time high was somewhere around $32. My price target to exit this trade is $30, whether it's this week or next year. So this is what I'm holding. It has a lot of huge potential, and I'm just very surprised that it got the attention that it did and that it's been running at this level. I bought it pretty much at the lows the day before that it ran, so I'm pretty happy on my position. We look here, I'm up 151% on my position, and this is a position I plan on holding until January next year, or my price target of $30. So yeah, we're going to see a lot of volatility and pullbacks in between, but I'm happy with my entry and I have the confidence to hold it through. We have put to call ratio here on edit, EDIT. We see 127 puts in comparison to 6,700 calls. Very bullish. Also, we see some options activity, bullish options activity on ticker symbol MAC. That's ticker symbol MAC. Labor shortage is keeping the job market recovery in first gear. Manpower Group CEO. Okay, let's see here. Most home buyers didn't move very far during the COVID-19 pandemic. Some real estate news there. Lumber is adding $34,000 to the cost of new houses. Bank of America report. So housing booming right now. Housing shortage, lumber shortage. So peak highs right now. We've seen some people come and pick new hobbies and interests. Okay, just outdoor news and fishing. Let's see what is the latest on Bloomberg. China's a fast-growing wine market, plans to turn a northern region of the edge of the Gobi Desert into a center of top-quality wine production. So China, expanding wine production. Some EV talk here. Libya and oil. Okay. Let's see here. Biden is revoking Trump era bans on the Chinese-owned apps TikTok and WeChat. So Biden here revoking the ban. Let's see. Anything else? Anything exciting here? Okay.
Of analyzing the data from our successful May 22nd flight. As previously announced, we expect to complete the final test flights this summer through early fall. At this time, we have not determined the date of our next flight. Nonetheless, it is a name that continues to be on watch, Carl, and then you couple that with expectations around the rebound in commercial aviation and defense spending proposals that are actually better than had been initially feared, and you see some strength in this sector.
Wow. Just an amazing change of fortune, really, over the last month or two. Just incredible. Still to come this morning, what El Salvador's adoption of Bitcoin, now legal, means for the volatile cryptocurrency. We're back in 2 minutes.
Latest from the SPAC news, private jet operator Vista Global holds SPAC merger talks. Vista Global could be valued at more than $10 billion. Swiss businessman built firm through acquisition investments. a private aviation provider that competes with Warren Buffett's NetJets, is in talks to go public through a merger with a special purpose acquisition company, according to the people familiar with the matter. A transaction could value Vista at more than $10 billion, including debt, said the people, blah, blah, blah. Okay, so let's see if it gives us here a ticker symbol. It's talking about its earnings. The chairman, Swiss billionaire Thomas Floor. Let's see. Okay. I don't see a ticker symbol here. Dubai-based Vista in 2019 agreed to buy U.S. rival JetSmarter in a deal that gave Clear Lake Capital and Jefferies Financial Group Inc. stake in the combined company, and it agreed to acquire XOJet in 2018, Red Wing Aviation in 2020, and Apollo Jets in March to add customers and new services. Okay, I don't see a ticker symbol here. The company has partnered with athletes, including golfer Phil Mickelson and Formula One drivers Charles Leclerc and Carlos Sainz, to attract high-end clientele. Okay, making some power moves there. Okay, here we go. Another private jet operator, Wheels Up Partners Holding LLC, agreed in February to go public through merger with Aspirational Consumer. Okay. Another private jet operator. Okay. So potential ticker symbol to be determined and to look out for here.
Tatas got into its engines. After several hours, a replacement jet took off. Biden has also signed a new executive order dropping former President Trump's attempt to ban TikTok, WeChat, and several other Chinese-owned apps. The Biden administration will do what it calls an evidence-based review of potential security risks. Democratic Representative Val Demings formally launched her campaign for one of Florida's seats in the U.S. Senate this morning. She's challenging incumbent Republican Marco Rubio. And the California Highway Patrol has released video of Officer Casey Ramstead coming to the aid of a baby in a car on the side of a busy freeway who was choking. Ramstead is a licensed paramedic. He slapped the baby on its back, dislodging a cherry so the child could breathe again. Absolutely terrifying, but thank goodness it seems like that baby is okay, Carl.
Wow, the things we rely upon from the police. Fantastic. Thank you, LP. Welcome back to Squawk on the Street. I'm Carl Quintanilla with Morgan Brennan and David Faber live at Post 9 of the New York Stock Exchange. About an hour into trading here. Pretty tight range. S&P really hovering right around 42.32, which interestingly is its record trading close. Gainers, Biogen, Fox is in there on some research today. Some of the laggards also surrounding research, Dish among them, as we look at some of the worst performing names on the S&P at the moment.
All right, well, Bitcoin's volatile week continues today, bouncing back after falling below 32,000 yesterday. This as El Salvador becomes the first country to approve Bitcoin as legal tender. Joining us now is Alan Lane, the CEO of Silvergate Capital Corporation, the exclusive issuer of dollar-backed stablecoins by Facebook-backed Diem. Alan, it's great to have you back on the show today.
Thanks, Morgan. It's great to be here.
Given this news out of El Salvador right now, I do want to start there. I mean, we're hearing more and more talk about whether it's Bitcoin in the particular case of that country or whether it's central bank digital currencies that are being looked at different countries around the world right now. What do you expect that landscape to evolve into, and what that also means for a bank, a financial institution such as yours?
Sure, Morgan. Great to be here again. Thank you for the opportunity. And what you're seeing is just this constant adoption of Bitcoin. We've been seeing it since we first started looking at this space back in 2013. And we opened our first account for a Bitcoin-related company in January of 2014, and we just have never looked back. Each one of these cycles kind of has its own theme, and the theme, certainly through the pandemic over the last 18 months or so, has been this constant move to digital. and the digital currency market is just really reacting positive to that. You've seen everything from the institutional adoption, MicroStrategy, now companies such as countries such as El Salvador looking at Bitcoin as legal tender. That's something that the Bitcoin community has been talking about for years, and it's great to finally see it happening.
Yeah. And I realize that you are involved in and supporting with your infrastructure all of these different pieces of the cryptocurrency puzzle and offerings that are out there. But how would you break it down between the Bitcoins, the stable coins like Diem, which I know you're working with as well, versus the possibility of, for example, the central bank digital currencies that we could see emerge too?
Sure. There is a very distinct difference. A cryptocurrency like Bitcoin is a permissionless, non-sovereign, distributed store of value. It doesn't have a CEO, doesn't have anybody that controls it. And but when you get over to the stablecoin question, stablecoins, as you mentioned, Silvergate is the exclusive issuer, will be the exclusive issuer of the Diem US dollar-backed stablecoin. And that is by design a permissioned and a centralized digital currency that is essentially to maintain a stable value so that it can be used in commerce without the volatility that you see in decentralized currencies such as Bitcoin. And then to touch on the last part of your question, the central bank digital currencies would be yet one step further, where they would be actually issued by a government. And you've probably seen that Diem has actually commented on the fact that they view this, and Silvergate does as well, as an evolution towards ultimately the potential for central banks to issue their own digital currency.
What does this do to the dollar longer term? Because we've seen some of those debates emerge as well.
Yeah, that's a really important question, and this is one of the reasons that I don't believe this is going away. Is because, as you know, and as all of your viewers are aware, the U.S. dollar is essentially the reserve currency for the world, and I believe that that the U.S. government actually wants to continue to see the U.S. dollar thrive. And as the entire world goes digital, it's a very important question. There are a lot of things to work out. I know the Federal Reserve, the U.S. Treasury, other agencies have been looking at this. We've been involved in many conversations in this regard as well. And many people view it as inevitable. But how that ultimately looks, I think, is still yet to be determined.
Alan, the two other news points this week that have gotten lots of attention. One is the IRS asking Congress for oversight authority. Has that, you think, been effectively priced in? And the other is that now we know the FBI can break into bad guys' wallets. Does that remove an argument that it can be used for bad actors?
Yeah, hi, Carl. I'm glad you asked that question, because on the second part of your question first, we've been saying for years that if a criminal is going to use Bitcoin or another digital currency that is on an open, permissionless, but yet a very transparent public blockchain, that it is much easier to track that that criminal activity, to track the funds that have been used to support that criminal activity. And so this was not a surprise to us at all. In fact, as soon as the Colonial Pipeline news started to break, I was actually speaking with others, in my circle, and I was saying, well, it'll be interesting to see how quickly the federal government can actually track this payment and see if there's a way to get the funds back. And importantly, and I think you understand this, Carl, but the Bitcoin protocol was not hacked. The Bitcoin protocol, that is still safe and secure. But importantly, the transparency of the protocol allows for for law enforcement to actually track these types of payments. I know that's not really popular in the libertarian side of the Bitcoin community, but certainly for us at Silvergate, as a regulated financial institution, we fully cooperate with all law enforcement and all regulators to make sure that we are keeping bad actors out. So, and then as far as the IRS question goes, once again, this has been something that I think has been looked at for quite some time. There was news several years ago about the IRS trying to understand how folks were using Bitcoin and other digital currencies, and so this also was not really news.
Yeah, and of course we'll continue to monitor the regulatory landscape, the discussion we're getting, something I suspect you have some key insights on, given the fact that Silvergate is a regulated financial entity. Alan, thanks for joining us today. Great to speak with you.
Thanks, Morgan. Great to be here.
As we head to break, there's a look at the stock price of Lordstown Motors. As you see, it is down almost 14%. The company's saying there's substantial doubt about its ability to continue as a going concern. It needs to raise more money if it's going to actually be able to fund the commercial production of what you're looking at right there. They're not going to hit the road anytime soon. So, yeah, ride's the symbol, but don't expect to take one anytime soon in a Lordstown vehicle. Stock down 50% year to date. We'll be right back.
This is the latest on SPAC news. Southeast Asia's Grab sees $40 billion SPAC merger delayed to Q4. This is, I believe, ticker symbol AGC. Ticker symbol AGC, Grab. So this is delayed. The merger is not going to happen until Q4. So we're seeing a lot of SPACs being delayed here. So let's see what else we have here on the latest. We see Kern, ticker symbol KERN, with some bull flow here on the options side. We see TM, ticker symbol TME. We see some October bullish flow on TME. So we take a look at the 1 minute here on Wish. Massive gap up. Gap filling here. Going below yesterday's close with a fake out. And now it's coming back. It's at $12. And currently trading at close to the 10-day moving average at $12. This would have been an amazing day trade here on shares. Around $10.50. That's a $2 move practically. That would have been a great day trade there.
One of the FANG stocks has quietly broken out to a new record high, but will the rest of them follow? We break it down on tradingnation.cnbc.com. More Squawk in the Street coming up.
And for that, we will turn to Ilan Mui. Hi, Ilan.
Hi, Morgan. Well, President Biden has just issued an executive order revoking the actions of former President Trump that were targeted at TikTok and at WeChat. However, Biden issued his own set of executive actions aimed at preventing foreign adversaries from accessing proprietary U.S. business data or Americans' personal data. Now, the executive order directs the Commerce Department to evaluate transactions that involve software applications that are owned, controlled, or managed by persons that support foreign adversary military or intelligence activities, or that are involved in malicious cyber activities. Now, the Department of Commerce will issue a series of reports in the upcoming months to recommend further legislative or executive actions, but this order does call out China in particular as not sharing America's democratic values and as engaging in unacceptable national security risks while advancing authoritarian controls and interests. So again, President Biden revoking those actions against TikTok and WeChat, but also calling for the Commerce Department to conduct its own reviews of software controlled by foreign adversaries. Guys.
Between that and the Senate, it's been an eventful 24 hours regarding China. Elon, thank you. Meantime, Apple continues this week their Worldwide Developers Conference, showcasing new products and upgrades to many of its operating systems. Joining us is Rod Hall today. Goldman Sachs Apple analyst has a neutral rating on the stock. Rod, welcome back. It's great to see you again.
Hey, Carl. Yeah, it's been a while. Nice to see you.
I was just going to say, is this the first time we've had a chance to talk to you since you removed the sell, which we all know you were pretty resolute about for quite a while?
Yeah, it has since April last year. That's when we moved to Selman. As you know, we recently upgraded to neutral.
What drove that move, and do you feel good about it so far?
The move up, yeah. What drove it is Apple reporting excellent numbers. We'd kind of highlighted all through the sell rating that we thought if Apple was going to beat consensus, particularly year forward consensus, we would upgrade the stock, be less negative on it. And sure enough, they did. As you know, the March quarter numbers were pretty much a blowout. So we thought, it's best to take a step back here. We still kind of have this same long-term view of Apple that they're going to struggle to grow. We think that the company, not because their products are bad. I mean, you see in the Worldwide Developer Conference this week, a lot of great products being rolled out, a lot of great platform features, let's put it that way. So nothing wrong with that. It's just that the company has penetrated this high end of the consumer base globally, and it's just tough to grow from where they are today, we believe. So, right. That's why we have this more cautious view of Apple long term, but you need a catalyst for that cautious view. And back in April, we thought COVID would be it. We thought the low end of the economy, the services workers being so decimated by these lockdowns would impact the higher end of the economy. And now we all know that didn't happen. So we get things wrong once in a while, and we took our lumps on that one.
Yeah, you believe me, you're not the first in the history of the street to do so. So now, Are we in a period, have we graduated to a moment where it is still about phone production, the way we think of Apple classically, or are there other catalysts, do you think, that could act as a moment for the stock? Because services and the store are much different than they have been in years past.
The way we think about Apple is revenue per user. So we don't think necessarily just about the phones. We think about how much revenue Apple generates per user in the user base. And what we see is the user base isn't growing much. It's maybe growing close to GDP sort of growth rates because you've penetrated, like I say, you've penetrated all the wealthier people in the world, the higher socioeconomic cohorts. And then if you look at the revenue per user, that's been static the last few years. Now, it probably during COVID, we suspect it bumped up. As we all know, everybody was home buying laptops and, services and so on, downloading apps. But we believe that overall trend for that revenue per user has been pretty flat. And as a result, we think Apple's struggling to grow. It's just, you've penetrated all the people you can. And those people aren't spending in aggregate more money on the platform over time.
Yeah, and Rod, you're not alone in that view. And by the way, it's been a proper one, at least so far this year, given the performance of the stock. I wonder, is this new, not focus, but even stressing more of the privacy issue, do you think it's got some marketing muscle for them in terms of finding perhaps some new users?
Yeah, I think marketing privacy and Apple's a great privacy company. You know, if you want to protect your privacy, there's no better platform to put all of your information on. This company, I think, absolutely wants to make sure your privacy is protected. They taking steps that you know, we don't see any other platform taking. So yeah, to market that, to get people to pay something for it, I think is important for the company. What we see here with iCloud Plus and these privacy features they've rolled out is you're really not paying more. So I already take you know, I pay for iCloud storage, and in fact, I pay for the whole bundle. But so I get all those privacy features already. My price hasn't gone up, but I think what they're trying to do is to get more people in the platform to actively pay for services. And we would estimate maybe only 20-25% of the people, you know, the installed base users are actually paying for services outside of Apple Card. You know, we think Apple Card, there's better penetration, but if you look at music and TV Plus and the bundles and so on, you're probably, you know, sub 25%.
Yeah. Meantime, Rod, China, I mean, obviously key market for Apple. We have a new administration in place that continues to be hawkish on that country, especially when you talk about the trade dynamics or the national security dynamics. Meantime, you've got this U.S. Innovation and Competition Act that has just, this $250 billion tech-focused bill that has just made its way through the Senate that is focused on investing in new technologies and semiconductor manufacturing as well to counter China. What are the opportunities there in terms of your coverage universe and the different names that you follow so closely?
Oh, okay. Yeah. You know, in terms of semiconductor production, I guess the only company we cover is Qualcomm. They outsource all their semiconductor production. So having some onshore production is quite important for a lot of our companies. That production would likely be more expensive. So, you know, if the companies weren't going to see an increase in their underlying cost to produce these products like the iPhones or, you know, modems for iPhones in the case of Qualcomm, you would need to see probably some kind of subsidy, something like that to, you know, help keep that cost down if you were to move production onshore. You know, Apple, I think their value system is, you know, makes the company, and they've made some indications this way publicly, they'd like to move more out of China, or at least have a more balanced position from a production point of view globally. But it's just really tough to get out of China given the volumes they do. These are insane volumes they produce on the iPhone. Only Foxconn is able to assemble that many iPhones in the short period of time that it needs to be done. And, you know, then you've got all the supply chain behind that. So it's tough to get out of China. But I mean, I think it's good for our companies to see some diversity of production. We've seen what, you know, how much risk there is with COVID and so on. So it's nice to see some global diversity coming in.
Yeah, no, other countries, it's hard to match the workforce, the distribution channels. It is a tough puzzle to solve, Rod, as you point out. It's great to have you back. I look forward to next time. Thank you.
Yeah, great. Thanks for having me.
Rod Hall of Goldman. Coming up on Tech Check, an exclusive with the CEO of UiPath on the company's first earnings results since going public. That starts in a few minutes as we are in the narrowest trading range for the S&P of the year so far.
All right, we have some SPAC news, guys. We have some SPAC news. This was just out recently, yesterday. So Ford-backed Solid Powers said in talks with decarbonization SPAC. So blank check firm raising funds for deal with battery maker. Solid Power is a company, a maker of solid-state batteries that counts Ford and BMW AG amongst its investors, is in talks to go public through a merger with Decarbonizations Plus Acquisition Corp. So the ticker symbol for that is DR. Let me pull it up. That's DCRC. DCRC. So potential here for a new power play for the SPAC here, backed by both Ford and BMW. Big names there. we see the momentum here dying on some of these tickers, and we saw a massive pullback and some consolidation at this moment. So Clover Health, massive gains here, giving up, almost hitting 29. Clover Health now at 20. Big move to the downside here.
See big moves. We're just getting a check on some of those names. Clover Health right now is currently down about 6.5%. GameStop is up about 2.5%. Wendy's, AMC, BlackBerry, all under pressure. But first, June is Pride Month. All month long, we'll be spotlighting CNBC contributors, business leaders, and our own CNBC anchors and producers. Here is New York Times columnist Jim Stewart.
I grew up in the 1950s, and being gay, A, didn't exist, or B, was a sin and a crime. I figured the only way to get ahead, even to survive, was to learn more, work harder, try to be better than everyone else. It forced me to be very competitive. I didn't think that was fair, but it is something that has guided me throughout my life and has turned out to be a great advantage.
So, what's your plan for retirement? See the world? See the grandkids? Keep doing what you love? However you plan to retire, you need to be prepared. Do you have a financial plan? Do you have a tax strategy? How much of your portfolio can you afford to withdraw? Learn more about these.
So here are the latest. We see VAC. This was the one that was part of the latest collapse on VIAC. VAC. We see massive calls, put to call ratio, bullish sentiment on VIAC. We also see buyers active for 4 straight sessions on ticker symbol SDC. Let's take a look at that, SDC. So we're seeing bullish activity on ticker symbol SDC here. SDC currently trading around $10. This is Smile Direct Club. So we're seeing a lot of bullish sentiment on Smile Direct Club. Let's take a look at some of the other ticker symbols with bullish flow here. We're seeing VIP Shop Holdings. We're seeing some bullish flow on VIP Shop's holding, and VIAC, VIAC. VIAC 42 trading at 42.30. It's currently right now at has great put to call ratio, bullish sentiment. We have about 7,000 puts in comparison to 44,000 calls. So a lot of bullish sentiment here on VIAC. And as you can see, it hit highs of around $102, now trading under a 50% discount. So huge potential here for a longer term play.
Federal authorities launching an investigation into the release of billionaire tax information. This following, of course, that ProPublica report from yesterday. Robert Frank has that sort of second-day lead for us on that story. Robert.
Yeah, David, leaking tax information is in fact a crime, since under federal law, tax returns are confidential. IRS Chief Charles Rettig testifying yesterday before the Senate saying, quote, "I share concerns of every American for the sensitive and private nature and confidential nature of the information the IRS receives." The investigation has been referred to the Treasury Inspector General, the IRS Inspector General, and the FBI. The IRS has systems for detecting unauthorized employee access for taxpayer information, and it has fired employees in the past for violating that policy. An IRS Inspector General's report found that some of those employees had been rehired, and the system for protecting all of this data needs to be improved. ProPublica is saying it doesn't know who the anonymous source was for this material on thousands of wealthy taxpayers. The material may have come from a hack of the IRS, but many Republicans now calling it an abuse of power and pushing back on Biden's plan to better fund the IRS.
We are fractionally higher. The S&P is up 0.1% in very narrow trading range. Keep in mind, though, we are in striking distance of a new all-time high for that average. That's going to do it for Squawk in the Street. Tech Check starts now.
Happy Wednesday. Welcome to Tech Check. I am John Fort with Carl Quintanilla and Deirdre Bosa. And today, making sense of Chamath's Lucky Clover, a breakdown of surges and personalities leading the SPAC charge. Then, barely legal tender. Bitcoin's risky, but it's also official. We have the company helping El Salvador make crypto official currency. And later, we're live in Texas at GameStop's annual shareholder meeting. Carl?
Hey, John, also ahead this hour, the street starting to make some calls on big meme names like Coinbase, even Wendy's today, plus the CEO of UiPath as that company reports its first earnings D since going public.
Looking forward to that interview. But, guys, we start with Chamath Palihapitiya and his SPACs. Are they back? Clover Health climbed 86% yesterday. Volatile again today, down about 4%. Thanks to the surge, Palihapitiya's initial $16 million investment in the SPAC was worth $682 million as of the close. Now, amid these types of rallies, companies like AMC and GameStop have raised new capital from their shareholder base. Benchmark partner Bill Gurley, yesterday he told us that this was ingenious. Have a listen.
They're actually, I think, quite ingenious from a capital formation and capital raising standpoint. Once you've scared the shorts out of the market, you don't really have anything to balance supply and demand if you just have overt hodl-based, demand for the stock. These two companies at the top of your list probably would have been bankrupt, and they're not going to be anymore. And so these movements are having real impact on our world.
So, do you follow the CEOs raising money at the peak and believe that they can ultimately transform their businesses, or do you follow Chamath? And guys, there's a key difference between Chamath Palihapitiya and at least some of the Reddit crowd. He sells, they hodl. Remember, he wants a SPAC for every letter of the alphabet. There's got to be money to come in to pay for that. And Clover, we just mentioned it. That's a return of, 4,000% on paper at least. We know what he did with Virgin Galactic to meet some what he called liquidity requirements. What's going to stop him from doing that with Clover? And also, John, maybe there's nothing wrong with that, but what do you do as a Reddit investor? Do you hodl, or do you perhaps watch what Palihapitiya is doing, not necessarily what he says?
I don't get this whole hodling thing. Like, I know what it means. Hold on for dear life. And the idea that you get sort of religious or attached to a certain asset. But the market is, right? It's a market. People trade. You sell when it's gotten to a certain point where you've decided it's a good point to sell. You buy when it's low enough and you think it's a good deal. Say what you will about Chamath. The man knows how to make money, right? So if you're able to watch what he does and you do what he does, you make money. And, like Bill Gurley was saying yesterday, if
you can
investors,
time it, that's hard to do.
Exactly. I mean, but he seems to be doing pretty darn well at it for a long time. So, I mean, if you're a company and retail investors or retail traders want to give you free money and they hold their hand out with that stack of money in it long enough, you take it. That's what you do. If you need, Carl, right? If you need money, you take it and you use it to build a business. That's what CEOs are supposed to do.
It's generally how it works. I also think, Dee, it's kind of interesting. We had a wave of meme activity in February when, like today, you were not in earnings season. You were sort of watching the macro, which continues to be not conclusive. And as a result, we talked to Kramer this morning about whether or not we're in this sort of redux because we're looking for things to keep us entertained and keep us busy. And that's certainly what Ken Moelis said yesterday when he argued that most of these meme traders are simply trying to have a good time.
Yeah, I mean, who would have thought a few months ago that we would be back in this position? I guess the hodlers would have said that we would have been, but it's sort of confounding a lot of experts, especially on Wall Street. And, you know, our next guest actually sees Clover as the next GameStop or AMC. Maybe it's already there, but will it raise money? Sees these moves as a widely distributed short squeeze. Joining us now, DPCM Capital Chairman and CEO and former Uber Chief Business Officer Emil Michael. Michael announcing a SPAC deal of his own last month, merging DPCM with mobile gaming company Jam City. Emil, good morning to you. And just this conversation, I'm sure you've been listening to it. This has lasted longer than many have thought, though perhaps not the Reddit crowd. Has this sort of meme stock phenomena lasted longer than you thought?
Yeah, absolutely. And in some ways it started with Hertz. If you remember what happened to Hertz a while back, everyone thought they were going to go bankrupt, and then they raised money. It was a lot of small retail investors who held on, and that stock at 30 cents is now $6, and it made a lot of money. So this has continued along, and I don't see how it stops if they keep making money.
Now, you also call this a distributed short squeeze, but how do we know that it's retail Reddit investors doing, the buying, and that institutions aren't getting in on this, driving some of the momentum too, as a way to partake in these gains that we're seeing?
Yeah, so I called it a distributed short squeeze, or you could even call it a crowd-funded short squeeze, where in the old days you had a bunch of firms that were institutions that would sort of go and squeeze someone who was short in a stock, another institution. Now you have this widely distributed set of individual investors who are pooling their money together using some of these social media platforms to push the meme out there. And then they're doing this squeeze. There might also be institutions riding behind that because, that would be smart money following, a momentum trade. So it's really all of the above. But I don't think institutions would be doing this in the same way that the individuals have been able to do that, because they're not on the social channels in the same way that the Wall Street bets crowd is.
Although that seems to be up for some debate. Goldman tries today to look at various episodes, AMC, for example, and they say that small lot trading declines prior to the peak in share price. The implication, Goldman says, is that it's larger traders that are driving the price moves prior to and following the peak in the episodes we analyzed. Is it possible maybe that the big guys are better at this than we think?
It's definitely possible that they're better at this than we think. So one could argue that it was invented by the Wall Street bets crowd, and then the institutions came in and saw an opportunity to make this phenomenon even more intense, and they made more money on the side. But my understanding of yesterday in Clover Health, it was $500 some odd million lost by institutional short sellers as well.
Emil, we're getting some headlines this morning from the Biden administration regarding
Not sure what happened there, guys. Huh. Let's see. I'm going to try to refresh that feed there. It just stopped working. Let me refresh this. Talking about Clover and the institutions. Huh. There goes the news. Let's take a look here. Let me reset this. Regardless, big move here on Wish. We're back to yesterday's close. We're around $12 here. Here we go. Should be loading shortly.
Data or other data that they have, which might make it more palatable to the U.S. government from a security standpoint.
Is that good enough, Emil? Does that confront some of the security concerns? Because yes, you're right, there is an important distinction between shutting it down and therefore cutting off any access versus do we trust the Chinese to make sure that they're going to keep that data separate, not tap into it at any point?
I mean, if we have to be able to trust it in some way, or we're going to walk into a balkanized internet, the Chinese internet, maybe the Eastern world uses that.
It's already balkanized.
It's balkanized.
China bans a number of our biggest apps.
They sure did. And I remember when I was at Uber trying to make sure our app didn't get banned in China and we got kicked off the WeChat platform and so on. So it has been a one-way street. So I do think it's a little more balance that the Biden administration is trying to add, but they're trying to do it maybe in a more surgical way by making it about the data, not about the banning of apps completely. Like Google cannot be used in China. Facebook cannot be used in China, but if TikTok can be used in the US, but the data is segregated, maybe that's the better answer. I don't know.
Yeah, I mean, some are also asking, where is the line as to our willingness to tolerate supposed surveillance by Chinese authorities? For example, we had some fund managers this morning asking, well, what about Zoom? Are we done having a discussion about what their practices are?
No, we're not. I mean, when you have power grids that could be infiltrated, I could guarantee you that phones are being sort of monitored, app usage being monitored. It's not unique to Chinese apps or Chinese companies. I think you have a sort of cyber Cold War going on, or maybe even a cyber hot war across the board with Russia, China, and the US right now. So there's lots of dimensions to this, and it's not over.
Emil, you mentioned Uber, which you helped build, and as many have noted, maybe.
So we're seeing some trending here for a ticker symbol AEMD, Athlon Medical. So I'm reading the article why this stock is running. So this stock has quadrupled on some positive news on some COVID-related purifier through emergency use. So they saw some positive, this biotech company saw some positive results on some trial of some of their hemo purifiers. So positive news on COVID related news on this stock, and it's up more than 4 times from trading around $2 to around $11 right now.
Probably wouldn't exist without Apple's App Store, but Uber also never had to pay that 30% commission. What do you make of all the developer backlash against the App Store and support as well? Where do you fall?
Living in free markets, I generally say, like, okay, eventually there's going to be some other competition. In this particular case, though, between the Android system and Apple's iOS system, that's 98% of all smartphones in the US. So you have 2 choices for App Store, and that's it. In China, they actually forced Android to allow more app stores. You have 3 Android app stores, and they compete with each other based on quality and security and price and all that. So what I think you might see, this is just a prediction, more regulatory regimes like the EU forcing Apple to do things like open up their platform in certain ways or allow more app stores on their phones. But I think this 30% tax, where it's 98% of people have to pay it, is probably not going to last forever.
Emil Michael, thank you for joining us this morning.
Thanks for having me.
And we mentioned GameStop earlier. It reports earnings and hosts its annual shareholder meeting today with Ryan Cohen expected to be voted in as chairman. That's a big step for the company. Our Kate Rooney has more on that. Kate?
Hey, John. Good morning. A board overhaul going on at Reddit favorite GameStop today. The big vote on the table, whether or not to make Ryan Cohen officially chairman of the board. And there is not a lot of pushback expected in Grapevine, Texas today, where that meeting is happening. Take a look at that live shot that's expected to start shortly. Ryan Cohen is not expected to be there in person, but he really has become the face of this company, despite him controlling just about 12% of GameStop. Most of the old board, meanwhile, has stepped aside. 3 new nominees have ties to Cohen from Chewy, which he sold to PetSmart in 2017. Quarterly results also come in later today for GameStop, which have drawn a lot of attention from Reddit and that crowd, despite no one really looking at the numbers. Analysts tell me the quarter doesn't mean much for the stock price. Shares have far outpaced the fundamentals since January. They're up more than 1,400% since then, and investors have been way more focused on future quarters. That future includes a new CEO. Current chief executive George Sherman announced he was stepping down by the end of July, and the company has not said much on this apparent tech-driven strategy. Any details or even a cryptic tweet by Ryan Cohen could fuel more optimism on Reddit. Guys, back to you.
They love Ryan Cohen's cryptic tweets. Hey, thanks. Well, we've got Instagram news. We've got the company behind El Salvador's move to Bitcoin and the other meme stocks we found on Discord. A big hour of tech check, just getting started.
Tech check.
So let's take a run on some of these stocks. Let's see what's going on here. Let's look at the daily chart here, and let's look at some of the main stocks I have here. So the VIX here at 1695. Let's look at what the Qs are doing in the S&P 500. Qs sideways here. Very small candle there. Not much activity. Let's look at the S&P 500. S&P 500 breaking new highs and then pulling back. So S&P 500's pretty up there. Has me a little concerned. Tomorrow's CPI numbers are coming out, and S&P 500's all-time highs, which in a sense kind of has plenty of room to go down if some negative news comes. So a little concerning there. And let's keep going here. SoFi, big rally here recently. Pulled back in the morning, gapped up, pulled back, and now is trying to recoup here. SoFi at 23. It was around 20 earlier, I believe. Let me see here the 5-minute chart. So, oh no, I was confusing it with another stock. So it gapped up, it rallied up, and then now it's at 23.60.
Back to a hold, or should that be a huddle? That is actually the catalyst behind that call. Stifel says the current price is out of whack with its valuation. Shares of Wendy's today down 10%, Carl.
Meantime, Dee, the Senate passes this $250 billion bill aimed at boosting tech investment in the U.S. to combat Chinese advancement. The bill, originally named the Endless Frontier Act, dedicates $81 billion to the National Science Foundation through 2026, includes a new directorate focused on AI, robotics, semiconductor research. The bill would also provide $52 billion to semiconductor companies to help address what we know is now a global chip shortage. The bill sponsors hope the bill will help U.S. companies compete on the global stage, as VC investment in U.S. companies has dropped more than 30% since 2004. We'll see what happens in the House, John, but between the TikTok EO we just talked about, between the trade agreements we might get between the U.S. and the EU in the coming days, we're turning up the volume on China.
Yeah, I mean, it's not every day you see something passing in the Senate 68-32. I mean, does that even happen anymore? And, the House seems to be indicating that they're going to get something done here. I've been watching Intel, which I think of as one of the potential beneficiaries here. We've had Pat Gelsinger on Tech Check a couple of times now, Dee, talking about his plans for manufacturing. He's hoping to get a good chunk of that money to help build these fabs and these foundries that are going to help reinvigorate and reinvent Intel.
Yeah. And that sort of plays into his argument that chips are a national security issue as well. We know that China has had this plan to boost its tech companies for years. They're trying to make chips that are as advanced as ours. And Carl, it used to be thought that Chinese companies were simply copycatting U.S. companies, but I think in a number of ways, there actually could be surpassing U.S. companies. We talk about the rise of the super app. We still don't really have one that compares with a WeChat from Tencent. So interesting to see lawmakers taking this threat seriously.
Yeah, I mean, you look at the list of top-loaded apps, month after month, TikTok is definitely at the top and has been for a very long time. Meantime, shares of UiPath falling this morning despite a beat in its first earnings report since going public back in April. Joining us once again is UiPath founder and CEO Daniel Dines. Daniel, welcome back. Congratulations on the first print.
Thank you for having me.
You guide above. You have a metric about the revenue renewal rate up 64. Has there been a tailwind, do you think, even since you announced that you would be going public a few months ago?
Yes, absolutely. We are attaching to a very important secular trend, which is automating the business processes. And in order for an enterprise to achieve the full benefits, we need to have access to the C-level suite. We need the strong sponsor among the executives. And I'd say that the IPO tailwinds mostly happen in our high-level discussions that we are having right now.
You know, we just had a discussion about the ongoing race between very large companies, in fact, the two largest economies in the world, the U.S. and China, trying to outdo each other and out-innovate the other on AI and semiconductors and robotics, too. I wonder, can you describe the degree to which and how the company is riding that tailwind?
Well, I really believe that automation is the type of technology that unlock human potential and will allow our customers to deploy this potential to innovation versus like day-to-day operations. And we all know, and the latest Senate move into the space shows how important the innovation is in the grand scheme of things.
Daniel, there's a lot of focus on your annualized recurring revenue. Your guide is strong overall for Q2. It's 55% growth at the midpoint. Some people concerned that that's a deceleration. But can you put some color behind that? During the pandemic and now hopefully coming out of it, what sort of demand are you seeing from automation in manufacturing and beyond? And how is that translating into your guidance on ARR?
Well, pandemic last year was for us net neutral in the sense that we have seen larger investments from healthcare and maybe more reduced investments from the retail sector and so on. Right now, we are seeing an acceleration across all the industries. We are really bullish on our second half of the year. And we are the undisputed leader in this burgeoning space. And the IPO, and I think this quarter is only increasing our market share.
And so then how should investors expect you to strategically respond to this acceleration? Are you going to ramp up spending on sales and marketing to keep that going? Are you going to lean into M&A?
We are doing a bit of all of this, but first of all, we are really increasing our spending into R&D. We are hiring all across the board. We have launched recently an array of different products, and we are also investing heavily into our partnership in order to achieve the full velocity of deployments. Our customers work with the large GSI, with our partners, and we work quite a bit to accelerate this type of deployments. And of course, that translates into major activity in our go-to-market engine.
Daniel, good morning. It's Deirdre. It's nice to see you again. I got to ask you about a topic that we have spent a lot of airtime talking about, and that is, as a newly public CEO, what do you make of the market dynamics that your company has come into, the rise of the Reddit and retail investors, especially as you lead a company with an already very large TAM, total addressable market, and one that's generating cash?
I think this is well ingrained into our culture as a company. We were able to get here by democratization of the access to technology. we've built one of the earliest low-code, no-code automation platform. And I think in the same sense, this is happening in the investor community. We really welcome retail investors. We believe that there is a lot to happen in the education, and I think the communities like Reddit can contribute quite a lot to the education of investors. In the same time, I would like to say that we are in a long run. This is, for us, it's a marathon. And this is also part of the education of retail investors to look at the fundamentals of the companies, to the TAM, to the leadership team, to the positioning in the market. And I believe they will make way better investment decisions.
Hey, finally, Daniel, we talk a lot about the labor shortage in this country. And I wonder, can we draw a line between what's happening in the labor market and your customer base looking to buy more robotics? Or is it such a long cycle business that the current labor market dynamics really don't apply to something like that?
Well, I read recently that actually there is a shortage of skilled workers in our market. And pair this with the aging of the population, we've believed that robotics is one of the key technology that can enable our customers to tap into the market and hire better talent and give them higher level work to do, a type of jobs that are much more appropriated for humans, like creativity, like communication, like social skills. So in the end, the automation is creating a much better work environment, and I think it's gonna stimulate the job market.
You would hope that as a result, you get better job matching, and you're right about demographics. That's definitely a longer-term story for the U.S. Job market. Daniel, again, thanks so much. Great to see you.
Thank you so much.
Now we're going to hear from Instagram chief Adam Mosseri after the break. Plus, El Salvador votes to make Bitcoin legal tender. Businesses will have to accept it. We got the company helping that happen next. Tech Check is back in 3.
So latest news here, First Solar to double U.S. panel capacity with new plant. So it plans to build a new gigafactory. Company planning to build a 3.3 gigawatt factory in Ohio. Biden contemplates how to revive domestic-made solar. So let's see if it's getting some assistance here. First Solar, largest U.S. Plans to invest. That's a big investment, $680 million to expand capacity. Legislature advance. Let me see here. Let's see what the stock is doing. FSLR. First Solar here. And it's currently trading at 77.62. So just more expansion. Let's see here. Some other numbers. If you look at their income statement, they have good revenue against to net income. Cash flow. No, let's see. Balance sheet. They have total assets and total liabilities. I mean, it's a strong company, so looks good. Let's take a look at Wish. All the meme stocks, Clover Health, Wish, everyone getting completely decimated, pulling back, huge pullback right now. And this is a 5-minute chart. Let's take a look at the 1-minute chart. Wish going back down 11.38, passing down yesterday's close, and potential to go to $10. So we'll see how this stacks up in the next few hours. But all the stocks, big fake out, gap up, seemed like it was going to rally, and giving up those gains, and now everything pulling back to yesterday's open or even going slightly lower. Clover Health melted away. Looks like the gas ran out here. $10 move here from almost $30 to $29 to $18.78. Huge downside here for Clover Health. Huge downside. That's a $10 move. So Clover Health not looking good at the moment. Wendy's, same thing with Wendy's here. Huge down move. Let's take a look at the daily chart here. Since yesterday's highs of 30, now it's trading at 25. That's a minus $5 move here. AMC just dancing around the $50 price target, and it seems like it's stabilizing there at that level. GameStop going up today. It's at 314 currently. Sundial Growers is here holding at 120. Workhorse coming back down to 1610, but did go up to 19. Go EV, huge downside here. Same thing, gap up, fake out, and now we're down to $10. So it rallied up to around 12. Now we're down to around 10. That's a minus $2 move there. Huge fake out. GTT slowly giving away gains here. We see BlackBerry. Let's take a look at BlackBerry. BlackBerry, just like AMC, looks very similar. Big rally, pullback, and stabilizing. So BlackBerry looking strong along with AMC. Tilray getting the best of the action here at 22.57. Bed Bath & Beyond here at 34. Just like AMC and BlackBerry, holding at a particular range in between the highs and right before it launched of those lows. Virgin Galactic here at 36.47. Nokia here sideways at 550. Rocket Companies at 21.83, pulling back. We have Palantir still trading around between $24 to $25. Clean Energy giving up those gains. This was a short squeeze here. Clean Energy, massive move to 1450. Now it's at 1180. We have Nvidia holding here around the $700 mark, and Ride, Lordstown Motors, melting away from yesterday's highs of around $16, now down to $9.
For us, and Julia, we know they were going this route, so what was announced?
Well, look, Facebook is making a big push to draw creators to its platforms, Facebook and Instagram. And if it can help creators make money on those apps, then those creators will be more likely to stick around rather than go off to TikTok or Snap. And they can be a big driver of e-commerce. And if e-commerce happens on Facebook, then that is a valuable workaround to Apple's limits on ad targeting. So to deal with Apple's 30% fees, Facebook is now looking for workarounds for itself as well as creators. Take a listen to Mosseri.
When there are digital transactions that happen on iOS, Apple insists that they take 30% of that. There's a very few number of exceptions. So for transactions that happen directly in iOS, we're going to have to abide by their rules. It's their playground. They set the rules. We have to abide by those. But in general, we're going to look for other ways to help creators make a living and facilitate transactions that happen in other places. So for instance, if we can help brands and creators vet each other and find each other, they can make those transactions happen offline.
So as Facebook deals with the ad tracking issues as well as the 30% fees, it's really positioning itself as an ally to creators and small businesses and navigating all of that as Facebook itself looks to navigate the new limits on ad targeting and how commerce can really be a solution for that.
Right, so Facebook is looking to sort of support creators and small businesses, but where does that leave another industry that has been very good to Facebook over the years, and that is ad tech, right? Because of the privacy changes and perhaps because of what Facebook is aiming to do, they may have to rethink their business models.
Well, look, so Facebook has definitely been very vocal in its concern, voicing its concerns about these ad changes, but there is this whole separate ad tech industry. There are a number of independent ad players, such as Trade Desk, Criteo, PubMatic, Magnite, LiveRamp. These are the companies that help advertisers. We're talking about like the top 200 and 300 advertisers in the world target ads all over the web. So if you're within Facebook or Google's walled garden, you would advertise directly with them. If you're anywhere else on the web or on the mobile web, you would be going through a lot of these players. So these are, if you're getting a Procter & Gamble ad or an ad for General Motors, you might be getting an ad through one of those players. Those companies are going to have to rethink their business model, not only because of Apple's operating system change, but also because of some of the changes Apple announced on Monday about limiting tracking through email. So that's going to be something to watch. Those companies are going to have to adapt. And if they don't, we're going to see some of those advertisers shift their money elsewhere. There's been some speculation that some of the streaming ad-supported video options could benefit from these changes because they track users in different ways, and they're not as reliant on these methods that are now going to be taken away, that Apple and Google and others are going to be taking away from these ad tech companies, Deirdre.
I wonder if adopting could also lead to more consolidation in this industry. I mean, we spoke to Zynga not too long ago, which made an acquisition of an ad tech company to essentially bring their technology in-house so that they could track and have access to more first-party data. Do you think that we'll see more of those kinds of deals?
I think overall, first-party data is going to be the thing that's in focus. Brands want to have specific data on who their consumers are. They want to build that direct relationship. And I think that's also why there's been so much interest in this email marketing issue, because brands want to be able to send you an email, know if you opened it or not. And Apple's going to be putting limits on that as well. But I think to your point about games and the game ad networks, there are a couple of these companies. Unity is one of them, and they specialize in in-app, in-game ads. And I think we are going to see them try to create that direct relationship with consumer to circumvent some of these new restrictions that both Apple and Google are putting on that dynamic. Deirdre.
Yeah, fascinating conversation. And as I look at one of the biggest ad tech players, Trade Desk, which you mentioned, down 26% year to date. So clearly there's someone who is getting hurt by the changes. Thanks, Julia.
Meanwhile, watch Target this morning. Earlier on, hit an all-time high again. A div hike of 32%, 90 cents a share now to be paid on September 10. This year will be the 50th consecutive year that Target has established a div hike. A lot more Tech Check is straight ahead. Stay with us.
Wondering why.
So this is the latest in Lordstown Motors, ticker symbol RIDE. So it looks like they're burning out of cash. Lordstown Motors cash crisis eclipses recent meme stock status. Negative news, bringing truck to market and business survival now in question. Market cap has plunged by more than half in 4 months. So Lordstown Motors getting some negative news. They're burning through cash like crazy. They're having difficulties producing their vehicles. And it's seen one of the biggest declines of the stock's history. So this is negative news. Lordstown Motors not looking good.
She don't care.
A lot of the inflation noise that we hear in the market is partly base effects and things opening up anyway, because demand was so subdued over last year due to the restrictions, and a lot of the economy is opening up, which means higher demand for cotton, as you said, and even labor is an interesting point, because in general, we do see, on one hand, we see unemployment still pretty high at high levels, and the prospect of some of the furlough schemes and state support programs coming to an end. But equally, there is significant demand for labor on reopening. So there are these multiple trends at play. But I think what we do feel is these retailers, and ones we've talked about, have managed sufficient balance sheet flexibility, both from a balance sheet perspective and also from an operating standpoint. they've really cleaned up their house, if you like, including investing significantly in e-commerce, which will still be a big growth driver for much of the sector.
All right, who's best positioned?
Well, it's obviously difficult to pick out specific names, but you see Next as a company in the UK, even though Next is not as geographically diversified as Inditex or H&M, but they have invested significantly in e-commerce over the last few years, and they're already seeing the payback with online sales touching more than 50% for them.
All right, Ram, thanks a lot. Really, really appreciate the time. Ron Rotman of S&P Global Ratings. Thank you very much. All right, let's check into where we're settling out here. Like I said, we closed off the session lows for most of the major indices. European stocks sort of dead flat there. The FTSE finishing a little down by about 0.2%, despite the fact that you have a lower cable rate. The CAC, as I mentioned, also up by 0.2%, helped by Brent around 70, helped by Total. All right, coming up, we're watching for the downside. Several strategists are now saying Bitcoin could plunge to 20,000. We're going to do more on that next. This is Bloomberg.
Custodian, you are at the beholden of that custodian, whether that's Coinbase, whether that's a government, whether that's Chase Bank, whether that's Fidelity. The power of Bitcoin is you can custody your own assets and you can remain interoperable with the network yourself if you want. And El Salvador embraces that. Of course, the government needs to be interoperable with the monetary network that they're supportive of, and we're going to help them with that. But anyone can do whatever they want, and that's a huge property and power of Bitcoin and why this is such a huge moment for humanity.
Okay. Now, Jack, let's talk about Strike for a moment. You operate on the Lightning Network. You were part of what allowed the NFL's Russell Okung to take his salary in Bitcoin. Why is this an important moment, and where do you hope this goes next?
Yeah, so at Strike, we think that the Bitcoin network and Bitcoin asset, it's the most powerful monetary network of all time and the most impressive asset in human history. And so we, as a company, have a mission to secure financial freedom for all. And we do that by making this monetary network easily accessible and usable to everyone on the planet. And so that's our mission. And whether you're an NFL player, whether you're a rap artist, whether you're a barista, whether you sell pupusas, whether you're the president of a country, I am here. I will die on this hill, and I'm very supportive of what Bitcoin stands for and moving it forward.
Hey, Jack, you know, people who are watching the evolution of Bitcoin or crypto in general as a payment mechanism ask, okay, how are you going to order a pizza when you don't know whether or not the payment is going to have a drop of 30% in value before the pizza gets to your door? Is El Salvador going to explain? Is going to be a decent case study to explain how that gets smoothed out?
Yeah, so here's the deal. It's not mandated that you hold Bitcoin. There's security concerns. There's how you're going to custody it. There's exposure to volatility as it's traded in a free market environment. What the government is encouraging is interoperability with the open monetary network. And so what we've done at Strike, and this is a product that exists today and it's widely used and very popular, is we allow dollars, like a traditional US bank account, to be interoperable with this open monetary network. And so you can send and make Bitcoin payments with dollars and receive Bitcoin payments as dollars. And so you're not exposed to tax consequences, volatility, security risks. You don't have to be a cryptographer to do that. I do that for you. And so the government is going to take advantage of this infrastructure we've built, and all of those problems are solved.
Right, but Jack, there could be impact beyond just Bitcoin. I mean, it's a progressive move. I want to get back to El Salvador, but analysts have also said that this move could complicate talks with the IMF. El Salvador is seeking a more than $1 billion program. So what do you make? Why is it worth that kind of risk or trade-off potentially?
I'm not sure you're calculating the trade-off and the risk accurately and appropriately. The monetary expansion that's happening at central banks right now is extraordinarily concerned to a country like El Salvador. And so I would ask you the question back, how do you calculate that risk? What would be more surprising to me is if countries did nothing. And if they have to do something, this is what makes the most sense. Bitcoin is engineered to solve this exact problem. And so this is the most logical step forward for El Salvador and for humanity.
And Jack, finally, when it comes to the complexities of the rule of law across borders, how much is Strike going to cooperate with governments when it comes to requests for information about how things are flowing? I can imagine issues with things like sanctions that could come up between governments. What do you view as your role and responsibility there?
My role and responsibility is to be a Bitcoiner and to help the world with what I believe is one of the best tools humanity's delivered in pushing the world forward. And so, yes, we want to remain compliant. We have no intention of making any enemies. We're a regulated entity and a regulated company. But yeah, of course, there are countries out there that need help, that need our infrastructure. And we're talking to a lot of countries, a lot of entities, and our wait list now of infrastructure has probably exceeded 50 million with all the countries combined. And I'm tremendously excited to get to work and to rebuild what I consider a pretty damaged and broken financial infrastructure.
A lot of people would agree with you there, and we hope to have you back as this develops and as you do more deals and get more partners. Jack Mallers, The Strike. Thank you.
Thank you. Have a good day.
Checking in on the most active stocks on the NASDAQ today. What else? Meme stocks taking top spots yet again. We will have more on that story later this hour. Plus, watch Coinbase. Ray J calls it a sell this morning, says more competition in the space will be bad for the stock. Shares are down almost 50% since those IPO highs. And for more on that story, head to cnbc.com/pro. We're back in just 2 minutes.
Wondering what actually goes into your multivitamin? At New Chapter, it's
Hey, Brad, if you're still in the chat, if you're still here watching the stream, in the short term, it's very difficult. I'm very bullish on Wish long term. And I've been trading and buying it as it's gone down. So I've been trying to nail the bottom, and I actually did this time. So I continue to put like big positions on it to get it a good entry. So when it rallies, like it rallied now, basically I just hold for the longer term. I think the stock by the end of the year easily, even if this momentum dies, will be over $20. I'm looking to cash out my options around $25, $30, even if the momentum dies. But in the short term, the problem is there's these big swings, just like today. Look at this. It went up to nearly $15. It's at $11 right now. And if you have short-dated options and they expire this week and, and right now you're under, it's going to be tough because these swings are massive. I don't know if you have shares or if you have a lot of your buying power locked up. So that's what makes it difficult. I recommend swing trading this. Not an advisor or anything. So, I shouldn't be giving recommendations, but me personally, I'm holding this until the end of the year. I'm looking to cash these options somewhere above $20, $25. If it hits 20 by the end of next week, I'll probably sell because that's a huge, massive move. This is a massive move already. It's probably up since yesterday or the day before. Yeah, it basically doubled already in 2 days. So, 15 was a good price target to lock in profits. But I was looking for some bigger gains. Oh, I see. You're short. I see. You're at 618. Yeah, that's a little tough. Maybe just hold off right now. The good thing is there's a lot of momentum. So if the momentum holds on Wish, and a lot of institutions own Wish, and they have good like fundamentals, if that even matters though. So it's I don't see this necessarily as being like a big meme stock like all the other ones, but there is a lot of momentum and money to be made there. If it breaks down under $10, I would be concerned. Yeah, you definitely want to see. I don't know if you're up or down right now, but maybe we see some momentum coming in here in the next, for the rest of the week in the next 2-3 days. I wouldn't feel comfortable holding those until next week unless it's like a small amount in comparison to your account. Like if that's not a lot of money and you could afford to lose it, that's on you, on your risk tolerance. But I personally wouldn't want to hold those. And if if Wish goes underneath $10, I wouldn't like that. It's right now at 10.90, because usually like round numbers are psychologically good psychological price targets where people lock in profits or buy in for support. So, for Wish, in Wish case, $10 was a line of resistance. $15, it's a line of resistance. $20, it's a line of resistance. And Wish plowed through the $10 mark and went to 15, and now we're seeing 15 being the line of resistance in the short term. So you just want to see it holding right now above $10. If it goes below $10, I wouldn't be too optimistic about the stock in the short term, but who knows, yeah, so that's kind of the way I'd see it. But regardless, this massive run, I see the stock being over $20 by the end of the year. But the problem with buying longer dated options is that you lock up a lot of money. And but if you believe in the stock, you lock the thing is, I believe in some of these stocks, so I am okay locking up that money, because I know over a course of a time of the lifespan, I'm gonna make money. I might not make a crazy a lot of money, but I'm gonna make some money, and I'm sometimes they move faster. And also there's consumer price index data coming out tomorrow, and I'm actually very concerned about that. So tomorrow markets could actually be very shaky. The S&P 500, let me see here. If we take a look at the daily on the current state of the market, if we look at the S&P 500, it's basically at all-time highs. And last time the CPI numbers came out last month, the markets tanked. There were very bad numbers on inflation. So it's a consumer price index. And the consumer price index numbers have been rising month over month. And right now we're at all-time highs. Consumer price index numbers come out tomorrow. So honestly, I'm concerned. And I have a lot of my account exposed right now. But I'm just riding it. I have longer dated options and longer dated plays. So it just sucks to see your account fluctuate, obviously. But overall, if you do longer term, like if you see my account right now, this is massive. I mean, I was up today about 7,000. I'm down 4,000 right now. And that's the problem with these high growth stocks. But if you look in the past week, I'm up 11,000. If you look in the past month, I'm up 26,000. But I take massive swings. I mean, it's not easy. So, yeah, I just recommendation, a little bit longer time frames are better. I don't know when you bought your contracts. I don't know if you bought them today or yesterday. But yeah, just I would like to see Wish hold above $10, and that would be a positive sign. I hope that helps something. Hey, thank you for the donation. Yeah, I hope you're out there on Wish. Thank you guys. Oh, you bought them today. Brad, if you bought them today, you probably bought them at the open. And if you bought them at the open, you bought them at all-time highs. When you're looking at some of these numbers, at round numbers, you basically bought them around $15. So it's kind of tricky. Yeah, for the info. Yeah. So, yeah, and I just showed you my account just to give you an idea of like what my account looks like. And, I hold some of these things. So, it takes a while for some of them to fruition, so it's tough. Thanks for the donation out there, guys. I really appreciate it. So, yeah, this might go down. Just give it a day or two. Clove has a lot of short interest, but it looks like right now the shorts are winning. Like, I think we spoke about Clove, and you were right on the money. I mean, Clove was at a great price the last time we talked about it. So it was trading somewhere around $7, $8. I did see it at 9. I had a lot of short interest here at this level here, and I was thinking of making a play on it, but I didn't. If we look at the dailies right now, Clover Health obviously rallied in about 2 days from $9 to $30. That's a 3x return there, and massive pullback today. So we're seeing a lot of the shorts winning today, and it's a bit tough. Let's see the short interest on Clover. I'll pull that information out right now. Let me see. Here, let me pull that up. So if we look some of the data on Clover Health, short interest is at 27%. That's pretty healthy. It has a good rating for to see return tier 5 out of 7,400. So it's a top, obviously a top stock to be looking at. And let's just look at the short interest here on Clover Health. This is the history on Clover Health. We see the short interest slightly lowering here. In the past few days, it hit a high of 32, and today it hit 32, 30 volume, short volume, ratio volume, and today it hit around 30, and we're seeing the short interest cooling off, so possibly some profit taking. If we look at the history here in the past few days here, we've seen it around 37 here. Here we go. Settlement date. So we're seeing it fluctuate here. 37. It was at 46 at one point. Oh, this is a few months ago. But now it's slightly lower. If we look at the chart. Oh, here it is. So it was short volume ratio was hanging around 30. As of yesterday, slightly lower at 26, and we're now at 27. So potential, this is a pullback, potential for more action. It's still highly shorted, but it's a bit concerning to see this move here. Yeah. You sold this morning? Awesome. Oh, you did it right. If you sold this morning, you did it absolutely right. Yeah, lock in some gains, and potentially maybe $15 is a good price target to be buying, or use this last candle here on the daily. This is around the low of this last candle is 1632. So use this low as a potential to get back in. Not heavily, obviously, just a piece, because if you do go lower, then use, if it this can potentially gap fill. So you see the support here around 16. Don't even go 15. Just use this support here. I'll draw a ray here on this chart here. It's around 1650 for potentially getting back in. Don't buy in a full position. And if it continues to go lower, then add into it somewhere around here, or somewhere around $11, $12. So yeah. If you locked in some profits, well played, my friend. We're seeing some options activity on SDC. Bullish options activity on SDC. So SDC, Smile Direct Club, right now trading at 1039. Smile Direct Club is up 9% today. So we're seeing a lot of bullish activity on Smile Direct Club here, running from a recent of around $8, now at $10.43. Smile Direct Club, potential to hit previous highs around $15. So Smile Direct Club, one to look at in the options.
That was brought in to handle this disaster after Colonial Pipeline got hacked. Blount yesterday defended his decision to shut down the pipeline, also defended his decision to pay the ransom, and he explained a little bit about what went wrong. Take a listen.
In the case of this particular legacy VPN, it did only have single-factor authentication. It was a complicated password, so I'm clear on that. It was not a Colonial 123 type password.
They also didn't have multi-factor authentication involved in this. They say it was a legacy VPN, virtual private network. The idea there is this was something that they didn't even know that they still had on their system. So that might be something that a lot of companies are dealing with.
Being exploited or at least made visible now. That's
right.
Raymond Javers. Thanks. So NASDAQ up 4 days in a row, longest streak since February, and the narrowest trading range for the S&P of the year. Let's get to the half.
All right, Carl, thanks so much. Welcome to the halftime report. I'm Scott Wapner, front and center this hour. A return to growth. Why ETF superstar Cathie Wood says it's about to happen. Does our investment committee agree with that? We debate it and tell you the names that could see the biggest bounce if it does. Joining me for the hour today, Stephanie Link, Joe Terranova, John Najarian, and CNBC's Jim Cramer. He's the host of Mad Money. Jim, good to see you. Nice to see everybody as well. Let's check the markets. S&P right now, well, it's around its closing high. As Carl said, it's been the tightest of ranges today. So the market activity has not been all that pronounced. However, Jim, I'm turning to you first because I do want to focus on this Cathie Wood call. She held a webinar. She says, quote, the rotation back to growth is probably close at hand. I'm wondering if you agree with that, because many of these stocks have had a nice little comeback, but still remain quite a ways from their 52 or all-time highs.
Well, I think the question is it going to be growth, as in DocuSign or Unity Software, or growth as in One Life Healthcare, CM Life Sciences, Pluristem, 10x Genetics, I mean, genomics. See, I think that I agree that with the 10-year trading the way it is, that growth is going to be back. But I am going for the barbell. I know Steph and I talk about barbells all the time. We ought to work out together because we do both start running at 3:30. But I think you can make money with both.
Okay.
But not with the super-duper growth that she buys because those are head spinning.
Well, what about some of these? So you mentioned DocuSign, right?
Right.
So it's up 22% over the past month, right? So it's been a nice bounce. It still sits 18% away from its 52-week high. A lot of these stocks are in the same boat. Palantir's up 24% in a month. It still sits, though, a fair amount from its 52-week high. Are you saying that the Cathie Wood type stocks, Jim, are not the ones that you want to buy if growth is going to be back?
I think a lot of hers that are bigger cap are actually what I call COVID stocks. I mean, I think Zoom's a COVID stock. I think DocuSign's a COVID stock. But I've got to tell you, I like FANG. I know we're going to talk about FANG later. I like some of the traditional growth stocks that we talk about all the time on the show that are, let's say, a ServiceNow, which I think is just dramatically oversold. I will go as far as Snowflake, which I know is 100 times sales, but I think that Frank Slootman, who I know has got some issues away from this, the heck with that. The guy's got a great product. And my favorite stock right here is Amazon. And I defy people from telling me why I should sell Amazon just because Cathie Wood likes growth stocks.
Okay. So, Steph, I'm going to go right to you then there because you know, Josh Brown has been talking about Amazon going through this consolidation period and that it's getting ready for a nice breakout. Jim's favorite pick of the FANGs, Amazon. And I know you have a lot to say about Amazon as well. Well, I can't hear Steph. We're going to work on Steph's audio. But, Joe, I turn to you. I mean, if you're looking at
Did you see what she said? I read lips. She says Amazon's going to the moon, Yolo.
She probably did. She probably did. But, Joe, look, the FANG stocks, they obviously, you know, not all up. Steph's leaving the building. She'll be back. Here she's coming back. This is like play-by-play of inside Steph's office.
I love this.
Joe, the FANG. Steph, are you there?
Okay.
Can you hear me now?
Kind of like
Stephanie?
a Washington team's quarterback.
I can hear you.
All right. This is the
I can
trials
hear
and
you, I can
tribulations
see
of
you.
what we've been going through for the last 15 months or what have you. Steph, you heard the question. Let's hear the answer.
Amazon. So I've done a lot of homework on it because the stock has really lagged. It's flat year to date. It's up only 25% in the last year. That's still nice, but it certainly has lagged other FANG names. And I just look at the businesses that they have, and this is not a surprise by any means, but e-commerce is simply on fire. The top 100 marketplace globally last year did $2 trillion, and Amazon is #1 in the U.S. and #3 globally. So clearly they have momentum, and I think that is going to continue. Maybe it's not as strong as last year because of the pandemic, but it's going to stay strong. AWS, only 15% of the workloads are in the cloud. This could be a $100 billion business in the next 4 to 5 years for Amazon versus about $25 billion this year. And then I like this MGM deal a lot. I like that they're going to get more size, more scale in streaming. So I like it. I own it on market weight. It's 4% of my benchmark. So I'm very aware that I don't want to get too over my skis. But I do like this story and just kind of have to see it. You know, maybe it has to settle out here a little bit for a little bit of time, because I'm not convinced, by the way, that growth is going to make this huge comeback, because I still believe very strongly that the growth in the economy is going to stay strong. Inflation is not transitory, not at least 100% of it. And that usually means better earnings, and value always outperforms growth in that kind of environment. And oh, by the way, one last thing. Historically, growth has outperformed value by 5 multiple point premium. Today, it's at a 10 multiple point premium. So it's not exactly cheap.
Okay.
So we have to pick our spots. And that's kind of what I'm doing.
Okay. So Ed Yardeni, on that note, has a note today that says growth is not cheap. He says, as the S&P 500 Growth Index has a forward PE of 27 times, while the S&P 500 value is trading at 17.5, more or less, forward PE, just to show you the relationship between the two. So, Doc, maybe that's an issue in getting growth stocks going again. People just say, look, they're still not that cheap, even though they've come in. But then there's making the case for individual big names like an Amazon, which you own shares and calls.
Yeah, and Scott, I've said for better part of a month now that I think we kind of tread water between now and the end of June. Still stand by that. It seems like we get the Dow or the S&P or the Russell back up to a high, and then it pulls back just a little bit, and that's probably music to the ears of Janet Yellen and all the members of the Fed, especially Jerome Powell, because they would rather this kind of reaction than a taper tantrum, since they're talking about when they're going to move on these rates. So I don't think this is a bad scenario, a bad setup at all, whether it's Apple or whether it's Amazon that, like Steph said, have underperformed and are just kind of waiting right now. I think they might not be coiled springs, but they certainly have some catalysts ahead of them in the fall. And I think, both back to school will be exceedingly strong this year, because they actually will go back to school, Scott. Those two sons of yours will be back in school. And I think that driver will be significant for Amazon, for a number of the retailers. And I think, of course, that Apple gets back to its knitting late in the summer into that new introduction in the fall.
Let's make a differentiation, too, Joe, if we could. Look, so Ed Yardeni is right. I mean, if you look at the numbers, tech may not be cheap, but the fact of the matter is it's not as expensive as it was either. So if you take that into consideration, and you take exactly what Kramer said about where rates are, and the 10-year today, I think, was at 148 at one point, maybe 150 right now. That in and of itself is a catalyst to invest and buy these tech stocks in some respects, Joe.
I would agree with that. I want to lean towards what I would call established growth, and that's your Microsoft, your Apple, your Amazon, your Alphabet. As it relates to the emerging growth stocks, clearly when the 10-year Treasury broke above 1%, you saw pressure on those long-duration assets. I had not made a return to those emerging growth stocks. You talked about DocuSign before. I thought there was a great earnings report. I took a very small position the other day in CrowdStrike. I like that because of the cyber security thesis, okay? But, Scott, that's a rental. That's a trade. If the 10-year Treasury begins to reverse and move back towards its 177 high in March, I'm going to be wrong. So I want to lean more towards the lower PE, established growth technology names, and that's going to take you back to the mega caps.
Well, you had Jim and then you lost Jim because he loved the fact that you said CrowdStrike. By the way, he has the CEO on his program tonight on Mad Money, which we're all excited about. But then you lost Jim when you suggested it was merely a trade and not a longer-term deal. Jim, explain.
What is this, Airbnb? I mean, will you give me a break? I mean, Hilton? This company is, when you watch what's going on the Hill, when you see every single day somebody's identity be hijacked, when you hear about the crypto nightmares, well, there is nobody other than George Kurtz, maybe Palo Alto, that can help this. This is a secular trend. And I'm bringing CrowdStrike on because that last quarter was great, but also because we just have to just say, I think you need to own one of these. And by the way, I said own, not rent. Now, look, I mean, is it a condominium? You know, it's more like it's a summer house. How about that? I mean, you got to own it at least for a while. But you know, Joe, I love you. I really love you, and I believed, like you did, that it was a rental. But the situation has become such a secular nightmare. I think you got to own one, Joe. It's just too horrible out there.
So I owned one already. I own Fortinet.
Oh, okay.
I think Fortinet is clearly one of the leaders there. But here's the problem, Jim. And tell me that I'm wrong, because the CrowdStrike position is going to work in my favor. I'm going to stay with it. But if a 10-year shoots back up to 175, you've got Palo Alto, you've got Fortinet, and you've got CrowdStrike. I think you know the answer. What's going to happen to CrowdStrike? All the fundamental strength that you're talking about, that's going to get lost in translation, because all investors are going to see is the long-duration assets are going to come back under that stress again.
But I do think that this is a special situation long, because what happened with Colonial Pipe is going to happen repeatedly. And I think that you're going to want to come in. I mean, every time it happens, CrowdStrike's going to be up 15 or Palo Alto's going to be up 20. You're going to say, well, why did I just decide it was a 10-year play? It is a play on bad guys. It's a play on our country refusing to take on state-sponsored actors who we just kind of just blindly say, hey, listen, that's part of the territory. No. Until we take these state-sponsored actors on, I think you need one of these. And I think you need one of them badly, regardless of the tenure.
Okay, so is there, John, another one that you need to use Cramer's words there off this list? Is it a Shopify, for example? Is it Spotify? Is it Twilio? Is it one of those names that can still work or not?
Absolutely, Scott. And Fastly, let's not forget about that. Because, of course, they were front and center yesterday, or just a day ago past that, because of the shutdown of, like, the New York Times and a number of, or at least the stoppage of those sites. So, yeah, I think on dips, significant dips for companies that are making that happen, not just on the security side. I agree with Joe and Jim on that, and I'm sure Stephanie does. But I think also a lot of the cloud center security plays will work, as will the folks that really help content get out there, because that's still in huge demand, Scott.
Well, now,
and, you know, go ahead.
No, finish your thought, John. I'm sorry.
No, I do think that we're going to see those stocks that provide that. I mean, look at this one, ATOM, Scott. This one's on the semiconductor side, but that stock has doubled in a month. And why? Well, if anybody has pricing power, it's the semis, because everybody needs what they've got. Those chips, you just can't get enough of them. And that stock down substantially. I mean, it was down around 10 or 13 bucks a little over a month ago. Trades over 25.
Ripping right now.
Now it's heading into a Stifel. Yeah, a Stifel conference tomorrow, Scott. So you're going to see a lot of these stocks get that love, because they've already made those corrections that we've all talked about. And now, even if they're not those mega cap tech names, they're tech names that are in big demand.
Yeah, I'm looking at Atomera right now. It's a 13% winner today. It's not a big market cap stock, and let's be clear on that. It's below $1 billion, so we can move on
just
from that. But Fastly, Jim, as John mentioned, presents a conundrum for me, and I wonder if it does for others as well. The stock is 60% off of its 52-week high. Okay, so you say, wow, that maybe is an advantageous position to get into a name like that. However, it's 33% up for the month.
Right.
So it's already had its big move. And there are a lot, as we started out this conversation with, in the same boat. That's a conundrum. What do I do?
Well, not only are there a lot in the same boat, but there are a lot of companies shooting against Fastly. And I think that, I don't know, when I put up New York Times, I got 502 served when I was there yesterday, at 2 days ago at 5 a.m. I said to myself, all right, that's Fastly, enough already. They're supposed to be boutique. They're supposed to never go down. They're supposed to be perfect. Fastly is too expensive, particularly after this bounce. And I like that company. I've had management on, but I do not want to own the stock of Fastly. I just think that there are too many people. It's a crowded space, and they are no longer able to differentiate themselves from their competitors.
Okay, so if we move the conversation forward, Steph, and we say, okay, we think, well, let's just, for argument's sake, say we agree with Cathie Wood. And we think because rates are low and a lot of these stocks have come in, that tech is going to have a bounce back and that the growth trade is going to reemerge and have this next leg higher. That means that Marko Kolanovic's call from J.P. Morgan that we highlighted and led with yesterday is likely going to be right, that the next leg of this rally, he says, is already upon us. And now we're going to start noticing it even more. Even though he says stay overweight cyclical stocks, you're not going to get that next leg higher without tech. Steph?
Well, tech, yeah. I mean, tech is 26% in the S&P 500, and communication services is 11%. So it is a very big weighting if you combine the two, and you have to combine the two. Yeah, he was focusing more on sticking with value, economically sensitive companies, operating leverage, reopen. Kind of sounds familiar. Kind of sounds what I've been talking about for a really long time. But if growth does have a rally, I completely respect that, and I do have some growth. Right now, I tilt 70-30s. Cyclicals, which happen to be a little bit more in the value camp, and then secular, 30% is about secular growth in general. And I have plenty of ideas there, and actually, my most recent new purchase was Twitter. So, and that was only because it was down so much, and I really like what they're doing in terms of trying to fix user growth, because that's why the stock fell 30%. And I think at 12 times price to sales, it compares very nicely versus Snap, which is at 30 times price to sales. So I'm looking for bargains within tech. But look, in cloud, I own, well, Amazon, of course, but Anaplan is down 30% after they beat and raised. It's down 30% on the year, which is ridiculous. Really good company, really good business. Cybersecurity, I own Fortinet. I'm a little nervous about that one. It's had a big move here, and a lot of support from the sell side. And social, as I mentioned, Twitter, but I also like Match. So I can find plenty of growth stuff out there, and I have positions in a lot of these names and would look to buy more.
What about that call, Jim, by Marko Kolanovic, a guy who's closely followed by a lot of people on Wall Street? The next leg higher is likely upon us. That's his lead. That was our lead yesterday, but it's still relevant, and I wanted your opinion of it.
I'm kind of there. I'm putting together a piece next week for a club call that I have to give, and I'm looking at the things that I think could go wrong, but they're further out. I think that we are in one of those moments where it's just a time where there are a lot of stocks that are working. I mean, come in today, and the drug stocks have just been, I mean, J&J, there was news that Dr. Gottlieb talked this morning. He kind of danced around the idea that maybe J&J's vaccine is good enough against some of the variants. And bingo, J&J up at $1.65. Bristol Myers was on early this week. They really didn't do anything that got anybody excited about it. Then suddenly Bristol's up. And when we see those kind of moves, I mean, Bristol really disappointed off of the ASCO convention this week, and then we had Dr. Cafario on Squawk on the Street. It did nothing, and then because of rates, it goes up. I mean, this is I guess what I'm saying, Scott, I'm going to use the word benign. I think it's a benign environment where if you stay long, I think you'll do well.
Wondering, what areas you want to be more heavily exposed to, and that. It brings me, Joe, to Tom Lee, who says energy still has legs. And look at where crude is today. Oh, yeah. It's at 70, 71 as we look at it right here, just below 70 as we're having this conversation. He says there's still legs, that oil's going to go above 70, and that ExxonMobil is a name to focus on, that it could, in his words, quote, break to the upside. What do you think?
I think he's 100% correct. You and I had this conversation within the last 2 weeks. I shared my belief that oil The price of TI will go well above 70 towards $80. I thought the decision from OPEC Plus placed the refiners in a very difficult position where they have no guidance on future production increases, so they have to go out and aggressively buy their crude oil right now. ExxonMobil absolutely breaking out. Let's not forget, in 2020, they added on the board as the lead director, Ken Frazier. He will transition that company to where it needs to go in terms of renewables. So I believe energy is the sector that is leading us here in 2021. To Steph's point, it's cyclically oriented, and it's about mobility, Scott. It is the clear proxy for mobility. It continues to work higher.
So, Kramer, you've been as critical of fossil fuel stocks as anybody in recent months, that no one wants to own them. Now, you may make exceptions in the group, and Chevron today gets reiterated with an overweight. The stock sits $5 off of its high. Are you comfortable with telling people, okay, you can buy these stocks?
Absolutely. There's two that I like. I like Scott Sheffield at Pioneer Nat, and I like Mike Wirth at Chevron. Why do I mention that? Because these two gentlemen, I had said that oil was uninvestable. These people heard the call. Okay, they heard the call. They realized, you know what, we got to start changing. We got to start doing things differently. Mike Wirth is doing everything he can to become a better player in the industry. And by the way, Joe's right. I mean, that Exxon board, they are, if you looked at them, they may be anti-fossil fuel. It's incredible what's going on there. So these companies have heeded the call. They recognize that their old ways are no longer any good, and they're becoming better corporate citizens, and that makes me like them. I give you those two, Pioneer Nat and Chevron. And Exxon, what can I say? With that board of directors, I am seriously considering that one as a good stock to own.
See, I mean, we were discussing this, and I know you guys on Squawk on the Street were as well over the last few weeks, that it was a watershed moment what engine number one was able to do at Exxon and get those 3 board seats. Historic, obviously, and may result in more people feeling comfortable buying those stocks. Dr. J, you own BP shares, you have Exxon calls, and you're in calls in the XLE itself, obviously of the view that Tom Lee has that trade's going higher.
Yeah, global demand, Scott, is coming back huge. I mean, you look at what OPEC said, and they're playing this about as well as the Fed is playing their talking about talking, because they did increase production at the meeting, but they didn't just open the spigots. This is the most discipline we've seen out of the OPEC Plus members, and that bodes well for anybody who's in this energy space. So I talked about unusual activity in Exxon a week ago or so, Scott, and the stock's up $3 from there, even after the additional pressure came from Engine 1 for Exxon. And the fact that they're cooperating, the fact that Exxon is working with some of these folks from the ESG side, I think, if OPEC's right, and we're already going to see 96% of the 2019 demand coming back, if we actually exceed that number, Scott, we could be pushing towards the high 70s for U.S. WTI.
Okay. I want to talk about it before we take a break. I want to talk about a topic that we haven't talked about in a while, and we rarely do, and I think we should, given what's taking place in the markets over in Europe. And that is whether, Jim, you see that the U.S. equity market, as Bank of America says today, is not the only game in town. The Stock 600 index, all-time high, again on Tuesday. And how about this? This may be one of the most interesting tidbits I've seen in a long time. This from Bloomberg yesterday. A single trade worth $1 billion fueled record flows to a Europe ETF. It looks like a single giant trade, they say, has just fueled the biggest ever inflow to one of BlackRock's funds that tracks the European markets. It's the MSCI Eurozone ETF. It's the EZU. Is this an investment that people should be looking at, Jim, as all of the conversation seems to be about just what's happening here?
Absolutely. And the one I'm going to suggest is Banco Santander, symbol SAN. It's a $4 stock. It's run by Anna Boutin. And this is not just because my daughter teaches English in a Madrid high school, but because I have looked at this situation. This is the largest bank in Europe. It is up 36% for the year. It had much better controls than all the German banks that we hear about. It is, to me, the great growth stock of Europe, and at $4, give me a break. Banco Santander is back. Anna Boukine is an excellent executive, and I challenge anyone who does not think this is the best bank in Europe, because I think it's amazing.
Steph, a single billion-dollar bet on Europe. What do you make of that, and how do you think you should best play that?
Well, I mean, I focus on multinational companies, so I do have exposure to Europe and to Asia and to around the world, quite frankly. So I like to play it that way. But a big part of the European markets are the financials. And if you've seen anything about rates over there, they've actually recovered quite nicely. They're still less than where we are today here in the United States, but they have inflected higher. And I think a lot of that has to do with the reopen and the massive stimulus. We're not the only ones that put stimulus in our system. There's $100 trillion globally that went in place around the world last year. And so that is going to lead to better growth. And yeah, you know what? The FTSE versus the S&P is a heck of a lot cheaper. It's cheaper for a reason. I don't think you can get margins to expand as nearly as much as you can do here, but there is value.
Joe Terranova, what do you think about this trade and this big bet? Whether it's through the EZU ETF or multinational stocks, like Steph said, or through Santander, as Kramer was talking about.
I agree with it. The VGK is up nearly 11% in this quarter. That's probably double what we're getting from the S&P 500. A lot of it, Scott, is on the improvement in COVID trends, which were lagging relative to the U.S. So you're seeing, to Steph's point, yields which have improved dramatically. A German 10-year actually got close to getting back from negative territory, but you have to believe in banks, and there's reason to believe in banks. You have to believe in life insurance companies. You have to believe in automobile producers, because that's really what the composition of the equities market is in Europe. But they have the momentum right now. They have the improving COVID trends. I don't disagree with investing there.
I mean, Jim, last word to you on this before we do go to a break. 30 seconds. The VGK, as Joe was just talking about, new high today, 52-week high.
I'd still buy it. I think it's really a great idea. Wish I'd been pushing harder on Mad Money. I think it's just a great idea.
You know, it's funny. It's been this like a sleepy move.
I know.
Right? You look up, you hear about $1 billion bet, a single $1 billion bet. You look at the ETF performance, you say new high, and you're like, wow, okay. Maybe it is time to actually
COVID
focus.
Opening story.
We've been so fixated on the U.S. and for good reason. We're
Great
excited
COVID
about the
opening
reopen.
story. Yeah, I'm glad everyone got to listen to that, because I think it's just a terrific place to be.
Okay, we're going to take a quick break. We'll come back straight ahead. Meme stock mania, clean energy fuels, Clover Health, Wendy's, AMC, they're all making big moves again. We're going to weigh in on that next. And a reminder, you can always watch or listen to us live on the go on the CNBC app. Back right after this.
So that was interesting. The ECU, Europe is having a $1 billion bet on one of the ETFs. So big bet in Europe coming up. I don't know what they did exactly. $1 billion bet, huge bet. I was looking at ticker symbol ECU. It's not a high flyer, obviously. It's a ETF. And the implied volatility on this is extremely low on the options. You can get a fantastic price. I don't know if I would buy it, but I like the fact that they bought it in big, and it's a great opportunity. Maybe I'll wait for it to come back down to its 10-day moving average, come back down to $1 or $2. It's more like $1. It's not a very big mover, but that's a big bet to take notice. So EZU potential play there. And then the stock that Kramer was talking about is SAN, Banco Santander. So I'm not familiar with this bank, obviously, but it seems like it's a big bank in Europe, or in Spain in particular. Pretty good information. So we see a lot of these stocks pulling back heavily here. Now we have Clover Health at $19, $19.16. Wish holding at $11. Wendy's down to $25.68. AMC holding strong at $50. This is very good for AMC here. It's holding around $50, plus or minus a few for the past 5 trading days. So that's pretty good for AMC consolidating at this price point. We have GameStop rallying again, going back up to 312. Yesterday, I saw a big move. Sundial just lingering at 120. Workhorse at 16. Go EV giving up those massive gains down to $10. GTT down at 281. BlackBerry solid at 1560. Tilray getting some nice inflows here at 2247. Bed Bath & Beyond holding here at the midpoint at 3385. So they're all pretty much holding all these stocks rallied, pulled back heavily, massive volatility, and they came back up slightly, and they're trading in the mid-range of the big move. So we're going to see what happens in the next few days to see if they hold. Brad, about Wish, let me double check there. I don't think Wish is not heavily shorted. I think there was a short interest of 10% from the last time I saw it. Oh no, it's short, or maybe it went up. Let me double check here. The short volume ratio on Wish right now is 18%, and yesterday was yesterday was 18%. Prior to that was at 15 and 13%. So what we're seeing, Brad, is we're seeing short volume ratio for Wish going higher, and maybe after today it might even go higher towards the end of the day. So that could work for us or against us. They could hammer the stock down, or that can create momentum for it to go higher. It's tough to say. But one thing I do like about Wish is that a lot of institutions own the stock as well. So if you start seeing heavy shorting, I mean, a lot of institutions own this stock as well. So we could see a big battle coming here. Yeah. So short volume ratio is at 18.
GameStop, AMC, and all the other ones that you've heard about, which Jim Cramer today you called these should be offered in a casino, is what you said during your Squawk conversation this morning.
Sure, why not? I mean, there's a lot of there's skill set games, as we know, in the casino, and then there's just luck games. Blackjack is a skill set game. I think it offers a lot more skill in a lot of ways than what I see the people doing on Reddit, Wall Street Bets. But I want to clarify one thing. This Andrew Little Fair, okay, this is clean energy. We should not call it a meme stock. Why? Because Credit Suisse came out with a piece this morning about renewable natural gas, and that is CLNE. I was 10 years too early when I had them on the show. But they've got a big deal with Amazon. They've got 50-50 deal with BP and Total. Not a meme stock. The Credit Suisse piece is excellent. The time has come for this company, and I think it's just an actual company doing well. So let's take it out of that group of people. It's not attending. It's not attending, okay? I mean that when I say that. There's no YOLO here. It's not diamond hands. It's not laser eyes. It just happens to be good company.
But you do think that this trade, the one, the clean energy, you think that the meme trade, so to speak, is going to continue and get even hotter, you said.
Oh, yeah. What else is there to do? I mean, it's not football season yet, so you can't gamble there. I do think that a lot of these stocks, I mean, look, there was a guy, someone came out yesterday and recommended Wendy's. So was it John Ivankoe from JP Morgan? No. Was it Nicole Miller-Reagan, one of my absolute favorites from Piper? No. It was Chilson Day. Chilson Day. And why did Chilson Day recommend it? Not that we really know who that is. Great salad. Great salad. Now, I go to speak to Nelson Peltz, who's the chairman this morning.
Yeah.
He admits, yes, indeed, there's a great salad, but he also talks about how the burger's getting better. And by the way, we were talking how great it is to have that jalapeno sandwich. But we didn't really think it was about that as much as the fact that breakfast is really working. They're making a lot of money with breakfast. They had a really good quarter, and the stock didn't run. So while I like Chilson Day because I think it's some sort of a fruity salad, I still think he ought to do a little more work on breakfast. He ought to do more work. They just opened in the UK. And I know that he's dominating right now with his hands or whatever he's doing in Chilson Day. And I love those guys. And, I'm just joking around. But Chilson Day is on to something, except for he doesn't have any idea why.
quick, I want to get Doc's opinion here, too, because he's involved in some of these stocks, Jim. But before I do that, there is a headline that GameStop, which, by the way, reports earnings after the bell, has elected Ryan Cohen as chairman of the board. So they're going to report their numbers after the bell. That stock was obviously the headliner at the beginning of this whole thing. And as we pull it up now and all of you look at it, wherever you're trading the market today, you can see that it's up about 6% ahead of that print, Jim.
We all knew he was going to be the chairman, but it doesn't matter, see, because these people have a particular set of skills, which is a nightmare for sellers.
We see big inflow here on IVR Invesco Mortgage Capital. Not sure what's going on here, but we're seeing big money coming in here in the options market. It was trading around 355. Now it's at 445. And let me look at some of the options here on this. Options look actually pretty well. I don't know too much about this ETF. Mortgage Capital. I'm not sure why it's getting a massive rally here. I mean, this stock is pretty cheap here at $4.45. It has a market cap of $872 million. This one has a big potential here. Let me look further into this. I'm not sure what's the deal with this. I've never looked at this. I just got an alert with unusual volume activity on this stock. Let me check it out here. Okay. Very interesting. I'm not sure. It's highly owned by institutions. It has a 12% short volume ratio. Mortgage Capital, Invesco Mortgage Capital. So this is more of a REIT or real estate play here. Let me see. I'm gonna do further research. I'll put the news back on just for right now.
And GameStop, I'm praying that he says, I am working on something really big. Because then they could take it to 400. If he actually plays his hand, could that be the end? I don't know. I've offered him many options. I think he should be a crypto bank. They got 5,000 stores. Crypto bank. They got 55 million in rewards members. Why can't they do contests and reward these people in Ethereum or Dogecoin? I mean, what's the deal? He's got to affiliate himself with crypto. If he does that, it's to the moon.
And you guys, John, I see here that you own Wish, which I think Jim and David were talking about earlier this morning. You're in calls. You say it's your largest options position right now. I don't know if you can see Kramer's reaction as I'm asking you this, but you tell me, and then I'm going back to Jim.
Oh, my God. You're wishing upon a star, Chief.
I'll tell you why, Scott, because when we see unusual activity in CLOV, in Clovis, in Wish, in AMC, in GameStop, the big difference that Jim knows between this and Vegas is I can buy a call and then sell another call against it. I can't do that in Vegas. I can't buy a put against my bet on the Raiders in Vegas. But I can do that with options, Scott. And the men and women who are on these Reddit boards, apes or otherwise, are just all over the. I mean, look at Wish today, Scott. 200 and some odd million. This stock was averaging 11 million, I believe, just a week ago. You had huge volume yesterday. The stock was $7. Traded it to 15 today. Took off a huge chunk of that. I mean, this is a gift from the trading gods, these stocks. And to Jim's point, this is entertaining, but it's also huge opportunity. And for anybody that gets on the wrong side of this, I mean, I've got one that I'll give you for unusual in just a couple minutes, Scott, that has a 30% short interest. You don't think they're going to squeeze that stock even harder? Yeah, they will. And those diamond hands, that they're all over these stocks. and you've never seen flow like you see in these rebel stocks.
So, Jim, I mean, the point here, too, and John brings this to the forefront, there are a lot of pros involved that are trading these stocks, whether it's John and Pete or other options players. It's not just a cohort of retail that we've, just described as this Reddit group.
Absolutely. I don't care for Wish. I want to be sure that people understand John is playing not a game. He is playing an absolutely great investment style on what these people are doing. And it's an annuity stream. That's absolutely the way to do it, which is play volatility. I am praying that he's going to do Bed Bath & Beyond because it's got a 33% short, and I think it's actually doing well. But
I've done that one.
Sorry.
You're right, Jim. I've done that one.
I've been shopping there lately.
I think you said yesterday, Jim, it was your favorite of all of these, or something
Duskin,
to that effect.
An old buddy of mine from the days when I had my hedge fund was an activist here. He brought in a guy named Mark Tritton, who was a the chief merchandise guy at Target. Look at Target, what a stock. So I just think the world of Bed Bath is a little. I mean, I think Mark would tell you maybe it's even a little bit too high. But if you're playing Wish with premium, that's just an amen trade. I am right there for that because that's the way to do it. That's the way to take advantage of this. And I think you're absolutely right, Scott. That's what the professionals are doing. And the ones who are kind of amateurs are the ones that are just short call because they end up being the victims.
Scott?
Yeah, go ahead, quick.
Scott?
Yeah, go ahead.
So on these do-it-yourself stocks, there is no reason to believe that this is not hedge funds also participating here. They could go out and they could clearly see where the short interest is. And just look today in GameStop. You've got the 580 call and the 680 call. The 580 call, I think, is pricing for $3. It expires Friday. So for a hedge fund to go out and, let's say, spend $500,000, throw up a print that 2,000 calls have traded, or to go to the 680, which is trading 1.50, put up 3,000 traded there, they create the excitement, right? They're creating the excitement that's enticing retail. So I think hedge funds are participating in this just as much as retail is.
Yeah.
Let's not lose that premise.
No, good point. I'm glad you made it as well. We'll take a quick break. We will talk about those big buy calls for two big bank stocks. We'll debate the financials in our call of the day coming up. And do not miss the CNBC Evolve Global Summit. That's coming up on June 16th. To register, go to cnbcevents.com/evolve. We'll be back in 2 minutes.
Get 0.9%.
The largest customer stock out of the gates today is up by nearly 17%. It priced at 27. So we'll continue to watch that trade, which looks at its $31.50 right now. Mention those two big calls in the banks. It's Morgan Stanley and Goldman Sachs, both initiated by over at Jefferies. Stephanie Link, you've got Morgan.
I do have Morgan, and it's been a good stock year to date, up 35%. Look, I think the strategy from the CEO is brilliant. It diversifies their revenue stream, gets them away from just being a yield curve play. It also increases their retail suite of products. I mean, they bought Eaton Vance and E-Trade, and these are the two deals that I think are going to be even more synergistic than people expect. They have a world-class investment bank. They have record backlog in the investment bank. And oh, by the way, they have a $10 billion buyback. They have $7.9 billion left. That's 5% of the shares outstanding. Really like this story.
Okay, Joe, you've got Goldman.
I've got Goldman. I've got Morgan Stanley. I've had both for a very long time. I'm not getting out of either. Not much to add upon what Stephanie said. Fundamentally, for Morgan Stanley, you could apply the same metrics to Goldman Sachs and add the trading revenue that they're deriving. Both
There's no J.P. Morgan or Morgan Stanley or Bank of America or Goldman Sachs, and I'm wondering why.
Made big money in Goldman Sachs, made big money in J.P. Morgan. I have to tell you, put the money into PayPal, which I think is terrific. Giant position in Wells Fargo. But I will say in my club call next week that I really do feel like I made a mistake selling Goldman. Goldman's franchise is stronger than I thought. I think they're doing a lot of really good things. By stronger meaning that even though during the doldrums, I think they're doing quite well. So I made a mistake here. I should own one more. I don't know which one. I'm looking at all of them. I thought J.P. Morgan knocked down on this Amazon thing. That kind of interesting again. But I made a mistake. The earnings power here is much better. I thought if rates came down, people would sell the stocks. They really haven't. Sometimes you just have to own the fact you got something wrong.
And of course, we appreciate the contrition, but do you think if rates stay here now or around this level, it limits the upside?
Well, that's what I was thinking would happen. You know, I said, look, I got a beat on this. I think rates are actually going in a different direction. I better get rid of one of these. And I think that when you look at the note that came out today for Goldman and Morgan Stanley, you got CCAR coming up. I look at these and I say, you know what? These things are just way too cheap. And I think Morgan Stanley's, the E-Trade acquisition was brilliant. I love what Goldman is doing just in terms of they've really taken costs down. So you know what I have to do? I have to hope that these stocks go down because of the yield curve, and I'm going to get back into one of them. They're just too good. Their earnings machines and their PEs are just too low.
Yeah. Returning, a bunch of cash to shareholders as well by various methods. All right, we'll take a quick break. We'll come back. John has unusual activity. That's coming up next. Okay, Dr. J, unusual. What do you have?
All right, Scott. I mentioned this one, 30% short interest, Root. If you look at it, it was a $23 stock back in the early part of the year. It's made a big move now, but it's still only 13 or 14 bucks. They are buying the July 15 calls. I expect to be in these, Scott, a week to 2 weeks because of the fact that this is being driven by short interest too. Aurora Cannabis. We've had Tilray, Aurora, Kronos all hitting today. I did Aurora Cannabis because these calls expire Friday. They're the June 12 calls. I like that one a lot, Scott, and I'll probably be in that one for days.
All right, good stuff. Dr. J, thank you very much. Ask Halftime's coming up next with Jim Cramer and the crew. You can send in your questions by video. We'll play them on the air. Email us, askhalftime@cnbc.com. We're right back.
Are you confident that we know enough about what happened on January 6th that we can take steps to make sure, because none of us in this country want that ever to happen again?
I think a lot has been known already, and I do not think that another commission is really necessary. I think we need to be looking toward the future. I obviously took a very personal decision and personal step to step down from the cabinet because of what had happened that day. And I think our country needs to move forward. Let me add one more thing back on infrastructure.
Yes, please.
You know, as we talk about the infrastructure proposal, we're talking about the backdrop of this economy. The economy is coming roaring back, and we just had the latest monthly unemployment figures. I used to be the Secretary of Labor, as you noted, and the unemployment rate has dropped, and so that's good news. But the labor participation rate is very low. It's currently only 61.6%. Pre-pandemic, the labor participation rate of our workforce of 157 million people was about 63.1. When I was Secretary of Labor, the labor participation rate, the number of people who are working out of that 157 million workforce, was basically 67%. So we are missing a whole bunch of people who are not coming back to participate in this booming economy. You can also see it in the JOLTS study. It's JOLTS. We basically started that. That tells you the dynamism of the movements of the jobs in our economy. And when I was Secretary of Labor, we had about 4 million vacant jobs at any one time. It was due to frictional unemployment. You're never going to have zero, vacant jobs. You always have some. But currently, the number of vacant jobs numbers over 9 million. So there is a tremendous shortage of workers. And if the supply chains continue to face increased pressure and they're unable to support the growing economy, we're going to see some pretty serious inflation.
Thank you so much to Elaine Chao, former U.S. Transportation Secretary, but as we just said, also former Secretary of Labor. We're going to take advantage of that in the second hour of Balance of Power. We're going to talk to her about the labor situation in this country. This is Bloomberg.
Suzuki's doing amazing things. I don't care that it sells 110 times earnings. This is maybe the great growth stock for the next decade.
Wow. Up 3 1/3% and climbing as we speak. Stephanie Link, a video for you.
Hi, I'm Jim in Denver. Wondering, the vaccine stocks, Johnson & Johnson and Moderna seem to be doing quite well, and Pfizer seems to be stuck in a rut, and wondering why, since they seem to have a pretty good pipeline in addition to the vaccines.
All right, what do you think?
I like all three. I own Johnson & Johnson. It's blue chip, high quality. It's a defensive stock. So is Pfizer. Pfizer is actually cheaper than J&J, but J&J is more diversified. Pharma, med devices, consumer. They're benefiting from reopen on the med device side as people get more procedures. Pharma is the juggernaut, great pipeline. So that would be the one I would want to own and buy on any weakness.
Okay, good stuff. Thank you. We'll take a quick break. We'll come back and we'll do final trades with Cramer and the crew. We'll do it next.
If you wake up thinking about the
at snhu.edu.
Have you ever gone to a comedy club, stand-up comedy club? I love going because I always find even the worst performer, you're just gonna have a nice night, relax and laugh. Stand-up New York, that's a popular destination for those visiting the city or they want to make it big on the way to conquering the city. The owner, Danny Zoldan, joins us right now. Devil of a time apparently post the pandemic getting any of the monies that were guaranteed, I guess, and from the Shuttered Venues Operators Grant, right? I mean, you qualified for this months ago. You still haven't seen a penny, though?
Hey, Neil. Yes, 9 months ago, Senator Schumer and Jerry Seinfeld were advocating for Save Our Stages, which would provide $15 billion in federal funding for venues and other arts and cultural institutions that were affected during the pandemic. And, they both did a great job advocating for this. The bill was passed into law back in December, and still to this day, no one has received any money from the SBA.
Do they ever explain why? Because monies have indeed been appropriated. So where are they? Where are those monies?
I don't know. They're not communicating. There's been over 13,000 applicants all around the country, and a total of 50 were approved, and none have been awarded yet. So there are thousands of these arts and cultural institutions that are in limbo, and these are small businesses, and they can't hire back employees, they can't bring in talent, they can't market their shows, and they're really hurting. And the money is there. It's sitting there at the SBA, and they're not doing a great job getting the money out fast enough to these businesses.
What about yours? Are you open? What kind of a schedule are you on?
We're open. I mean, we're not doing what we did pre-pandemic levels, obviously. We used to be open 7 days a week. Now we're open 3 days a week. We can't afford higher level talent. We recently did a comedy festival in Idaho, and we couldn't hire tier 1 talent because we were expecting these funds from the SBA. And I'm not just advocating for me. I'm advocating for the over 13,000 venues out there, which are mom and pop places that are hanging on. They're going under daily, and the money's there. We just need the SBA to pull the trigger and get it out. They hired 500 application reviewers, and if each application reviewer approved one application per day since they started reviewing these applications, they would have approved 17,000 already. And again, there's only 13,000 applicants, so I'm not sure what they're doing over there. And these venues are going under every day, and they need the money now.
Yeah, and they qualified for the money. The money was allocated, so where the heck is it? Keep us posted, Danny. I know you've got to hang in there, but we need to laugh. We need all of this, and something with the government right now, which apparently has a poor sense of humor, isn't appreciating that. A little more after this.
Appreciate your support. Thank you.
Washington schemes or
Two final trades in just a minute. I want to bring you up to date on a couple of moving stocks, specifically Charles Schwab. You see on your screen right there, it looks to be down about 3.5%. The chair of the SEC, Gary Gensler, is speaking today at the Piper Sandler conference, where he says that the SEC is going to be undertaking a, quote, broad review of stock market structure, including broker pricing rules. I'm sure we'll get into more of that with Mr. Gensler. He's going to be on the exchange at 1:30 p.m. Eastern Time, about 30 minutes from now. So you do not want to miss that interview, exactly what he has to say about that specific issue and what other stock moves you may get as a result of all of that. Jim Cramer, what's coming up on Matt tonight? It's been good having you today.
Sure, we have George Kurtz on from CrowdStrike, and just a remarkable company. Then we have Tim Macedon, old friend from law school. I used to run the CFTC, talking about the weakest link in the crypto chain.
You want to give me 30 seconds or so, Jim, on this news that I just mentioned, what Gensler's talking about, this quote, broad review of market structure, including pricing?
Well, I mean, I think to me, pricing is Robinhood. I mean, we don't know how much they make per trade. They're coming public. I happen to think the firms that you listed, two fine firms. I doubt that those are firms. Well, look, I don't know what he's going to say, but to me, I want people to have as much transparency as possible, including figure out how much it really does cost to do a trade, rather than just being told that there are no commissions. I think that's important. I want Gensler to do it, focus on education. I really think that people are doing some things that are over their heads and risky. And we need to know suitability. He can really help us with some town halls all over the country.
I know that he's probably going to be asked about payment for order flow. That's what you're alluding to.
Yes, because I think people don't understand that there's no such thing as a free lunch.
Yeah. Jimmy, we got
American Express.
Dr. J, got a name? And then Joe.
CLNE bought it during the show.
Woo.
IHI.
All right, good stuff. Thanks, everybody. The exchange is now.
Thank you, Scott, and hi, everybody. Welcome to the exchange. It's a busy hour. Here's what's ahead. We all know about GameStop, AMC, and Clover lately, but we're digging deeper into the Reddit trades to find the under-the-radar plays that could be the next ones to pop. Speaking of which, we'll speak with SEC Chair Gary Gensler. Scott just told you we're going to talk about the discussion him and Jim were just having about this whole issue around pay for order flow, what that means for the future of free trading, for Robinhood, for Reddit, and so much more. And is it time to retire FANG? One market strategist says the trade is over, but does Mr. Cramer agree? It's all ahead, but we begin with the markets right now. Seema Modi is here with the state of play. Seema?
Hey, Kelly, so much happening in today's market. S&P 500 trying to get to that fresh all-time high. We're looking at the Dow Industrials currently underperforming, down about 53 points as Industrials, the sector, underperforms. Take a look at stocks like Caterpillar, John Deere, Honeywell, Martin Marietta. All of these stocks seen as beneficiaries of an infrastructure deal, and they are slipping after President Biden ended infrastructure talks with a group of 6 Republican senators. There is talks about Democrats using the process of reconciliation. It is worth noting Caterpillar actually raises dividend today by 8%, but that stock is down 1.7%. What is working? Well, you know, I keep an eye on the emerging markets. Brazil, I just want to point out, up again today, 7 consecutive session, and it is up around 6.6% so far this month, handily outperforming the broader emerging market index. Why is Brazil up? Well, it's the economic data. It is starting to improve there. The GDP expanding faster than expected in the first quarter. And that weaker dollar story, Kelly, that's also helping stocks in Brazil outperform.
That's surprising. Seema, thank you very much. Seema Modi. Well, we can't seem to move on from the meme stocks lately. There's GameStop, there's AMC, there's Clover this week. The Reddit-fueled rally is becoming a market force to be reckoned with. Now even the market pros are watching for the next names that could be headed, so to speak, to the moon. Christina Partsenevelis is watching them too. She's here with some under-the-radar meme stocks to watch. Christina?
To the moon, right, Kelly? There are other meme Reddit faves that are lurking behind rooms in Discord, Reddit, and FinTwit. But first, what the heck is a meme stock? We've been talking about it a lot, and everybody has a different definition, but usually these are the key points. The fact that there's heavy short interest, higher trading volume with no major news catalyst, and of course, massive encouragement to buy the stocks in online forums. Take, for example, Geo Group. It manages prisons and correctional facilities and is the most active New York Stock Exchange stock right now. Geo is already halted today because of volatility. So far, Geo is trading well over 24,000 over its 30-day moving average. 24,000 over its 30-day moving average, and the short interest is massive, almost at 35% of the float. In comes the short squeeze. We also take a look at sectors that are trading on Wall Street. bets you've got electric vehicles, cannabis, and anything to do with gambling gets the most attention. And those social media mentions are helping drive trading volume in pot stocks like Tilray and Sundial Growers. Volume is through the roof. And although QuantumScape is flat to mostly lower, oh, you can see it's climbing a little bit higher just in the past few minutes. It's a Reddit favorite over the past several months. Followers are keeping a close eye on the stock as short interest hits 23% of the float. So to the moon they go. Who will catch them if or when they fall, Kelly?
That's another great point, Christina. Thank you. Let's bring in a value stock expert now to see what he makes of the Redditors' arguments for some of these high-flying stocks. Do they have a sound case or not? Joining me is Abhay Deshpande. He's the Chief Investment Officer at Centerstone Investors. Abhay, we enjoyed it when you were on recently and gave us what you thought was the intrinsic value, I think, for AMC, which was, let's just say, well below where it was trading. So let's go over a couple of the other names that have been popping lately. For example, what about Wendy's?
Yeah, I mean, I think there's a good case you can make for Wendy's actually having some value. I mean, they have a real business that's been around for a long time, but I'm sure no one's actually read the annual report to understand that Wendy's is not actually even a restaurant company. It's a real estate company. It's mostly a franchise operation. 90% of the restaurants are franchised. The big difference between a Wendy's and a AMC you mentioned, or Roku or what have you, is that most of the value that's kind of priced in is a today value. There's not a lot of potential value that's being priced in. So that's not to say that Wendy's is necessarily cheap. We own McDonald's in the Centerstone Investors Fund. Same basic scenario, kind of phenomena. It's a real estate business with a long stream of earnings that you can capitalize and rely on. The business is not going to change drastically the next year or next 2 years. Like you see, if you read the annual reports for some of these meme stocks, you'll see over and over again, massive competition. In the case of Roku, they tell you that they've never made money and they probably will never make money. Right? So that's very different than a Wendy's.
So in the case of Wendy's, are you saying, look, the valuation has a point, it's just pulling that future growth forward?
Yeah, there's just the tug of war is always between what you get today and then what kind of potential there is tomorrow, right? And that's the difference between AMC's actual intrinsic value today and what the meme guys think it could be worth with all the potential, XYZ that they could, or GameStop. You could put all these meme stocks in the same kind of boat. With the Wendy's, there's a closer link between what it's worth today and what it could be worth tomorrow. And that excitement, over a breakfast or what have you, it probably kind of maybe is a little bit too forward, but in our view, I think Wendy's could be worth $18. It was there, I think, 3 months ago. I mean, it's not like completely crazy to say that it's within earshot or within range of its actual value. It's very very different than around $18. I mean.
Yeah, no, absolutely. And I think it's interesting as well to say, okay, the market was already there. This is not new information to the market. So there's a difference in some cases between new information, information that was already known and priced in, and just more people discovering that information but not understanding that it's already priced in, and then new information, which is, hey, this retail community wants to rally around, raise the equity price, and potentially offer new information to the market on a name like this. I'm not sure Wendy's falls in that camp. So let me ask you about another one, Bed Bath & Beyond. Sometimes people think it's only up because there's interest in BlackBerry and people, just get the tickers wrong. But there's also, I mean, it's a traditional real estate play. One of these names that's kind of fallen on hard times, a reopening trade. What's the Bed Bath case fundamentally?
Fundamentally, it's a basket case, Bed Bath & basket case. It's been kind of dying for many years now. Like-for-likes are compressing, and they just kind of like an AMC or some of these other companies, like they have a massive amount of liabilities that people who never read anything will just completely overlook, which is the rent that they owe. It's $800 million a year roughly, and as the revenues shrink, the rent doesn't change. So you have this meeting point, unfortunately, which is profitability at zero, which is basically where they're at, and so it's kind of a race against time to lower their rent expenses as they shrink. That's a situation where I could here's again, what's it worth today? What's the potential? So I mean, worth today maybe $30 or something like that. But you have to have a great deal of faith that the stocks or the company's fortunes have based here. If it is continuing to be a slowly dying business, then I don't know what the intrinsic value is. It's very difficult to value a dying business.
Interesting. So are there, before I do know there are a couple of kind of traditional names you like, but are there any of the Reddit plays that you look at and you go, actually, yes, yes, that's a company that was mispriced by the market, and Abe, would kind of be long this name along with the rest of the retail community in that one.
This is the stupidest stock market environment I've seen in a long, long time. So the answer is no. I can go through, and I have gone through the entire list of these things that are like in the ARC fund or whatever, which is not to say that I'm not dissing anybody. Like, for sure they've done a great job and returns have been great. But, as I go through each and every one of these stocks, I go, oh, just read the annual report. AMC says, they're going to go bankrupt last year. Roku says they'll never make money again. Spotify says they're going to be competing against Amazon and Apple, and will probably never. And by the way, even Universal Music is going to be a huge competitor now, and we'll have the balance of power going forward. Because if you go through the work, you'll see how much power Universal, with 30% market share, they own the content. All of that stuff is going to impact the profitability of these businesses, and a lot of that potential people are looking at will just not happen. So yeah, I mean, and that's worth today what it could potentially be worth if everything goes on right. You just have to question that, and even slight things going wrong mean that there's a
don't crush the hopes, Abe, for the retail investors who are involved in a lot of these names. But obviously, you're talking about some of the pros here as well. Air Liquid, which we spoke about last time, Ubisoft, those are some names for people who want to know what you would be looking at as you dig through the financials and read all of these reports. And thank you for joining us, Abe. Today, we appreciate it. Abe Deshpande with Centerstone Investors. We've got a news alert out of the bond pits right now. 10-year notes up for auction, top of the hour. Rick Santelli has the latest. Yields were under 1.5 earlier, Rick.
Well, I'll tell you what, Kelly, if you would have asked me before the auction button up, with the rally of the last few days, make this auction go better or worse, I would have said worse, kind of gave away the concession. Boy, was I wrong. We just auctioned off 38 billion tens on a reopening, and I'm giving this auction an A+. The yield, 1.497. Every metric was just solid. If we look at bid to cover at 258, that's the best since July of 20. 65 on indirects, that's the good group. We like to pay attention to those foreigners. That's the best since August of 20. Direct bidders like mutual funds and hedgies, 19.2, the best since December of 2019. But here's the thing. If you have a big dinner at your house, Kelly, and all the food is gone and there's no leftovers, that means everybody kind of liked it. Well, the dealers only got the leftovers of 15.7%. That is the lowest since May of 2016, and that really sums it up. They couldn't get enough tens. To me, that's a bit of a capitulation on shorts. Listen, maybe everybody's going to continue to believe the Fed is going to be right and transient's the word for inflation. But if it isn't, this could all change quite quickly. But at least for now, they couldn't get enough 10 years.
What an unusual, remarkable situation. Rick, thank you. Rick Santelli, 10-year yield under 1.5%, as he mentioned. Let's get back to the Reddit trade. Those traders are having an impact on sell-side analysts even, as those analysts scramble to change their coverage. In the past week, we've seen them reevaluate their stances on 3 stocks as a result of the power of the Reddit rebellion. B of A terminating coverage on shares of GameStop, saying non-fundamental factors are still driving GME shares. The same analysts also moved to a no rating on Bed Bath, saying the rapid appreciation in shares is being driven by another surge in interest in trading led by retail investors. They go on to say shares of BBBY are no longer trading on fundamentals. And today, Stifel downgrading Wendy's from a buy to a hold after yesterday's 26% rally. They're saying the stock's current valuation, like we were just talking about with Abe, quote, fully reflects the growth we were assuming to reach our target price of $25. A couple of these names taking a breather after their mega rallies. We'll watch for any other analyst changes, but don't expect the streak to walk back these calls anytime soon. Coming up, after years of dominating the investing landscape, is it time to retire FANG? One strategist says yes, and what he thinks is going to replace it. Plus, we have an inside look at the largest housing community in the world, built on the premise of net zero greenhouse gas emissions. But it's in California. How does that work? That's ahead.
At 10, and you said that was a great short at the time, and it's trading at 120. That's not a good trade. But they're putting on the trade. My guess is for fundamental reasons.
Joe, why do you think retail investors are doing this, and where are they getting the liquidity? I mean, I get the themes around something like AMC makes a lot of sense in a reopening economy, but not at this price, right? Wendy's, the food is absolutely delicious. I love a Frosty as much as the next guy, but not at this price. Why are they pumping so much liquidity into these stocks?
Well, I think part of this is that they've been successful doing it. So again, success tends to breed success, and also the retail investor tends to be a lagging indicator in terms of what's going on. So when things are really popping, wisdom would suggest at some point you got to trim. At some point, maybe you take off the position altogether. And at what point are you going to be satisfied with a victory? So again, using $10 as an example, if it goes to 20 by the end of the day, in 2 days, that's 2 to 1. If it goes to 30, hold up 40. At what point do you start to trim? And I think the retail investor needs to pay a little bit more attention to that. Having said that, they've been successful in the trades, and because we're all getting on the same bandwagon going in the same direction, that's had a very, very positive impact in terms of what they've done. So to date, the trades have been profitable. But still, if you put on a trade at 60 and it may go to 65 and then winds up dropping at 30, that's going to be painful. So I think the retail, we've got to do a better job, I think, of educating the retail investors so they understand how to protect their position when things move against them. And at some point, things are going to move against them.
Joe, have you ever seen anything like this before? I mean, okay, Reddit, the internet is, a relatively recent phenomenon. But for example, in the 80s, did retail investors go crazy as Wall Street became, so visible?
No. In the 80s, they didn't do that. It was the internet, Matt, in the 90s that gave the opportunity to be able to do that. Trade online, be able to move very quickly, almost instantaneous execution. So that's the dot-com boom. So there were many, 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 many people that made decent livings or made a lot of money by being day traders. But remember, during the 90s, we had an incredible bull market. And the trend was always up, 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 up. But eventually, March 2000 came, and between March 2000 and March 2003, most of those day traders went out of business because the market was tanking. Now, so that reminds me of what's going on today with one difference. Back then, you didn't have Wall Street Bets. You didn't have Reddit. You didn't have people like that were really, really educated that could convince a huge group of retail investors that are avid followers of them that they should be putting on a trade. That's the difference today. But yeah, we saw this in the 90s.
Do you see this as changing the investing landscape? I mean, given especially your incredible experience with this class of investor, is it different now, or is this just a fad that's going to burn out?
What's going to happen when the market turns, and if the market turns for an extended period of time, it's going to be difficult for anybody to continue to make money this way when the whole market is moving against them. Now, you can argue, well, as long as you have the Reddit leadership, convincing people that they should jump in and buy a particular stock, you can still have tremendous demand for a particular stock coming from retail. In a negative market environment, that means the stock could very well pop. Having said that, remember, in the 90s, the day traders were very successful. They went out of business when the dot-com bubble burst and through that recession, March 2002 and 2003. If the world blows up again and we go through a difficult year, I got to believe that'd be very, very painful for the typical day trader.
Is this the kind of thing regulators should be looking into, Joe, or is this just a lot of excess liquidity with time to spend at the craps table?
Well, there is a gambling element to this, of course, but yeah, I think the regulators should be looking at it. I think, by the way, Matt, I think the first time when it was GameStop started to go crazy, and there was that, Plotkin had this horrible short, and really, really got burned. I think and then there was issues with the Citadel, and remember they went to Congress. You can't have all that without the regulators getting involved. And I think if the regulators get involved, and they're already involved, and if they find something wrong, well, I have no doubt there's going to be serious penalties associated with that. But if they don't find anything wrong, well, okay, then you got to back off a little bit. And maybe there's a better way to protect the individual investor. Maybe we could have like a rule, on shorts, when you put on a short or whatever it might be. But If they find something, I'm sure they're going to go after who's ever guilty very, very aggressively.
Yep.
If they don't find anything, they got to recognize that this is what's going on in the market right now.
Joe, I always appreciate your commentary. Thanks for coming by. Hope we get you back soon. Former CEO of TD, Joe Moglia. I got to break a headline here with regards to all the liquidity out there. $502.9 billion is how much banks and institutions are putting into the Fed reverse repo facility. So this is a theme we've been talking about the past couple of weeks. This chart, I think, is striking because it shows, you know, it goes back to 2016. We had a lot in the repo facility then in spikes, but since then we've seen nothing with the exception of March of 2020, the beginning of the pandemic. All of a sudden, there's so much liquidity sloshing around that institutions are rushing to put it at the Fed's reverse repo facility overnight. It's 0% interest, but they need to put it somewhere. Very interesting indeed. This is Bloomberg.
But now IBM going from 100 to 150, Cisco and Intel have had new life breathed into them. You know, eventually the market does find value. That's what's going on right now.
Last question on principle. Are dividend growers, let's say, inflation protected?
Oh, they're the greatest inflation hedge of all time. There is no inflation if companies with pricing power are not themselves raising their prices. The ability for a good equity, a good company to pass on the impact of inflation to its customers and then the investors to receive that benefit in growing dividends, dividend growth portfolio should see its annual income going up 5 to 10% per year. Well, that's higher than 1970s level inflation. So we absolutely believe dividend growth is an inflation hedge, short and long term.
All right. Well, I hate to tell you, but we're going to have to call them icky. IBM, Cisco, and Intel is David Bahnsen's new trade for the year. Thank you very, very much, sir, for coming here and making your case. We really appreciate it.
Thanks, John.
Coming up, breaking at the top of the hour, SEC Chair Gary Gensler saying he's recommending rules to ensure fair competition between exchanges and brokers. What does that mean? We'll look to shares of Charles Schwab sinking on the news. We'll speak exclusively with the SEC Chair himself about it all momentarily. And as we head to break, a reminder that June is Pride Month. All month long, CNBC is spotlighting contributors, business leaders, and our own on-air anchors and producers. Here is Patrick Manning.
I credit a lot of my success to the fact that I am LGBTQ. Once I fully came out and was living truly who I am, I felt a tremendous weight lifted off my shoulders, and I started to notice that that's when I really started to succeed in my career. It also led to a lot of very dear friendships and relationships within the LGBTQ journalism community, and that led me down many paths that I otherwise may not have discovered.
Hey, Lily, I need a new wireless plan for my business, but all of my employees need something different.
Oh, we can help with that. Okay, imagine this, your mover, Rob. He's on the scene and needs a plan with a mobile hotspot. We cut to downtown. Your sales rep, Lisa, has to send some files, like ASAP.
So basically, I can pick the right plan for each employee.
Yeah, I should have just led with that.
With AT&T Business, you can pick the best plan for each employee and only pay for the features they need.
Nothing will stop me from blowing up this market.
I love Bitcoin! Whoa, 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 Ross. This is my fantasy. And is your toilet seat up?
Investing in Bitcoin begins with GBTC.
That building you're trying to sell, you should 10x it.
10x it?
10x is the world's largest online commercial real estate exchange. You can close with more certainty and twice as fast. If I could, I'd 10x everything. Like a coffee run. Or Fedora shopping. Oh. Talk to your broker. 10x does the same thing, but with buildings.
So no more waiting.
See how easy? Don't just sell it, 10x it.
Tailor-made or one size fits all. Made to order or ready to go. With a hybrid, you don't have to choose. That's why insurers are going hybrid with IBM. With Watson on a hybrid cloud, they can use AI to help predict client needs and get the data they need to quickly design coverage for each one. Businesses that want personalization and speed are going with a smarter hybrid cloud using the technology and expertise of IBM.
Nice bumping into you.
Do you struggle with occasional nerve aches, weakness, or discomfort in your hands or feet? Introducing Nervive Nerve Relief from the world's #1 selling nerve care company. As we age, natural changes to our nerves occur, which can lead to occasional discomfort. Nervive contains B-complex vitamins that nourish nerves, build nerve insulation, and enhance nerve communication, and alpha-lipoic acid, which relieves occasional nerve aches, weakness, and discomfort. Live your life with less nerve discomfort with Nervive Nerve Relief.
Welcome back to The Exchange, everybody. Let's get a quick check on markets. Dow's down 30 points. Other major averages are positive, including the S&P. The Nasdaq up 1/3%. It's leading the way. In terms of individual movers, we're watching shares of Dish taking a hit today on a downgrade from J.P. Morgan, who's expressing skepticism over their ambitions to build out a network in a market that's costly to enter in the first place. Dish shares are down almost 6%, and Brown-Forman taking a dip despite reporting a strong fourth quarter. The Jack Daniels maker beat sales expectations thanks to premium bourbon sales here in the U.S., but it's also seeing significant increases in commodity costs. Familiar villain these days, BFB down about 6%. And tune into Closing Bell for an exclusive interview with the company's CEO. Lawson Whiting joins at 3 p.m. Eastern Time. Now over to Leslie Picker for a CNBC News update. Leslie?
Hey, Kelly, here's what's happening at this hour. Last year's inductees to the Baseball Hall of Fame will have to wait a little longer for their induction ceremony. Originally set for July, it will now happen on September 8th. The event is also being moved outdoors. No players were elected to enter the Hall of Fame in this year's voting. Former Volkswagen CEO Martin Winterkorn has agreed to pay $14 million back to the carmaker for his part in that Dieselgate scandal and a failure to address the crisis quickly. In northern Mexico, investigators are still trying to figure out what caused a bus crash that killed at least 7 people and injured dozens. The bus was reportedly carrying more than 50 Hyundai factory workers when it rolled over near the U.S. border. And tonight on the news, the latest on the crash and why it might have happened. Tune in at 7 p.m. Eastern. And in Western Canada, a pair of kayakers coming to the rescue of a young moose after it fell into a river. They quickly rigged up a safety rope to make sure they wouldn't get swept downstream, and one of them walked through the river to scoop the moose up. Look, it's almost like he's skiing or something. It's remarkable.
I'm trying to see the moose. He was so small. Oh, there we go.
A little guy.
No
But
antlers
safe
yet.
at last.
Wow. Impressive. Leslie, thank you very much. Our Leslie Picker. Coming up just last hour, SEC Chair Gary Gensler announced the SEC will undertake a broad review of the structure of the stock market. Could change the way stocks are priced and traded even. The Chair Gensler will join us for an exclusive interview right after this here on The Exchange.
They said that it couldn't be done, but you managed to pack a record 1.1 trillion transistors into this chip.
Oh, hi. I invested in Invesco QQQ, a fund that invests in the innovators of the NASDAQ 100, like you.
You don't have to be a circuit design engineer to help push progress forward.
Can I hold the chip?
Become an agent of innovation with Invesco QQQ.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
Today, global markets are challenging traditional assumptions like never before. There is a new, accelerated sense of responsibility, sustainability, and
At Westcom, we think your bank should be all about you all of the time. That's because we're not a bank at all. We're a credit union, a not-for-profit financial co-op owned by our members throughout Southern California, people just like you. So we're all about finding new ways to make banking easier, better, and more rewarding, all to help you build a better financial future. bank where it's all you all the time. Open your account today at westcom.org/welcome.
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving until they came to us. Keck Medicine of USC, beyond exceptional medicine.
The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Get up, let's go! Stay up, go!
It feels good to breathe, doesn't it? Soft cycle! Welcome home.
Never forget that the floor is ultimately a supermarket, with the merchandise being stocks. Except unlike an actual supermarket, the NYSE is more of a caveat emptor institution. Buyer beware. Watch or listen live on the CNBC app.
Welcome back. Breaking at the top of the hour, SEC Chair Gary Gensler making headlines announcing he's asked his staff to recommend rules aimed at ensuring fair competition between brokers and exchanges. Now, these moves could have a big impact on trading structure. That means all of the trades that you and me and everyone on Reddit is making. SEC Chair Gary Gensler joins us right now for more on all of this, along with our very own Bob Pisani. Bob?
Thanks very much, Kelly. Important thing here, Gary Gensler, thanks very much for joining us. Making a few headlines here, Mr. Gensler. You're saying that the SEC is undertaking a broad review of stock market structure. Now, I know you've said in the past that you are somewhat unhappy with the payment for order flow regime. You've implied there's too much concentration, and you've also implied that investors may not necessarily be getting best execution. Can you demonstrate, or do you think you can demonstrate, that investors may not be getting best execution? And if so, what are you proposing to do about that?
Well, Bob, first, good to be with you. And technology changes our markets on an ever-increasing basis. So what I've really said to staff and my fellow commissioners is we should ensure that our rule sets are updated for 2020's technology. And what do we find in the 2020s is there's a provision that you and me, all of us, are to get best execution when we enter a trade into a trading platform, and the broker gets us best execution. And it doesn't mean better execution, best execution within the rule. And there's this thing called payment for order flow. And we've had some cases as recently as the end of last year where there's this inherent conflict where somebody paying for our trading, our order flow, is saying, well, I can give you a little better execution or a lot better execution depending how much I pay you for that order flow. So I think we need to take a close look at that. Not every country allows this payment for order flow. Many major markets around the globe don't.
I think the key point you have been making is you'd like to see more trading in the lit markets on exchanges like here at the New York Stock Exchange. Is that the thrust of what you're trying to get at here?
I think the thrust is a little broader than that. It's about ensuring that through transparency and competition, that we as investors, the individuals, working families, get the best execution and the best out of their investment platforms and their brokers. So I think transparency and competition helps that. And it is, you know, most of what we do as retail, if we put an order in, it's not going to what you call the lit markets, New York Stock Exchange, NASDAQ. It's going to some wholesaler buying that order.
Let me move on to the meme stops. We've been talking about them for the last several days. They've been making headlines. You said in your recent congressional testimony that you've asked your staff for more information on exactly what happened with Reddit and GameStop and Robinhood a few months ago, and what, if any, regulatory or rule changes need to be changed at this point. Can you share with us your thoughts at this point? I know you said you've asked for your staff, but what's your thoughts at this point? Have you come to any conclusions about what, if any, regulatory changes need to be made?
Look, I'm only in the second month, and I know a few months from now you'll ask me again, be back, and you'll say, well, you're in your fifth month. Look, I think that technology has led to greater access and it better user experiences. It's easier to trade within the market. But at the same time, we have to watch out for investors. And so these behavioral prompts that are being put on our mobile apps to trade, is that really the best thing? So we're going to take a close look at what's called gamification, all these little prompts and these encouragements to trade, and how do we protect investors in this new regime?
You know, Jim Cramer this morning, my colleague, was talking about the need for more education, perhaps, from the SEC. Obviously, we're concerned that all of this could blow up in people's faces, and people were going to start to wonder, what did people do, or what should we have been told to warn us about it? Does the SEC have any role in educating people about the problems that can happen when you get involved with stocks that are way, way beyond, or in price areas that are way, way beyond their fundamentals? What role does the SEC play in mitigating this or helping people to understand what's going on?
So, Bob, we do have an investor education and investor focus. We've had that. It's at the core of our mission. We also have a vibrant examination enforcement regime, and we look out for investors in terms of making sure and looking for where people are trying to do fraud schemes or trying to do pumping up a stock in ways that are on the wrong side of the line. And that's easier to do when it's a very low price stock. Sometimes it's called penny stocks and the like, and through bad actors doing bad things. So we're going to do investor education, rigorous enforcement, but also look to see whether we should freshen up our rule set in this area.
Chair Gensler, it's Kelly here, and I just want to get two quick questions in before handing this back to Bob. This is fascinating all throughout. So my first quick question is more of an observation that the business model of a lot of trading platforms is pay for order flow. If you take that away, it could mean there's no more free trading, which is currently underpinning the entire kind of Reddit Robinhood phenomenon, if you want to call it that, at a time when Robinhood's about to IPO. Do you have any response to that in terms of, will that actually be in the best interest of the public?
First, I would say this, Kelly, I think that's a misperception. It's not free trading. Somebody is paying for your and my order flow. Secondly, they're getting our data. The data is very valuable. So it is zero commission, but not necessarily free. Number two, not every broker does it in the United States. And number three, the United Kingdom, Canada, Australia, it's banned. Most of Europe, you don't have it. So they're different business models, but it's not free.
Understood. The other question that we're getting a lot from people these days is about naked short selling. It's illegal, but there's insistence that it's happening. Some would acknowledge maybe on a very small scale, others insist it's a much larger scale. What can you tell us about its commonality in today's trading environment?
Well, I think that we can bring greater transparency to short selling, and this is one that Bob was going to say, well, you're only in your second month. I'm going to say, I've asked the staff to actually serve up recommendations that we can look at. We have authorities to bring greater transparency in the short selling and related stock borrow area, and I look forward to putting something out to public comment.
Mr. Gensler, let me move on to Bitcoin and crypto. There seems to be an awful lot of confusion about who is regulating what here. We know Bitcoin is a commodity regulated by the CFTC. It doesn't seem to be clear to a lot of people who is going to regulate all these other coins that are out there, nor is it clear who is going to regulate Bitcoin exchanges, Bitcoin wallets, for example. You seem to be unsure of it yourself. Can you tell us what your conclusion is? Who should be regulating this particular area? And do we need congressional authorization for you as the head of the SEC to say, we're the people who are regulating this? We need some decisions here on this, and I'm just wondering what your thoughts are.
Here's what I'm pretty confident about. Investors don't have the full protections that they have in the equity markets or in the commodity futures market. So our sister agency, the CFTC, and our agency, the SEC. Bitcoin and these other cryptocurrencies do not have those full protections. It's a speculative asset class, technology neutral, but what I've said to Congress is I think that one of our agencies should have authority to write rules and help protect investors on crypto exchanges. Now, as it relates to those tokens, many of those tokens do come under the securities law. The SEC's brought, I think, 6 to 7 dozen enforcement actions over the last few years. But of course, there's hundreds of other tokens. I think there's 1,600 tokens that purportedly have a market value of over $1 million and 70 or 80 over $1 billion. So we're going to keep trying to protect investors as best we can under the authorities. But I do think crypto exchanges, there's some work to be done there.
Yeah, let me ask you about climate change. The SEC is conducting a public comment period on climate change, on expanding corporate climate disclosures. You've also launched the Climate and ESG Enforcement Task Force. I know the House Republicans have really pushed back on you about this, warning that the SEC doesn't really have a mandate to do this, and that this is not really material at this point. What is your response? Does the SEC have the authority to move ahead and ask for more information on climate and climate disclosure?
You know, it's interesting. This is at the heart of our disclosure regime that Franklin Roosevelt and Congress did in the 1930s, and it's still very much the authority of the SEC. Investors get to decide, but it's based on disclosure from the companies. And each decade, technologies change, just as technology changed in the markets. And investors, trillions of dollars of assets under management, are asking for more information related to climate risk disclosure. So I think we not only have the authority, but we have a role to play to help bring clear, consistent, and reliable information so that investors can decide to buy, sell a stock, or vote on a proxy.
I want to just return for a moment to the Bitcoin market and the eternal question of a Bitcoin ETF, which is, of course, a big interest to Bitcoin investors. You said recently, SEC said recently, and warned about the potential for fraud or manipulation in the underlying Bitcoin market. Now, these are very similar to words that the SEC used in the past to deny Bitcoin ETFs. I think the question that everyone is wondering about is fraud and manipulation, in your opinion, still sufficiently high enough for the SEC to essentially pass on a Bitcoin ETF this year?
Bob, I'm not going to get into any one filing, but let me say investors should be aware, I'm saying this in my own voice, that the underlying Bitcoin cash markets, there's not the robust oversight that you have in the stock markets or in the derivatives markets. Our sister agency oversees Bitcoin futures, but those underlying cash markets do not have those investor protections.
Just before we let you go, I just want to ask you about executive stock trading plans. You made a comment this week about it. You want to overhaul the rules to reduce improper insider trading, or what you think is improper insider trading. Is there any evidence that executives are abusing the safe harbor laws and abusing those executive stock plans?
We'll build the record. We'll build the economic record and put this out to public comment. But this affirmative defense was put in place 21 years ago. I deeply believe that we need to freshen it up. Insiders right now can enter into multiple plans, and insiders cancel those plans even when they have material non-public information. I think we could lift the confidence in corporations around this, and this is diminishing the confidence that good faith actors want to do. And so we've either we have to, frankly, repeal that the year 2000's set of affirmative defenses, or freshen them up. But how they're working right now, I think, are real gaps.
Mr. Gensler, thanks very much for joining us. Very much appreciated. Gary Gensler is the chairman of the SEC. Kelly, back to you.
Bob, that was fascinating. Our thanks to the chair as well. You asked really, really wonderful questions, very thought-provoking. It sounds like there's going to be a lot of changes afoot if we take each of those answers and their implications quite seriously. Quick programming note from risks to regulations to ransomware. Power Lunch is dedicating our entire show tomorrow to the crypto craze. We're going to talk to insiders about a whole bunch of different parts of this crypto industry. 2 to 3 p.m. Eastern Time, set your DVRs, skip work, whatever you need to do. Another payment stock goes public, genetic research gets a SPAC, and tired of TikTok. It's all in rapid fire right after this.
When I was your age, things were different. Getting Shiloh's food was never this easy. Mom's workout class was all the way downtown. I didn't get to design my own room. And now Dad thinks he's a big, fancy chef.
Wow. I wonder what it's gonna be like when I'm your age.
It's every municipal bond investor's dream. A bright, shining city on a hill where there won't be any financial problems. But what if there are? That's why Assured Guarantee protects your principal and interest payments. Assured Guarantee, a stronger bond.
America, start your engines. This is the big race. And it's no walk in the park. The hits, the walls. But we all have a team that helps us stay on track. MoneyLion, America's most powerful financial platform. Here we bank, borrow, invest, and grow. Here we roar.
My husband Ben and I opened Ben's Chili Bowl the very same year that we were married. That's 1958.
The Chili Bowl really has never closed in our history. When the pandemic hit, we had to pivot. And it's been really helpful to keep people updated on Google. We wouldn't be here without our wonderful customers. We're really thankful for all of them.
Comfort, it's a vibe, and Skechers Beach Casuals have that casual look and feel that fits your style perfectly. They're lightweight, understated footwear that slip on and off for easy comfort everywhere your day takes you, relaxing by the pool or just bouncing around town. Chill in comfort with Skechers.
All right, let's catch you up on a couple other stories that should be on your radar right now. It is time for Rapid Fire. Joining me to break down the headlines today, Michael Santoli, Christina Partsinevelos, and Leslie Picker. Welcome, one and all. First up, Marqeta. That was today's IPO. The company counting DoorDash, Instacart, and Uber as some of its big customers. In their S1, they note Square was 70% of their revenue last year. Marqeta shares are popping about 14% right now. They sold 45.5 million shares. Market cap up around $15 billion. They're a CNBC Disruptor 50 company, around number 7 on this year's list. Leslie, what does today's IPO tell you?
Yeah, it tells you that you get a pretty bullish response to this fintech IPO market that we've been experiencing. Marqeta, just the latest example of this. But to your point, more than 70% of its net revenue came from one customer. That's Square. That was in the first quarter of this year. That is a very big bet on the future of Square's business, on the future of e-commerce. And so clearly the market is telling you that they like this idea.
And Christina, the pricing seems to be sort of normal, decent pop on the open, it's not horribly, it's not way up, it's not way down. I mean, this has got to be the kind of thing that, the IPO market likes.
Yeah, normal, I guess, how do we define normal? Because you had other fintech companies like Paymentus and Flywire that popped off of their IPOs. But with this company in particular, they did say that they do see incurring net losses in the foreseeable future. So that could be something. I think they can capitalize on the crypto market because they did sign a deal in April with a Canadian firm that they're going to be allowing customers to trade Bitcoin, and the fact that everybody's going digital. When was the last time you used cash? So a company like this can benefit from it.
Mike, the other day I needed $5 for my son to get ice cream at preschool, and I was like, how am I going to get $5?
If I were next year, I would have handed you a 5 because I just did it downstairs here because I'm one of those guys. But
the only one
what is fascinating is
there are hedge funds out there and other investors who feel as if just buy anything related to payments right now. They're just competing with cash. They're competing with checks. There's so many different layers. It's almost like saying you're an application software or cloud software. So many different iterations. You're not going to understand where they all sit. And the latest generation is usually the one that has the edge because it's on cleaner software. So they're not all going to make it. But right now, they're buying them and then figuring out who wins later.
That's well said. And there's some other companies Marqeta's involved with. We'll keep an eye on that one into the close. Next up, another public listing to tell you about, 23andMe. They're going to do it via SPAC. It'll happen next week, pending a shareholder vote today. It'll trade under the ticker ME. Richard Branson's backed VGAC announced in February it would be acquiring 23andMe. VGAC hit a high on that announcement. It's down, Leslie, about 20% since then, which is a little peculiar.
Yeah, so this is a microcosm of what we're seeing with the broader SPAC market, the fact that a lot of these companies have gotten a pretty significant amount of excitement surrounding that announcement and then have fallen subsequently, trade a lot closer to NAV as they approach their listing day. That's exactly what we are seeing with 23andMe and the VG acquisition group here.
Mike, what would you add?
Just that it's sort of a business in transition. You know, Ancestry.com, the competitor, is in private equity hands. They're moving away from just genetic, ancestry type kits toward health data. Not really clear how well they're going to be able to capitalize on that. So a relatively mature company to be coming through SPAC at this point.
All right, and then the story I really want to talk about today, it's which is worse, being subordinate to big corporate or big algo. Okay, just keep that in mind as we read you about this headline in the New York Times. Taylor Lorenz writing that TikTok burnout is real. Young creators are burning out and breaking down. The newfound fame and the pressures of constantly creating and managing fans has gotten to be too much for some of these young stars. And creators have noted that when they complain, the commenters are filled with people telling them, get over it, you're an influencer, Christina. It sounds like the dream job, the hustle of a lifetime, but it turns out TikTok is really hard to do well and really hard to figure out what the algorithm wants over time.
I guess it sounds like the dream job when you get free stuff sent to you all the time and you're flown in jets and you can hang out with celebrities. But overall, I would never want to, become a TikTok star just because it does require almost all of your day having to cut and edit everything. Hopefully this means that it's pushing a younger generation into creative fields and we're going to have even more epic movies and TV shows in the near future. But with this, we saw this YouTube stars saying that they're burned out. Instagram, which is why maybe they removed some of those like buttons. You can't see the number of likes. This is a common occurrence that we do have to take note of going forward, especially when all our children are using these apps.
Right, and Leslie, it's interesting because a lot of people have been able to kind of push off from shore in the corporate world and say, I'm on TikTok now, I'm on social. It's not that easy. There's trade-offs to everything. And as much as it opens opportunities and new frontiers to be able to earn money and have influence in the economy, it's just as much of stress in many ways that people think that they're walking away from if they leave their day job.
Well, you're self-employed, and so you have to, you're basically someone who has to appeal to that hustle every single day. It also speaks to just the crowdedness in this space. It was really something that's been lucrative for a few people. Now everybody's caught on, and in order to get your videos seen, you have to work extra hard, continue to create that content. Yeah. And to your point, the algorithm makes that even more important.
Yeah, and Mike, I was speaking with someone the other day who's changing jobs from digital media to kind of old school, let's call it, saying they didn't feel like being a slave to Google anymore, that their entire job was basically trying to figure out what Google wants. So again, you kind of have your choice. We've all had maybe a boss, but when it's Google, when it's TikTok, when it's an impersonal algorithm that you can never sit down and have a cup of coffee with and say, what do you want from me? It makes life that much harder.
Well, the platforms are insatiable, and what works is constantly evolving because as soon as something does work, it's open to everybody else to recognize that too. So there's always competition from somebody who can basically hack the algo a little bit better or a little incrementally. And so I get the exhaustion. I think I can say, I see why you're burnt out, but also try to get over it because you are, after all, just making videos.
So cold, Michael.
This is what we're doing.
Yeah, exactly. What are we doing? No. Right. Michael Santoli, Christina Partsenevelis, and Leslie Pickard, thank you all today. Still ahead, 21,000 homes are being built in a new community out in Valencia, California, where Diana Olick is talking about what makes it so different and special, Diana.
Yeah, Kelly. So what does a cook stove in sub-Saharan Africa have to do with helping this California community leave no carbon footprint? I will tell you coming up next on The Exchange.
Digital transformation has failed to take off because it hasn't removed the endless mundane work we all hate. Automation can solve that by taking on repetitive tasks for us. Unleash your potential. UiPath Reboot Work.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Nothing can stop me!
So that's how you got into crypto?
Yeah. At Westcom Credit Union, we think your bank should be all about you all of the time. So we make it easy for you to do your banking, wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
Okay, so turn left. Take this right. Now pull into that parking space. Now put the car in park. Great, thanks so much. It's my lunch break.
You know you want that smoky, tangy, sweet, and spicy sauced and tossed Wingstop, where flavor gets its wings.
House and find a plumber, so I use Thumbtack to hire whoever I need. I don't have to make any phone calls or give out my number. I can just book right in the app. Download Thumbtack today.
Finding local pros takes forever. Thumbtack fixed that. It's the app that finds people faster. We show you local pros in your neighborhood and price range, ready to help with pretty much anything. Download Thumbtack today.
Welcome back. A massive carbon-neutral housing project is underway in California, and developers are making major headway despite all those material and labor shortages. Diana Olick is in Valencia for us with the story. Diana?
Kelly, the plan here at 5 Point Valencia is for 21,000 homes on 15,000 acres built by big names like Lennar, Toll Brothers, KB Home, and TriPoint. There will be some affordable housing and commercial space, and it will be the largest net zero carbon community in the nation. How creative do you have to get to net zero?
Well, you have to be very creative, and you have to challenge yourself, and you have to think differently than yesterday.
The homes, of course, will have solar and electric vehicle chargers. Each home will have high-performance attics that reduce the need for air conditioning, heating, and ventilation. The neighborhood's pools will be heated through geothermal exchange technology. Recycled wastewater will be used for all irrigation. But all that is not enough to get to net zero, so developers are earning carbon credits in creative ways. A methane capture program at a California dairy farm. Installing rooftop solar in disadvantaged neighborhoods in LA County. And 5 Point acquired the state's 170-acre Pine Creek forest, adding a permanent conservation easements. It's even replacing traditional 3-rock cook stoves in sub-Saharan Africa with clean-burning stoves and saving California's endangered spine flower by carving out preserves for it at the development. Now, there's already been a lot of demand here from millennials because while their baby boomer parents like to brag about the McMansions, they like to brag about their environmental awareness. Kelly?
Diana, this was fabulous. This is exactly why we wanted to have you, because what you just said, that by trying to go net zero in one California community, they're changing stoves in Africa. They bought a forest. They're putting solar panels in LA. I mean, it's almost... It challenges your sense of reality, but if this is the world that people want to achieve by making all these changes, if you can incentivize a private developer to do so in order to label his thing net zero, maybe it is a win-win.
Yeah, it's actually a real blueprint for others as well. And because there are so many companies that want to get into ESG investing, they're seeing a lot of capital pouring into that. If they can see a development like this, as vast as this one is, you know you're going to get even more capital coming into these because, again, people want to invest in these environmental projects. Kelly?
Fascinating. And I know that, of course, labor, material shortage throw a wrench in the works on top of everything else, but that was so interesting. Diana, thanks so much. Diana Olick out in Valencia today. That does it for us, but next on Power Lunch, while there are fewer than 10 million unemployed people, according to the JOLTS data, 15 million of them are receiving jobless benefits. What's behind the discrepancy? It's right after this.
Do you struggle with occasional nerve aches in your hands or feet? Try Nervive Nerve Relief from the world's #1 selling nerve care company. Nervive contains alpha-lipoic acid to relieve occasional nerve aches, weakness, and discomfort. Try Nervive Nerve Relief.
This is our collective history. Together, it's ours to protect. For new histories to be written, new records shattered, new legacies forged. CrowdStrike. We stop breaches.
There's interest you accrue and interests you pursue. Plans for the long term and plans for a long weekend. Assets you allocate and ones you hold tight. At Thrivent, we believe money is a tool, not a goal. And with the right guidance, you can get the financial clarity you need and live a life rich in meaning and gratitude. To learn more, text THRIVE to 444-555 or visit Thrivent.com.
So, what's your plan for retirement? See the world? See the grandkids? Keep doing what you love? However you plan to retire, you need to be prepared. Do you have a financial plan? Do you have a tax strategy? How much of your portfolio can you afford to withdraw? Learn more about these and 96 other retirement topics coming your way in this free guide from Fisher Investments.
If your portfolio is over $500,000, call for Fisher's 99 Retirement Tips. Our free guide shows you how to make your retirement more secure, even in volatile times like these. Call 1-800-940
Places where low-income workers, they haven't or they can't move to where those who fled the pandemic now live and work. CNBC used the JOLTS data to calculate where the massive job shortfalls are. So the graph shows 2.1 million more job openings than there were in January 2020. Where are those extra jobs? Accommodation, food service, manufacturing, trade, transport, and utilities. All of those areas, those are just the additional jobs since January 2020. Now, economists think we're going to get an influx of labor when temporary benefits end from now until September and when schools fully reopen. But there could be lingering shortages, for example, from early retirement or permanent decline in immigration. That would play a role, Tyler, in driving up wages.
What I'm hearing anecdotally, Steve, is that a lot of people are advancing their retirement. They don't want to go back to work. They don't want to go back to an office. So they're just staying out of the job market, and others are waiting for wages to come up.
That's definitely hearing that anecdotally, and it's even in the data, Tyler. One thing we know is that you were able to retire but also get unemployment benefits because there wasn't a work requirement in some of these federal benefits. So when I talk to people, Tyler, they say we'll see what happens. People may feel okay for now, but either they may get to a point where they feel like they need to come back to the workforce, or, as you suggest, wages could rise to the point to bring people back in. What we know is the participation rate is down below where it was before the pandemic hit.
All right, Steve, thank you very much, Steve Leisman. And as Steve mentioned, some expect the distortion in the jobs market to begin to level out in the fall, but that doesn't necessarily mean that the inflation caused by these distortions will go away. So what does it mean for the economy? Let's talk about that with Diane Swank, Chief Economist with Grant Thornton, Dan Greenhouse, Chief Strategist with Solace Alternative Asset Management. I hope that I got that right. Is it Solace or Solace, Dan? Because there's no solace in getting this wrong.
It's Solace, Tyler, but
Solace,
we can forgive it.
All right, thank you, Dan. Let's get to the topic at hand, and that is America's labor conundrum here. We've got more jobs on offer than we've lost, than we still have unfilled from than we've lost since the start of the pandemic. What are workers waiting for, Dan?
Yeah, I mean, I think there's clearly three things going on, or at least we the economics community in general, think there's three things going on. Some combination of childcare issues are holding people back, COVID hesitancy, and obviously the generous unemployment benefits. And with respect to the COVID hesitancy, I think it's important to note that just 4 states, New York, New Jersey, California, and Illinois, 4 what we'll call blue states, it's only 4 states, obviously, but they account for roughly a quarter of all employment. And to the extent that the population in those states is a little more hesitant about COVID than some of the others, you can kind of understand why some portion of that population might be reluctant to go back to work. And as you noted, come the fall, when school starts up again, kids are back in school, and hopefully some of the benefit top-up expires, some of the distortions that we're seeing now are probably going to fall by the wayside.
Diane, let me get you to react to what Dan just said there, but also let's layer in the question of inflation. It used to be that rising wage costs, labor costs, were the principal. When you started to see that, you really started to see inflation, and not of a transitory sort. Is that what we're seeing in the economy now? And is that wage pressure going to turn into enduring inflation?
Well, certainly that is the greatest concern, and that's what we have to watch most closely. It's certainly, well, what I sort of see it as is it's, we're sort of hitting friction on reentry. As we all come back into the economy, we've unleashed pent-up demand and some $2 trillion in saving amassed, along with 3 stimulus packages that has unleashed pent-up demand while we're still spending on goods, pivoting into services, and businesses are trying to reopen mothballed facilities faster than they can get workers to show up, either because they're in the wrong place. I think at the mobility point that Steve made was really important, is that many workers are not in the places where the jobs are right now. And that's a problem too. When you have high gas prices, you need higher wages just to get to those jobs. The question is, these frictions on reentry, before we hit a splashdown, our parachutes open and we hit the cool waters of a splashdown, are they something that's a one-time sort of step function in wages? Or is it something where we see wages continue to compound upon each other? My own take is that it is more of a step function in wages. You're still seeing some legacy effect of the hazard pay that was paid out during the height of the pandemic, and the larger companies offering that hazard pay, but it doesn't mean they're going to keep ratcheting up their wages every year and every quarter going forward. And I think that's what you need to get, the kind of vicious cycle. And that's what we're looking for not to happen this time around. But, having these frictions, interesting, the New York Fed as well, they acknowledge that reservation wages, in part because of the $300 per week, are higher, but also people who are looking for jobs in those same surveys don't realize the jobs are there yet. And that gets to this point of them not being in the places where the jobs are, and the mismatch on that as well.
Yeah.
The other issues, Steve noted, you guys noted at the top, that a lot of these jobs have come back in accommodation, food, retail, areas that were hit hardest by the pandemic. Well, those extra jobs listings from January 2020 doesn't mean we're anywhere near actually needing to hire more people. It's just reflective that we didn't have to advertise them as much. In fact, I recently heard a statistic from the hotel industry that said they were going through their cleaning staffs 3 to 4 times a year. The entire staff in terms of turnover.
Wow.
That's a lot of turnover before this all happened.
I was going to ask Dan this, Dan, but I'll ask it to you as well. I am curious because this pandemic collided with a lot of millennial household formation. What about the women who don't want to go back into the labor force and don't have to, because now there are new ways for them to either work from home or be at home in a lower cost area? Maybe their husband has more commuting flexibility. What impact will that have over time?
Do you want me to go first?
Yeah, that's a big issue.
Sorry, Dan, go ahead.
Go ahead.
Yeah, listen, I think...
Go ahead, Dan.
Thank you. All these items, I think, are on the margin. There's no doubt that the economy looks different today than it did pre-COVID, and there's going to be pockets of differentiation, if you will, in terms of behavior post-COVID as opposed to pre-COVID. But as a general rule, we're talking, Kelly, as you noted, about 9 million unemployed people. They're not all different today than they were pre-COVID. Some portion of them fall into those 3 buckets I talked about before. And as Diane noted, there is a little bit of a mismatch here as the economy reopens. But the most positive takeaway is that some of those things are definitely going to fall by the wayside over the next couple of months. And so while there are some issues here in the short term, and perhaps some portion of the unemployed population is going to act differently afterwards than before, I think the things I talked about before, the COVID hesitancy, the generous unemployment benefits, if you will, when they start falling by the wayside, I don't see any reason why higher gas prices or not knowing there's a job are going to prevent the million-plus job reports that we thought would happen. I don't see any reason why they would prevent them from happening in coming months.
Diane, final quick thought to you.
Yeah, I do think this is just the natural part of what was an extraordinary crisis, and how it is causing extraordinary disruptions as we get back up and try to ramp up. There's going to be mismatches. I think that's a process and a step function. It's not something that's triggering a vicious cycle. And clearly the bond market doesn't see it, given what bond yields are going. If you ever told me we would have this much inflation and this much debt and the 10-year at 1.5, I would never forecast that. So
that's a whole other conversation.
Exactly, that's part 2. Yeah.
All right, guys, thank you.
There you go.
Thank you so much, Diane and Dan. Kelly, in my town, our next door neighbor works with a florist, and the events business drives the floral market. And the events are coming back. There are proms, there are graduations, there are parties, and so on and so forth. She says, I cannot find enough workers to keep up, to make all of the arrangements that people want. Same with a woman in town who owns a small and very nice bake shop. She says, I just can't find the workers who want to come in early and work long days and make the cupcakes that I can sell.
And the thing about that, as you just mentioned too, is if you literally can't make enough for what people want, it slows the economy. It does. That's how you get high prices that can hurt as much as cause that higher cycle.
And customers get really frustrated with you. Yeah. What do you mean you can't give me 40 table arrangements Saturday? You can only do 25.
We're all finally ready for the reopening.
Yeah, so it really is friction. Yeah. It really is some friction.
And it's happening everywhere. And whether inflation is temporary or not, what should you do to get ready for it in terms of your investments? In fact, is it time to look overseas? We'll talk about that next. Plus, look at Merck. It could stand to reap a windfall from its COVID-19 treatment. The stock leading the Dow today with a 2% gain. More in a moment. And take a look at shares of Virtue Financial, which are dropping after SEC Chair Gary Gensler last hour said he's looking into payment for order flow. Ahead, we'll speak with Virtue CEO Doug Sifu about the future of market structure. And tomorrow on Power Lunch, we are devoting the entire hour to the crypto craze. We're looking at the risks and the opportunities, the problems and the promise. Stay with us.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to wait for it.
I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Boom! Nothing can stop me!
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy on the roof?
Investing in Bitcoin begins with GBTC.
529 plans could not only be used for college expenses, but also private school.
As well as apprenticeships, technical schools, and graduate schools.
At Westcom, we think your bank should be all about you all of the time. That's because we're not a bank at all. We're a credit union, a not-for-profit financial co-op owned by our members throughout Southern California, people just like you. So we're all about finding new ways to make banking easier, better, and more rewarding, all to help you build a better financial future. Bank where it's all you all the time. Open your account today at westcom.org/welcome.
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving. Until they came to us. Keck Medicine of USC. Beyond exceptional medicine.
The future of fitness isn't dumbbells. It's revolutionary digital weight that learns as you get stronger. So you can be your strongest. Purchase Tonal today and receive Power Beats Pro wireless earphones from Beats by Dre for Father's Day.
Welcome back to Power Lunch. We're tracking outperformance in some of the big pharmaceutical names. Merck, Johnson & Johnson, and Pfizer all up a little bit over 1%, we could say. No new highs for any of these names, but Johnson & Johnson is currently trading within 5% of its January 26th all-time high. And Merck is the best performer of the group after striking a deal to supply the government with an oral treatment, currently in a phase 3 trial that is designed to treat mild to moderate cases of COVID-19. Tyler, back to you.
Christina, thank you very much. Now, we've heard all about inflation in the U.S. economy and what we're seeing right now. Everyone agrees it is here one way or another. Just go to your gas station, you'll see it. No one knows how long it will stay, but no matter how long it does stay, might you want to change your investment strategy? Our next guest has a potential alternative: currencies. Currencies, not cryptocurrencies, currencies. Joining us now to discuss is Rebecca Patterson, Bridgewater Associates Director of Investment Research. Rebecca, welcome. Always great to have you with us. Let me begin, though, before we get to that and the discussion of inflation, with something in my notes that really stood out to me. And you observed that in the last 40 years or so, financial markets, the financial economy, has outperformed the real economy probably by a multiple. Maybe it's 10x. I don't know what it really is, but it's a lot. And you say that now it may flip and the real economy may outperform the financial economy. Well, if the real economy is growing at 2%, 2.5% a year, and that's the base rate, that doesn't speak very well for what I should be expecting on my financial assets. Explain the consequences.
Sure. Well, it's great to be here. Good to see you virtually. So the idea here is that over the last several decades, we've seen rising profit margins. Obviously, that was transferring wealth more to capital holders than the broad economy. We were seeing declining interest rates, which obviously supported financial assets more than savers in the economy. And when we look ahead, there are reasons to think, we don't know for sure, but there's reasons to think this could change. And in some ways, that could be great. It could address some of the problems that have come through this, which includes a lot of wealth inequality and populism. But what could make it change? Well, we're talking about higher corporate taxes. We're talking about the possibility of more regulation around certain industries in particular. We are looking at higher inflation, possibly a sea change in nominal interest rates. Now, with inflation, you could still have low real yields, but you could have higher nominal rates. And we still are seeing fiscal easing. And we believe that policymakers will continue to push that fiscal gas pedal until they run into a barrier, whether that's excesses, really weak currencies, inflation, et cetera. And so we could be looking at a period of time where you do see the real economy doing better than the financial markets. And so as investors, it's not something we've had to get our heads around for a very, very long time. So just thinking about, well, what would I do? You know, we're still confident you can make good returns in that environment, but you might have to do it in some different ways. And that probably segues us into inflation.
Yeah, that is the perfect segue then to the next. So what do I do? Where do I put my money if implicit in what you're saying is that the traditional kinds of financial assets that have performed well for me may not in an era of higher interest rates where maybe my money market fund becomes good again. But so tell me
wouldn't that be a nice change?
Yeah.
Gosh, you can go to your bank branch.
Right.
Yeah.
So tell me what to do.
Well, you know, there are plenty of ways to still get a good return. When you think about equities, of course, there's a lot going on under the hood. What companies are going to be able to pass on higher prices to their end customers, for example? So some equities will do better in this world than others. But if you look at equities overall, and we go back over the last several decades, when we've looked at 20 different periods of rising inflation, equities had overall positive returns, but less than average. So they underperformed. And specifically, they also underperformed not only their average return, but they underperformed broad baskets of commodities, they underperformed gold, they underperformed inflation-linked assets. And so part of this new world that we're thinking about, a strong real economy, strong enough, right? But one with more inflation in it, you want to make sure you're looking at your portfolio and saying, am I protected? And that gets to the question you all started out with. Is this going to be sustained or temporary inflation? I don't think anyone knows for sure. But what we do know is that when we look at the measures we use to gauge inflation pressures at Bridgewater, they're at the highest level we've seen in 40 years. And what else we know is that a lot of the forces that have helped pull inflation down secularly over the last few decades, things like globalization, things like less pricing power for workers, we're not sure if those things are inflecting, but they're definitely pausing and they're more in question. So the probability of this suggests you should be reviewing your portfolio.
So quickly turn third and round it to home for me. Where do currencies fit into this strategy? And are we talking about developing country currencies? Are we talking about European currencies, developed market currency? What?
Sure. So let's just stick with developed markets for the moment in the interest of time. So if you look at the last, call it 20 years, we've had low, stable inflation. And so when you saw a tick up in inflation, usually that was associated with an improving cyclical story. You got expectations that central banks would tighten, so you had higher yields. That was good for the currency, but it has not always been that way. The previous several decades, if you had higher inflation, you got weaker currencies, and that actually tends to be the norm. So what we're seeing today is the market is starting to discount higher inflation. They are not discounting more currency volatility. That is still extremely low. And so the risk we just think people should be aware of is that if inflation continues to pick up, and we see that translating into more volatility and not necessarily central banks reacting the same way, that's going to translate into currency volatility. And so as a global investor, For the last 20 years, the bulk of your return came from the asset, not the currency. Now you need to be thinking about both levers of your total return a lot more.
Got it. Rebecca, thank you so much.
Great to see you.
Great to see you, Rebecca Patterson. We appreciate it. Cal?
Fascinating. Still ahead, Coinbase is higher today, but getting its first ever sell rating on Wall Street. We're all over the crypto trade. Coin's up about 2.5%. And check out shares of Casey's General. The stock is sinking despite some stronger than expected results, down 4.5%. We're going to talk to the CEO about consumers craving for pizza, where inflation is creeping in, and much more. Stay with us on Power Lunch.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
Incomparable design makes it beautiful. State-of-the-art technology makes it brilliant. The visionary Lexus NX.
Lease the 2021 NX 300 for $359 a month for 36 months.
Experience amazing at your Lexus dealer.
Hey, Lily, I need a new wireless plan for my business, but all of my employees need something different.
Oh, we can help with that. Okay, imagine this, your mover, Rob. He's on the scene and needs a plan with a mobile hotspot. We cut to downtown. Your sales rep, Lisa, has to send some files, like ASAP.
So basically, I can pick the right plan for each employee.
Yeah, I should have just led with that.
With AT&T Business, you can pick the best plan for each employee and only pay for the features they need.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
This is what 30 minutes of boot camp tastes like. Come on, Peloton. Let it flow. Reach all the way up.
Check your vibe. It's time to grind, Peloton. Let's turn it up. Come on.
What's up, hustlers? Welcome to Peloton Outdoor. Let's get jogging.
Find your rhythm, baby. 1, 2, 1, 2. So many Peloton newbies on the leaderboard today. Welcome to the family.
The Peloton bike starting at $49 a month. All access membership separate.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from a resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
A CNBC exclusive. Reddit co-founder Alexis Ohanian. An inside perspective on the meme stock frenzy, crypto markets, and where he's investing his money now. Squawk Box 6 Eastern. Watch Squawk Box anytime on demand.
All right, folks, welcome back. Time for today's Power Movers. First up, we got Lordstown Motors, and there you see it spiking right now. The company's saying there was substantial doubt about its ability to continue, but it just announced they are in talks with parties to raise capital. So you see, whap, and then coming back up a little bit.
Fighting into positive territory. Another stock getting targeted by Reddit traders, real estate investment firm Geo Group. It's declining fundamentals and climbing short interest, making it a prime target for a Reddit squeeze, they say. When we wrote this, it was up 44%. It's now up 57% today.
Close your eyes, open them again. It's up 58%. And finally, Raymond James. Initiating Coinbase with an underperform marks the first real bearish rating on Wall Street for that crypto exchange. The firm saying they expect significant pricing degradation. That's a word you don't hear a lot. Degradation over time when it comes to trading commissions on that one. For more on that call and others, go to cnbc.com/pro. Meantime, ahead on Power Lunch, a pulse on the economy. Casey's General Store says COVID disruption is wearing off, and it has all to do with pizza and soda. That's how they know. The CEO is up next. Plus, the rise of Reddit. Where did the retail trader rebellion start? And the hunt for tax leaks. Federal investigators launching an investigation into the release of billionaire tax information. All of this when Power Lunch returns.
These days, you have to keep everything moving and reinvent the wheel.
We got a huge increase in orders.
With a hybrid,
I think we can handle that.
you can do both.
I'll be right in.
That's why manufacturers are going hybrid with IBM. With Watson on a hybrid cloud, factories can use AI to automate the little things so they can focus on the next big thing. Businesses that want to innovate at scale are going with a smarter hybrid cloud using the technology and expertise
Nice work, guys.
of IBM.
Some say this is my greatest challenge ever, but I've seen centuries of this. With a companion that powers a digital world traded with a touch. The gold standard, so to speak.
McLaren has a lot to build upon.
They're betting on a new key partner to help get them there.
Late braking, what do you think? Love it or no chance?
Daniel, no chance.
Let's put up a poll. Love it, love it, love it wins.
We need that part.
It's nearly done.
Can you repeat that? That's better.
It's done.
With WebEx, the McLaren Formula One team is collaborating like never before. Introducing the WebEx Suite, driving hybrid work.
New projects means new project managers. You need to hire.
I need Indeed.
When it's others first, you second. We see you. When you give tirelessly, we see you. Summer's Eve sees all women. Loving unconditionally. Relaxing rarely. And Summer's Eve puts you first. With specially designed, gentle pH-balanced cleansing washes that more women reach for. Summer's Eve. We see you.
Yeah! Sam, Elmo!
Oh, hey, Julia. Are you ready to play band with us? I'm gonna play my clarinet.
And Elmo's gonna play his drum. Drum loud.
Oh, well, you know what to do, Julia.
Julia knows.
With Julia's autism, loud sounds can be too much.
But she still loves to make music. Play band.
Early screening for autism can make a lifetime of difference. Find out more at screenforautism.org.
Looking for more distance, better dispersion, and more confidence. That's exactly what you'll find when you come to Club Champion. Take a look at this wall. Where else can you find more than 50,000 hittable club combinations to help you improve your game? For Father's Day, buy a Club Champion gift card of $150 or more and receive $75 towards a purchase. Visit ClubChampionGolf.com for details.
Welcome back to Power Lunch. UPS, with its biggest decline since October 28th following its Investors Day. Investors apparently not that happy with the company's 2023 forecast. Revenue between 98 and 102 billion. Overall margin between 12.7% and 13.7%. Domestic margin between 10.5% and 12%. CEO Carol Tomei says small and medium-sized business shipping, that continues to be a revenue driver. SMB volume increasing 36% last quarter domestically. The company not giving EPS guidance, but CFO Brian Newman told analysts it would be fair to model fiscal year 2023 EPS above $12. Tyler, back over to you.
Frank, thank you very much. The oil market closing for the day. Let's go to Pippa Stevens at the commodity desk. Pippa, in the house.
Hey, Tyler, it's so great to be with you here in Englewood Cliffs. And to the oil market we go. It's been a volatile day for oil today. Crude started the day at its highest level in more than 2.5 years, but those gains quickly faded after a disappointing inventory report. Let's check on prices here. WTI down about 0.2% at $69.86. Brent crude dipping about 0.1% to $72.14. So crude stocks declined last week for the third straight week, falling by 5.2 million barrels, and that was larger than analysts had been expecting. But on the flip side, a surge in gasoline and distillate stocks offset any gains from that crude draw. So basically, Memorial Day weekend didn't provide that surge in jet fuel and gasoline demand that traders had been expecting. Refinery utilization rates are also now at their highest level since before the pandemic began. So if demand doesn't keep up, then they ramped up production at exactly the wrong moment, guys. Back to you.
Pippa, I missed the bookcases, but you look great there in front of our tiles. We love having you in the house.
It's great to be here.
All right, fantastic. To the bond market we go, and Rick Santelli, he has no bookcases, but he's got the CME. You're watching, Rick, I'm told, the CPI tomorrow for a clue on whether this inflation is transitory or not. Explain.
Well, you know, Tyler, it's very interesting because if you look at a chart of CPI year over year from our last look a month ago, you'll see that up 4.2. That was the highest level since September of 08. And if you look at CPI year over year core, it was 3%, the highest since 1996. But something is going to change tomorrow. Let's go to the whiteboard, shall we? Here's the Consumer Price Index CPI month over month. Okay, March, April, May. And on headline, you see -3, -0.7, -0.1 for May, which is what we're going to be looking at tomorrow for year over year. And if you look at core, it's the same thing, -0.1 from a year. But that's the end of it. There's no more negative numbers, and there's no more negative numbers in core. So when we look back tomorrow, we might see some moderation in inflation. And indeed, you can see this dynamic, this thought process, Tyler, showing up everywhere. Big block trades and Eurodollar options reversing and lowering percentages of the closest Fed tightening. You see what's going on in treasuries. We're down about 6 basis points. Part of it's technical, but part of it is just a lot of buying, thinking this may be transient. After tomorrow's 8:30 number, when I bring it out, Tyler, we're going to have many more clues about whether it's transient or anchoring. Kelly, back to you.
Rick, while we have you, there's a lot of demand for these reverse repos again, over $500 billion today. What does that tell you?
Yeah, I'll tell you what, I think it's huge. You're right. We're over $500 billion for the first time in the reverse repo market. Forget it. It's a complicated, in-the-weeds topic. Think about it this way. Institutions have so much money, and they don't want to lose it, so they park it on this Fed facility, which is basically giving them 0 interest rate versus a negative rate penalty. The bigger it gets, the more we know how much liquidity is out there. Ultimately, that liquidity is going to move somewhere, and that's the big question.
Is that the number you were talking about? Was it yesterday or the day before where you said there's all this money on deposit at the Fed? Is that money?
Exactly. Yes, that's
Bang,
the money.
I got it.
You know, the best way to think about it is a parking lot. It's a parking lot of cash. And many believe that by about July or August, Tyler, that number is going to be $800 billion per day.
Whoa. Mr. Santelli, thank you.
Especially if yields keep going the way they're going. Check out shares of Casey's General. They're down about 5%. Despite reporting solid results, they have rising traffic in stores and on the roads. It's boosting sales up almost 13% in the stores, and at the gas pumps up more than 6%. Shares are down about 4.25% right now. Casey's is one of the nation's largest convenience store chains. They have 2,300 locations across the Midwest and South. And with pizza now adding to their bottom line, it's actually the country's 5th largest pizza chain, Ty. The stock is up about 15% so far this year. Darren Rebellas is president and CEO, and he joins us now. Darren, welcome. So let's just, I guess, look for a moment at why the street is disappointed with these results. I mean, as a proxy for so many stores like yours, tell us about, looking through the summer into the fall. How strong is demand going to be? What kind of workforce do you anticipate you're going to have? What's going to be going on with pricing pressures? Can we stay in the sweet spot or not?
Yeah, hey, Kelly, thanks for having me, and it's great to be here. Yeah, like you said, we just wrapped up a record year for us. 18% earnings per share growth year over year as an all-time high, $729 million in EBITDA, again, another all-time high. Our comps have great momentum into the fourth quarter, like you said, and really with strength in our prepared foods business. So, I guess what I'd say about today's trading is that it's a great buying opportunity for investors to pick up our stock at a little moment in time when it's pulling back a little bit. But we see a lot of momentum moving forward. We've already started the first quarter, our fiscal first quarter, off with great momentum as we come out of the pandemic. And, one of the things that's been unique about our business, like you mentioned, is that we have this big prepared foods business. And when the pandemic hit last year, that was probably the portion of our business that was most negatively impacted, as self-serve food was shut down in a lot of municipalities and people weren't commuting as much. We're starting to see that unravel now. Morning traffic is growing. We're not all the way back to 2019 levels, but we certainly feel much better about where that business has gone. Our breakfast business is starting to improve. Our lunch business is starting to improve. And so we expect that to continue to improve over the course of this year.
I know CEOs hate to talk about their stock price on any given day, but let me let me ask you whether you think that the market is misunderstanding something, because the numbers you're putting out there sound awfully, awfully good. So let me get you to answer that one first. And while I got you, do you make more money selling gasoline when prices are high or when prices are low?
Well, I'll go ahead with the stock first. I think one of the focus areas on the call this morning was our outlook on operating expense, and it was a little bit higher than I think people were expecting. Now, there's reasons for that. We've made the 2 largest acquisitions in our company's history, about 150 stores in total, and those come online really in first quarter. And so I don't know that was fully captured. So we said operating expense would grow mid-teens %, but that was driven off 9% store growth. So most of that is just incremental units. Our actual same-store sales run rate on operating expenses very much in line with our historical numbers. So I know our team is on sell-side calls as we speak, and I think we're sorting through all that. So I expect that to be somewhat of a temporary reaction.
Okay, so we got that one out of the way. How about, do you make more money when gas prices are high or when they are low? I assume your volumes are up compared with a year ago.
Our volumes are up. Yeah, we just wrapped up the fourth quarter with volumes up about 6.5% over prior year. So getting better, certainly. We don't necessarily make more money on gasoline when prices are high versus prices low. That margin tends to normalize at a rate. It's usually more the journey that you take. When prices are moving up, the commodity price tends to move faster than the retail price, so that can compress margins in the short term. And then on the backside of that curve, when costs start to drop, retails fall a little slower than the commodity costs, so the margins widen. But over time, those things tend to normalize.
All right. Darren, thanks for your time today. We'll check back in with you soon. Darren Rebella is of Casey's General.
And El Salvador becoming the first country to make Bitcoin a legal tender. Does a move like this make Bitcoin seem more legitimate to investors? Our traders will break down Bitcoin next. Plus, don't miss the CNBC Evolve Global Summit coming up on June 16th. I'll be there. We'd love to have you there too. Go register. Go to cnbcevents.com/evolve. Power Lunch back after this.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
You need a financial plan that can help grow and protect your money. An annuity can help cover essential expenses in retirement so you can live the life you want. This is what an annuity can do. Learn more at protectedincome.org.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea, it's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3 AI. This is Enterprise AI.
My husband Ben and I opened Ben's Chili Bowl the very same year that we were married. That's 1958.
The Chili Bowl really has never closed in our history. When the pandemic hit, we had to pivot, and it's been really helpful to keep people updated on Google. We wouldn't be here without our wonderful customers. We're really thankful for all of them.
Come on in.
My retirement plan with Voya keeps me moving forward, even after paying for this. Love you, sweetheart. They guide me with achievable steps that give me confidence. This is my granddaughter. She's cute like her grandpa. Voya doesn't just help me get to retirement, they're with me all the way through it.
Come on, Grandpa!
Later. Got grandpa things to do.
Grandpas are the best. Well planned, well invested, well protected. Voya, be confident to and through retirement.
Open Trading puts you in control of one big world of credit trading, where 1,800 trading firms access $16 billion in daily liquidity, saving over $1 billion in combined annual transaction costs. Market access.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed, you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from a resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
Stay restless with the icon that does the same. The RX, crafted by Lexus.
Get 1.9% APR financing on the 2021 RX 350.
Experience amazing at your Lexus dealer.
Crank it all the way up.
Yeah! Get some! Sorry!
Rated PG-13.
Welcome back to Power Lunch. I'm Seema Modi. Bitcoin clawing its way back after hitting a 3-week low on Tuesday. The flagship cryptocurrency now up over 9%. This as El Salvador pushes ahead with making the crypto an official legal tender, the first country to do so. Has the bull case improved, or is this more of a relief rally? Let's ask the Trading Nation team today. Todd Gordon of TradingAnalysis.com, Delano Saparu of New Street Advisors Group, and of course El Salvador. Todd, very small country, so it doesn't really legitimize the use case behind cryptocurrencies. At the same time, you have Gary Gensler of the SEC voicing concerns around the use of Bitcoin. Your thoughts about where it goes from here?
Yeah, listen, I'm a long-term holder of Bitcoin and GBTC, Seema. We were recently short Bitcoin. We've covered it. We have a trading service. We're kind of neutral. So if we look at the technicals, you saw a 53% drop in 2019, 62% drop in 20, and we just saw a 53% drop. So we could go a little bit lower, but right now I think we're neutral. There's a lot of sort of bad things, bad narratives weighing against it. So we have investors' reluctance to consider it a store of value. As the network effect is slowing, they have competition from Ethereum's network. You have China, Turkey, and Indian governments trying to regulate. You have Elon highlighting the environmental concerns of the mining and the latest decision not accepted as payments. And the other thing with CPI coming up, watch the tips inflation break even. It's starting to roll over. And if that CPI number is not hot, watch Bitcoin's reaction, and that'll start to tell you maybe it's an inflation hedge. So we're neutral right now.
An inflation correlation with Bitcoin. Didn't even think about that, Delano. And as Todd was just pointing out there, every time we've seen a sharp pullback in Bitcoin, it has come back. Is that enough of a reason to get in here?
Yeah, see, man, last time we spoke about Bitcoin, I was still in a very buying trend, and I'm still there. You know, I'm still bullish and still buying. And I think a lot of the reasons that was mentioned by Todd is obviously you have an adoption from a country that is actually using it for the use case that a lot of people are positive on. So you're seeing a country that's going to possibly be able to level the playing field for a lot of folks in the country. They mentioned 70% of people in the country aren't able to have financial services readily available. So that's one of the use cases that a lot of people are bullish on when it comes to cryptocurrencies in general. So we're definitely still buying and definitely still bullish.
Looking to break above 36,000 here. Delano and Todd, thank you for joining us today. And for more Trading Nation, head to our website, follow us on Twitter. Tyler?
All right, thank you very much, Seema. And speaking of Bitcoin, tune in to Power Lunch tomorrow. We're going to spend the whole hour. By the end of the hour, even I am going to understand it. It's a crypto edition. We're going to hit every single angle of the crypto market, from investing in it to regulation, ransomware, mining, environmental impact. That's tomorrow, right here, 2 p.m. Eastern Time on Power Lunch. Looking really forward to that.
As am I. NFTs.
NFTs?
Tweet us any of your questions. We'll try to answer everything.
All right.
At Power Lunch. Shares of Virtue Financial are falling sharply today. SEC Chair Gary Gensler has just called for a broad review of stock market structure, including pay for order flow. They're down about 7.5% on this news. We are going to speak with Virtue's CEO about this in just a moment. You can bet he's got a lot to say. Don't go anywhere.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
For entries into breakouts, some traders use buy-stop limit orders placed above resistance levels. Unlike regular buy-stop limits turn into limit orders when the stop is triggered. Thus, if a stock closes below the stop price one day and opens far above the limit price the next, a trader will not buy the stock. I'm Lee Bohl, and Schwab is the better place for traders.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
When I was your age, things were different. Getting Shiloh's food was never this easy. Mom's workout class was all the way downtown. I didn't get to design my own room. And now Dad thinks he's a big, fancy chef.
Wow. I wonder what it's gonna be like when I'm your age.
Interested in Ethereum? Just type symbol ETHE and
at Westcom Credit Union, we think your bank should be all about you all of the time. So we make it easy for you to do your banking, wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
When it's others first, you second, we see you. When you give tirelessly, we see you. Summer's Eve sees all women, loving unconditionally, relaxing rarely, and Summer's Eve puts you first. With specially designed, gentle pH-balanced cleansing washes that more women reach for. Summer's Eve, we see you.
More distance, better dispersion, and more confidence. That's exactly what you'll find when you come to Club Champion. Take a look at this wall. Where else can you find more than 50,000 hittable club combinations to help you improve your game? For Father's Day, buy a Club Champion gift card of $150 or more and receive $75 towards a purchase. Visit ClubChampionGolf.com for details.
Welcome back to Power Lunch. I'm Christina Partsinevelos, and we're getting a check on several meme stocks at this hour. AMC, Clover Health, and Wendy's all down more than 10% at the moment. And the volume on these stocks is absolutely huge, especially when you compare it to some of the similarly priced stocks in more stable corners of the market. $19 Clover, for example, already trading more than 320 million shares today. That's almost 700% of its 30-day average volume. $21 Regions Financial, on the other hand, trading well under its 30-day at just 3 million shares. Same situation with Wendy's and utility CenterPoint Energy. Similar prices, but Wendy's has traded 32 million shares today, while CenterPoint is left behind at just 3 million. Just another crazy metric to watch with these meme stocks. And Power Lunch will be back.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
That building you're trying to buy, you should 10X it.
10X it?
10X is the world's largest online commercial real estate exchange. You see it, you want it, you 10X it. It's that fast. If I could, I'd 10X everything, like these salads. Oh. Or these sandwiches. 10X does the same thing, but with buildings.
Sweet.
Oh, no, he wasn't. Oh, actually, that looks pretty good. See it, want it, 10X it. Yum.
If you're 55 and up, T-Mobile has plans built just for you. Switch today and get 2 lines of unlimited and 2 free smartphones. Plus, you'll now get Netflix on us. All this for up to 50% off versus Verizon. It's all included. 2 lines of unlimited for only $70. And this rate is fixed. You'll pay exactly $70 total. This month and every month. Only at T-Mobile.
You see sales forecasts based on guesses. We see a robotic system getting a firmware update, a typhoon clearing in the South China Sea, Clean energy is trending on social media, and we see a 38% increase in demand for solar panels. See how C3 AI CRM for manufacturing analyzes thousands of data sources to make hyper-accurate revenue forecasts. C3 AI. This is enterprise AI.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
Wealth is breaking ground on your biggest project yet. Worth is giving the people who build it a solid foundation. Wealth is shutting down the office for Mike's retirement party. Worth is giving the employee who spent half his life with you the party of a lifetime. Wealth is watching your business grow. Worth is watching your employees grow with it. Principal, for all it's worth.
Welcome back. The rise of Reddit, Robinhood, and retail traders have been shaking up the whole financial industry. In the last hour, we heard from SEC Chair Gary Gensler, who said he now wants a broad review of stock market structure.
It doesn't mean better execution, best execution within the rule. And there's this thing called payment for order flow. And we've had some cases as recently as the end of last year where there's this inherent conflict where somebody paying for our trading, our order flow, is saying, well, I can give you a little better execution or a lot better execution depending how much I pay you for that order flow. So I think we need to take a close look at that.
And those comments are sending brokerage stocks like Charles Schwab lower today. Schwab's down almost 3%. Virtue Financial down more than 7%. In fact, the company's CEO, Doug Cifu, joins us right now, along with our own Bob Pisani. Bob?
Thank you, Kelly. Fresh off his appearance at the Piper Sandler Global Exchange Conference, Chair Gensler joined me and implied that there is too much concentration among those market makers providing payment for order flow and that investors may not be getting the best execution. Virtue Financial is one of those market makers. So, Doug, is it true? Are investors who are getting best execution when they send their orders to you?
Yeah, thanks, Bob, very much for having me. I really appreciate it. And I really very much enjoyed watching the chairman's comments today, and we really look forward to engaging with him. Look, I mean, the ecosystem for retail is incredible. We'll be releasing a study later today that really goes through what true price improvement is. And Virtu on its own in 2020, measured under any standard, provided $3 billion of price improvement back to retail investors. An investor in this country can pick up a smartphone of any type and for no money get a better price than just about any institutional investor in this country. It's phenomenal what has happened. So I welcome the study and review of this because I think when smart people look at this and the chairman is incredibly intelligent and very diligent, they will conclude that the ecosystem really works for retail investors.
Another point that Chair Gensler was making is that this is commission-free trading, but it's not cost-free trading, that there is a cost that is taken out of this. The implication here somehow is that maybe you are exacting a toll, maybe you're stealing data from people in some way. Do you take data from people and use it? Do you have some kind of informational advantage? What really goes on here? And what was Chair Gensler talking about?
Yeah, I mean, to be candid, that one had me scratching my head a little bit because I've heard that from critics of all different types, and frankly, the opposite is true. The brokers from which we receive orders are world-class organizations, multi-billion-dollar organizations. You know their names. They protect their clients' information. We never see anything. There's zero client identification. We just get an order, 5,000 shares of Tesla, we want to buy it. It comes from a broker. We have no idea who the underlying client is, whether they sent that order today and 5 minutes later they're saying to send the same order or not. We have no clue. There's zero information. In fact, the market maker is at an informational disadvantage because we're just sitting there two-sided all day across 200 different brokers saying, send us your orders. We have to take them. When they're market orders, we can't reject them. So the informational asymmetry is actually against the market maker. I really, really look forward to demonstrating that. The narrative somehow that we're Facebook and we have this information advantage is just categorically false.
Chair Gensler also said that you, as a market maker, could have a bit of an advantage because you could transact in sub-penny increments, whereas the exchanges could not. Would you have any problem if they allowed exchanges to conduct transactions in sub-penny increments?
Look, we welcome competition. In fact, 40% of the retail orders that are sent to Virtu, we don't internalize them. We actually try to reflect them on exchanges. We try to get liquidity. We reflect non-marketable limited orders on exchanges. And if there was more midpoint liquidity on exchanges, I'll tell you what, Bob, it would save us hundreds and hundreds of millions of dollars of both price improvement and exchange fees. So we'd be happy to have more partners that would post liquidity at midpoint on exchanges. We welcome that. My friends at Citadel have said the same thing in public testimony. So this isn't about lack of competition. There are 8 wholesalers. There's 13 or 14 or 15, I lost track, national security exchanges. There's 40 dark pools. All of us are trying to compete for those retail orders. The retail brokers are really smart. They're incredibly sophisticated. They're multi-billion-dollar organizations with as much technology as one could buy. They send orders to all 60 to 70 of us, depending upon where they think they can get best execution. That's their obligation to their client. And to suggest that somehow that those gigantic institutions are somehow falling down to duty, I just don't buy it. And I know factually, because I see the data, that that's not correct. So we look forward to engaging.
I know you're going to be talking to the SEC about this. I just want to move on before I let you go to the meme stocks. Sure. Meme stocks. We've been talking about this for days now. You're very involved in the trading and then the execution of that. Do you have any observations about the volatility of these meme stocks? And you as a market maker, what observations do you have about the nature of meme stock trading?
Look, I mean, obviously, we see the same things that everybody else would see, which is, it's driven off of momentum and there's significant momentum. The one thing that I would say is we have 2 sides to our business. We have a retail business and an institutional business. It should not be lost on people. This is not solely a retail phenomena. There are meaningful professional traders that are engaged in trading both in the cash equities market and in the options market. And that's what our markets are for. We should be here to make that as frictionless and as transparent and as reasonable as we possibly can. That's our job, and that's what we do every day. But this is not solely, a band of retail traders trading these stocks. There's a lot of institutions and professional traders, speculators, whatever you want to call them, engaged in this in both the cash equities market and the options market. We want to make sure that there's appropriate suitability. People actually know what they're doing.
With his little headset there. Did I hear him correctly saying that the retail investor can get as good or better a price than the big guy?
That's his argument. We'll see if it wins the SEC over as the shares struggle today. Thanks for watching Power Lunch, everybody. We'll see you tomorrow for our crypto special. Closing bell starts right now.
That sounds good, Kelly. Welcome, everyone, to Closing Bell. I'm Sarah Eisen here at the New York Stock Exchange. Will today be the day that we finally set a record for the S&P 500? The index is trading right around those levels as we head into this final hour of the session.
Finally, since a month and 2 days ago, but we get the
Early
point.
May.
I'm Wilfred Frost. Let's have a look at what's driving the action today. Treasury yields are falling again, with the 10-year yield dipping below 1.5%. That's giving a lift to the tech sector, which is slightly outperforming. The meme trade remains in focus as one of the original Reddit names, GameStop, gears up to report results. Meantime, Clover Health and AMC are pulling back. And crypto is recovering after a rocky start to the week. Bitcoin up 10% as El Salvador officially adopts Bitcoin as legal tender. 59 minutes left in the session.
Coming up on today's show, 3 great reads on the consumer and the state of recovery. We'll talk to the CEO of Spirit's giant Brown-Forman as that stock pulls back following sobering earnings. Plus, we'll talk about the barbell approach. Literally, the CEO of Planet Fitness tells us whether customers are returning to gyms or choosing to stay and exercise at home. And we will join by National Retail Federation CEO Matthew Shea with a big upgrade to his retail sales forecast just this afternoon.
Let's get straight to the big stories we're watching today. Mike Santoli's tracking the market action. Kate Rooney has a closer look at the meme stock movers. And Sarah's covering the big drop in shares of Campbell's Soup. Mike, kick us off with the broader markets, please.
Yeah, Wilf, really similar story to the last 3 or 4 days, hugging in a very, very tight range, the S&P 500. You mentioned May 7th was when we finally hit that record high, the last one that we closed at, 42.32. It's basically right there, uncommonly static activity, but really below the surface, plenty going on in terms of energy still being strong, bank stocks pressured by those dropping yields, but then also technology stocks slightly outperforming the S&P since it last hit that all-time high. So that's been the push-pull that's kept the overall index in place. Mentioned tomorrow we have the Thursday CPI number for May coming out. Now, with this flare-up in inflation expectations has cooled off a little bit. Take a look at the market implied 10-year inflation rate, otherwise known as the inflation break-evens. It's derived from the pricing of inflation-protected securities. So this was a month ago, right here. That's the peak above 250. It's around 235, 236. So it's still above the average for the past couple of years, but it shows you that the market, at least, is not as postured for a flare-up in inflation as it was back then. And in fact, it accounts for part, but not all, of the drop of the 10-year Treasury yield over that time. Got below 1.5 today. It was above 1.75 back in March. So this shows you perhaps that we're kind of going to take it more in stride if we do see a month-by-month uptick in inflation. And take a look at the stock versus bond equation year to date. It really explains why there's been this persistent and unexpected bid in treasuries, or at least partly explains it. It's just the performance of the S&P 500 year to date against a big portfolio of long-term bonds. Now, you see still massive outperformance by stocks. So you have this rebalancing trend in favor of bonds out of stocks. Now, they have firmed up here recently as yields have come down, and that's right around when stocks have flattened out. Some reporting from B of A this week that pension funds are now basically fully funded at this point. What that's going to mean is they're going to try to lock in those levels and maybe actually buy more bonds going into quarter end. So it helps explain the counterintuitive idea that bonds, in fact, have come in even as we got through this economic recovery partway, and of course, inflation is higher than we were used to, guys.
Mike, doesn't look quite like we're going to get that record close at the moment, a handful of points away from it on the S&P 500. The longer we move sideways, waiting to break higher, is that actually better for the kind of prospects of breaking meaningfully higher as and when we do get there?
It should. I mean, in theory, the market's getting pretty tightly compressed here. So therefore, whichever the first sharp move is, probably is going to be an important one. On the other hand, you have people who are looking at some wear and tear going on below the surface. More stocks are kind of not trading above their longer-term averages. So you do see some fading momentum and energy in there. Things like transports actually kind of rolling a little bit. So, I think on a net basis, you'd have to say it tilts slightly in a positive favor, just because most stocks are up since the S&P last hit an all-time high, as opposed to being down. But it's also one of these eye of the beholder type situations. I can see it basing. You can say, no, that's just churning and getting tired and about to fall away.
Mike, thank you. We'll see you soon, and we will be talking much more about this bond move. There's also rotation happening in meme stocks today. Some big drops for yesterday's winners like Wendy's and Clover Health, but names like Clean Energy, WWE, and Tilray getting love from the Reddit crowd. We know the Tilray CEO loves them back. Kate Rooney with more on the memes. Kate.
Hey, Sarah, we're seeing a huge turnaround in these favorite meme stocks today. Wendy's and Clover Health had become the favorites of the Reddit crowd just yesterday. Take a look, though. Today, Clover Health down about 15% today. We had Wendy's down about 13%. Clover had been bid up as a short squeeze candidate on Tuesday. People on Reddit noticing the company's high short interest and encouraging each other to get in. A lot of diamond hand emojis around this one. And according to S3 Partners, 44% of the float for that stock is sold short. So that was attracting a lot of folks on Reddit. It did not take long for some other names to catch a bid, though. Shares of Clean Energy Fuels, that stock has been up double digits today. This was the second most talked about name among retail traders this morning. That's according to data from Hype Equity. The trading activity in clean energy fuels has been building over the past few days. So far today, you've seen more than 44 million shares trade hands. That's about 4 times the 30-day average volume. Meanwhile, pot stock Tilray, that's been up double digits, as well as Worldwide Wrestling Entertainment, WWE, up double digits as well. They have both been getting some love on the Reddit forums. Goldman Sachs, meanwhile, calling out this trend in a note today, all about retail trading. Some big takeaways. Analysts notice that smaller traders getting in first, then attracting the attention of some bigger players is really when the stock tends to pop. The buying strategy of following stocks that follow a high proportion of small lot trading, meaning those smaller individual traders, has been profitable since the market's recent bottom on May 12th. Guys, back to you.
And the original of them all, GameStop. Big news today. We're going to get earnings after the bell, whether they matter or not. But also hearing more about their turnaround plan. They're holding their shareholder meeting, not open to the media. What do we know? Anything about what's going on there and how the retail trad is responding?
Yeah, Ryan Cohen, chairman of the board officially, that vote this morning, and sort of a non-event. It was a 10 to 15-minute meeting run by George Sherman, who is sort of the lame duck CEO. He's on the way out at the end of July. They are actively looking for a new CEO. All eyes are on the future of GameStop. It's sort of similar to what you see with Tesla in terms of what the company could accomplish. People are very optimistic about the stock. The sort of opaque mystery turnaround plan and the e-commerce plan to take it to from a brick and mortar retailer into an e-commerce tech company. So I think any hint of that pivot and any detail is really getting people excited on Reddit. Although, as you said, the actual numbers I don't think are getting people too excited. The first quarter doesn't mean much to the retail crowd.
Kate, thanks so much. Kate Rooney there for us. Now to a name that's actually moving on fundamentals. Campbell Soup. Sarah, what's behind that drop today?
Bottom of the S&P 500. Yeah, not moving in a good way. Campbell Soup out with earnings this morning, missed on quarterly numbers, lowered guidance, organic sales falling 11.8%, and margin pressure was notable, coming in at 31.8%. The expectation was around 34% for gross margins. The issues, many of which we talk about every single day. Clearly, people aren't stocking up on canned soup and Prego sauces and kettle chips like they were at this time last year in the middle of the pandemic. There's also rising inflation. It was a big issue. The company is paying more for ingredients, which pressures profits, and supply chain issues as well. Those costs, including a 2-week closure of a Texas manufacturing plant on severe weather. The company also did discuss execution issues in the transformation of its snack business. Add it all up, and it's a bad combo. The question for investors is how temporary or lasting is all of this? The company says, quote, although all of these headwinds put pressure on our near-end performance, they do not represent structural issues, and we remain confident in our strategic plans. It will raise prices, Campbell Soup that is, starting in August and September to deal with the inflation. And also the company says that the products mostly are growing at higher rates than they were pre-pandemic. So they really don't see this as a long-term problem. Most analysts on this stock are on hold, as the company still has to prove that it can turn around some of these old school brands beyond what they saw during the pandemic, which was that COVID benefit. It's not clear millennials will keep buying cans of soup. As far as the rest of the sector, you see pressure across the board on the food companies. Barclays analyst this morning making the point that Campbell's was one of the few food companies that's actually reported earnings that include the month of April. So this could be a bad omen for the rest of the sector as they report. We'll see who's able to hold on to the younger consumers that flock to big brands during COVID, like cereal, packaged snacks, and who also has pricing power to deal with these higher food costs, which certainly was one of the biggest factors here.
So many of these CEOs have come on, including Campbell's, during the pandemic with us. You're a booking machine when it comes to them, and they all say, no, this is going to be a lasting change, a lasting trend.
And that respect, they will point to, Campbell's that is, the fact that they held or grew market share during the quarter and that they are growing at higher rates than in 2019. So that,
but high growth rates for them is what? Single digits, low single digits?
Correct. And it's still down because it's not going to be the crazy double-digit explosive growth that we saw during the pandemic. But that will be a question. And they are going to have to spend on marketing, and now they're going to have to raise prices and see if they can keep consumers attracted. And right now, I think there's a lot of questions, certainly around Campbell's and its own portfolio. Canned soup, Goldfish is doing quite well. They have some good snacks like Snyder's and kettle chips, but some of the more packaged stuff, the Prego sauces, Swanson, a little bit. There are questions of whether the younger people want to shop for those items.
Down 6% or so for Campbell Soup today. After the break, a warning shot for the spirits industry, perhaps. Brown-Forman slipping today after earnings missed the mark due to higher expenses. We'll speak with the company's CEO about those results. That's next. You're watching Closing Bell.
This CNBC program is sponsored by Truist Wealth, where we focus on person-to-person connections so you can focus on what matters most.
The pursuit is on. The pursuit of outperformance at PGIM, with deep expertise to outthink across multiple asset classes, actively managing investments in the world's public and private markets, outscale, with the resources to serve 1,500 clients in 52 countries, and outlast, with long-term conviction that looks beyond today's volatility. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
This is what 30 minutes of boot camp tastes like. Come on, Peloton. Let it flow. Reach all the way up.
Check your vibe. It's time to grind, Peloton. Let's turn it up. Come on.
What's up, hustlers? Welcome to Peloton Outdoor. Let's get jogging.
Find your rhythm, baby. 1, 2, 1, 2. So many Peloton newbies on the leaderboard today. Welcome to the family.
Try Peloton classes free on the app. New members only. Terms apply.
Hiring? ZipRecruiter finds us the best people for the job. I've hired everyone from supervisors to field scientists. With ZipRecruiter, we get hiring results.
Try it for free at ziprecruiter.com/index.
Never forget that the floor is ultimately a supermarket, with the merchandise being stocks. Except unlike an actual supermarket, the NYSE is more of a caveat emptor institution. Buyer beware. Watch or listen live on the CNBC.
It was a Saturday. Chris was a good dad. His water practices, not so much. Hey, Chris.
Hey, Culligan. Got a water pitcher for the fam. Pretty safe, huh?
Well, basic water pitchers are passable, whereas a Culligan reverse osmosis system can reduce lead, arsenic, pesticide runoff.
You realize these have filters?
Chris, pour it out.
It's not going fast enough. Just done with that.
When your water's right, so is your world. I wrote that!
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving. Until they came to us. Keck Medicine of USC. Beyond exceptional medicine.
It's real meat and veggies, developed with vets and delivered fresh to you. Visit tryfarmersdog.com to see your dog's personalized meal plan.
They're here. Seasonal favorites from Imperfect Foods, the grocery delivery service on a mission to build a better food system, offering sustainable, affordable groceries delivered once a week.
Shop now. Get 20% off your first 4 orders with code PERFECT4 at imperfectfoods.com/TV.
Shares of Brown-Forman sinking today. Earnings fell short of estimates, but sales jumped more than 14% year over year. And the company provided an optimistic outlook for the year ahead. Brown-Forman CEO Lawson Whiting joins us now in an exclusive interview. Lawson, good to see you again. Thanks for joining us.
Hi, Wolf. Good to be here again.
So my first question is on outlook and whether or not within the alcohol business, liquor has a slightly worse set of prospects as summer comes and as reopening comes, relative to some perhaps lighter, more outdoor space drinks?
Oh, I don't know about that. I mean, I think, I don't know about for the next couple of months, but the spirits business has been taking share from beer and wine now for a long, long time, and that includes the summer months. And so we feel pretty good about the outlook for the upcoming several quarters.
And in terms of the just past results, 6% down in the share price, what do you think explains that, and in particular from the high end to the low end products?
Yeah, I mean, I think, well, first of all, our portfolio skews very much to the premium side of things, and we delivered 6% top line growth for the year, so we feel pretty good about that. I think if there was any disappointment, it is maybe a surprise at the level of investment we made in the fourth quarter, and we expect to continue to making into next year. But we see a lot of opportunity. We're putting a lot of money into advertising right now, particularly behind the Jack Daniel's brands, but really across the rest of the portfolio. And we continue on the SG&A line. We're making a number of sort of step-up investments right now. Some of it's in the world of digital. We have a group called Integrated Marketing Communications, where we're hiring a whole lot of new people to focus on the digital space, and we're putting in a new sales force called the Emerging Brands Group to focus on our ultra-premium brands. We're taking that model that's already in the U.S. and exporting it to Europe. So there have been some elevated costs out there that might have caught a few people by surprise. But still, we feel pretty good about the long term. This is a 150-year-old company controlled by the Brown family. that really has a very long-term outlook. I mean, they talk sometimes in terms of generations as opposed to certainly not quarters. So we feel pretty good about our place right now.
More specifically, gross margin falling 3%, I think was the big surprise, as you outlined. And I know you're spending more on advertising, but I just outlined the litany of things that are weighing on profitability at Campbell's Soup, which is right down there at the bottom of the S&P with your stock right now. Is some of it that inflation and supply chain pressure that they're dealing with?
Yeah, I mean, the gross margin pressure, we've been under that for 3-4 years now. That's composed of really two main things. One is increasing wood costs. So the wood that we use to make our barrels to make all the whiskey, and then agave costs. Those two cost inflation challenges have been in place for a while. We actually think we've passed that. And we expect some of those costs to actually go the other way. So there'll be tailwinds as we move into next fiscal year. We are not seeing the same supply chain challenges that I've heard about in some of the other CPG companies. We are seeing some pressure on our glass side, that we have had to lower inventories a little bit, but it's not at the point where it's, I call it a financial challenge for us yet.
Where are you at the moment on pre-made cocktails?
Yeah, well, I've seen some of the other interviews you've all done. The RTD business has exploded over the last year. It's a business. I mean, the Jack Daniel's and Cola, Jack and Ginger business is a 12 million case business around the world. 85% of that is outside of the United States. And so we have a very big RTD business in Germany and Australia and pockets all over Europe. And then we have an 8 million case new mix business down in Mexico. So that is our biggest RTD business. The U.S., which is where everybody is interested in these days, we have Jack Daniel's Country Cocktails, it's called, which we signed a partnership with Pabst a couple of months ago. That's just getting started right now. But as you may know, RTDs sell a lot in the convenience channel, a lot in the grocery channel, and our traditional spirits wholesaler network just wasn't getting to those stores. And so we're really looking forward to this partnership with Pabst and getting a whole lot more distribution points and, hopefully continue to grow that business, which grew fantastically last year and was up something like 80% year over year.
Big Jack and Ginger fan here, Lawson.
Good.
I have to ask you about the European tariffs on whiskey and bourbon. As a sign of good faith, they stopped that 25% tariff, which was in retaliation for the steel and aluminum tariffs that the Trump administration put on Europe, though it's not clear that the Biden administration is going to reverse that steel and aluminum tariff. So what are your plans right now, given that uncertainty and potentially massive tariff, which was set to rise to 50%?
Yeah, what happened? So we've been under this 25% tariff. It's 3 years now. So it has been a very painful episode for this company, as we are by far the largest American whiskey company in the world. And so in a lot of ways, we've looked at this like it's a tariff on us. And there are days when we've asked, how in the world did we find ourselves in the middle of this? But I do think that there have been some positive signs lately. In the G7 meeting, there is some hope that some conversations can happen that will make them get better, and that hopefully both the U.S., the U.K., and the Europe group all come together to try to settle these crazy tariffs that we've all been under. We'll see. I've expected this to go away several times over the last 3 years, and it hasn't happened. I haven't been right yet, but we're only hopeful that cooler heads will prevail.
Yeah, I definitely know to stock up on Woodford when I'm here rather than back home and get a better deal on that front. Where do you stand, Lawson, on cannabis and related products into drinks? And would you do so under your existing brands, or would it be a risk to dilute some of the brilliant brand image you built up over the years in the likes of Jack Daniel's?
I don't think we would do it under any existing brands right now. It is not something that we're really pursuing. We've taken a look, studied it actually pretty deeply, and just decided to take a pass. I actually don't really feel there's much of an opportunity in the beverages side of cannabis. The rest of it is obviously exploding around the country right now, but the beverages side, I think, has been a little bit overblown, and I don't have a lot of confidence that's going to be a big category even in the near or far future.
Lawson Whiting, always good to talk to you. Come back soon. Got to ask
All
you
right,
how the bars are doing
both.
across the country. Thank you. CEO Brown-Forman.
Thanks, Sarah.
I was surprised to hear you say you like Jack and Ginger. I thought you always go for it neat.
I do, but if I have to mix in a cocktail, I'll put it with ginger ale. I do just like it straight. When we come back, remember the TikTok ban? President Biden revoking the executive order from President Trump surrounding transactions with Chinese companies and outlining a new strategy. We'll explain what it is next.
They call them moonshots. Ideas so grand they seem impossible. 50 years ago, we took our own moonshot and discovered that greatness is among us. It's in what we do and how we get there. It's in markets, technology, and people. But to realize that greatness, that's a moonshot. And we'll never stop taking them.
Born from discipline. Consistency rewards. Columbia Threadneedle Investments.
This is the sound of change. The sound of 1,000 sighs of relief, and the sound of a company watching out for you. This is the sound of low cash mode from PNC Bank, giving you multiple options and at least 24 hours to help you avoid an overdraft fee. Because we believe how you handle overdrafts should be in your control, not just your bank's. Low cash mode on virtual wallet from PNC Bank. One way we're making a difference.
Retirement income is complicated. As your broker, I've solved it.
That's great, Carl. But we need something better that's easily adjustable.
Has no penalties or advisory fee.
And we can monitor.
To see that we're on track.
Like Schwab Intelligent Income.
Schwab.
Introducing Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio.
Oh, that's cool. I mean, we don't have that.
Schwab, a modern approach to wealth management.
I have big news. You can now brush and floss at the same time. This is Waterpik Sonic Fusion. It's twice as effective as regular brushing and flossing. Go online or ask your dental professional about Waterpik Sonic Fusion.
We are all over this developing story that is rocking Wall Street.
There's a tremendous energy in this market.
Some investors ready to pounce.
Taking off, soaring.
The stock surged and sent Wall Street into a frenzy.
Is this a huge opportunity for consumer electronics?
A record-breaking week for markets.
Is this crazy or is this crazy genius?
They're just killing it.
The idea that shareholders not a beneficiary of this is crazy.
Once in a lifetime opportunity.
Are you ready, Ski Daddy? Booyah!
Welcome back. President Biden revoking a number of executive orders put in place during the waning days of the Trump administration surrounding TikTok and other Chinese companies. Ilan Moy with the details. Ilan.
Well, that's right, Sarah. President Biden is revoking that executive order that attempted to ban TikTok and WeChat, and instead ordering a comprehensive review of apps with ties to foreign adversaries in an effort to protect Americans' data. Now, specifically, the White House says there could be a heightened risk when the apps are owned or controlled by those supporting certain military or intelligence activities, involvement in malicious cyber activities, another red flag, or if the apps collect sensitive personal data. The administration singles out China as a country that does not share our democratic values and seeks to leverage technology in a way that presents an unacceptable national security risk. Now, it's possible that TikTok and WeChat could still receive extra scrutiny from the administration under this framework. The Commerce Department is slated to make additional recommendations in the coming months. Guys, CNBC has reached out to the companies for comment and have not gotten any just yet. Back over to you.
Elon, remember that crazy deal when Microsoft was competing with Oracle, and then ultimately Oracle was chosen as the trusted technology partner with an investment from Walmart, and they were going to IPO? Is all of that just dead because it didn't really get approvals and then Trump left the White House?
Yeah, it's all really sort of unclear. If you remember, that ban against TikTok never actually took place. There were at least 2, I believe, federal injunctions against it moving forward. And I reached out to the Department of Justice to see if those cases would still try to be appealed, and the Department of Justice had no comment. So where the legal status is still kind of murky. But I think what the White House would say is that this is an attempt to make the underpinning of any future decisions stand up in court to ensure that they would be on a firm legal footing, because right now, the way that the Trump administration's EOs were put together, clearly it's facing a host of legal challenges and not even able to move forward.
Elon, thanks so much for that. Should mention, by the way, with just over 30 minutes left, we are at session lows. That means negative territory for the S&P, nearly negative territory for the NASDAQ, and down over 100 points now on the Dow. Coming up, the National Retail Federation making a major upgrade to its sales forecast for the year. We'll speak with the group's CEO about that bullish outlook. Plus, get ready for GameStop. The granddaddy of the meme names is gearing up to report results after the bell. But do the numbers matter at all? Does even the outlook matter? We will debate that coming up. As we head to break, here's a check on bonds. Yields are lower today. The 10-year falling below 1.5% earlier in the session, where it currently remains. We're back in a couple minutes.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Wealth is your first big investment. Worth is a partner to help share the load. Wealth is saving a little extra. Worth is knowing it's never too late to start. Or too early. Wealth helps you retire. Worth is knowing why. Principal, for all it's worth.
Hey, you want to get out of here? Uh-huh. We've got you. During Expedia Travel Week, save 20% or more on thousands of hotels. Expedia. It matters who you travel with.
This is more than just a building. It's an AI-powered investment firm with billion-dollar views. A cutting-edge data security enterprise. Yes, with a slide. A perfect location for the world's first one-hour delivery. An inspiration for the next workout cult. And enough space for a pecan-based nutrition bar empire. It could happen. This is where dreams become brick and mortar. Find yours on LoopNet.
Interested in Ethereum? Just type symbol ETHE into your broker.
At Westcom, we think your bank should be all about you all of the time. That's because we're not a bank at all. We're a credit union, a not-for-profit financial co-op owned by our members throughout Southern California, people just like you. So we're all about finding new ways to make banking easier, better, and more rewarding, all to help you build a better financial future. Bank where it's all you all the time. Open your account today at westcom.org/welcome.
At JP Morgan, the only definition of wealth that matters is yours. It can be a smaller house, but a bigger nest egg, a goal to work toward, or the freedom to walk away. With 200 years of experience, personalized advice, and commission-free trades on an award-winning app, we're working for you. Planning, investing, advice. JP Morgan Wealth Management.
So you can be your strongest. Purchase Tonal today and receive Power Beats Pro wireless earphones from Beats by Dre for Father's Day.
We're for movers and shakers and healthy overschedulers. And for never settle creators and do-it-all innovators. Whatever life you lead, Freshly is the effortless way to eat better. Chef-cooked meals delivered fresh. Get started at freshly.com.
We've got a market flash on Teladoc. Josh Lipton's got the details for us. Josh.
Well, CNBC's own Annie Palmer is just now reporting some news on Amazon, which may be having an impact there, that Amazon has signed multiple companies to its telehealth service. Remember, that's called Amazon Care, which provides virtual and in-home health services to some Amazon employees. The company, remember, announced back in March that it would open up Amazon Care to other companies later this year. And now CNBC reporting here that Amazon executive telling us that they've had quite a bit of interest, in their words, from other companies in using this service, and that they are rolling out, that they're going to work, they say, to make the full Amazon Care service available to other geographies. This executive saying as fast as we can, adding that they're eyeing bringing that service to rural areas in the future as well. Back to you guys.
The Amazon effect. Josh, thank you. Josh Lipton. Let's get to another healthcare mover. Shares of Pfizer moving up as the U.S. buys shots to share with the world as President Biden touches down in the UK for G7. Meg Terrell with that story. Meg.
Hi, Sarah. Well, as part of a plan to help vaccinate the world, the White House reaching a deal with Pfizer to buy 500 million doses of the Pfizer vaccine at cost, according to a source familiar. This was reported earlier by the New York Times and the Washington Post. These will be donated to other countries, mostly low-income countries that have not had access to vaccine. Through our colleagues at NBC, they're reporting 200 million of these doses will be distributed this year, 300 million in 2022. This, of course, guys, as we're here in this situation in the United States where we're hearing about vaccine doses sitting on shelves that might start to expire. So there has been a ton of pressure on the Biden administration to get vaccines out to the rest of the world. This a big move in that direction. Guys, back to you.
Sure, well, there'll be more discussion at the G7 in the coming days of that. Meg, thanks so much. Time for a news update. Leslie Picker's got it for us. Hi, Leslie.
Hey, Wilf, I'm Leslie Picker, and here's your CNBC News update at this hour. A federal probe finds protesters near the White House were not forcibly cleared so that former President Trump could hold a photo op last June. The report says officers failed to properly warn protesters about the impending crackdown, which eventually included the firing of pepper pellets and flashbangs. In the United Kingdom, a high-profile epidemiologist now says his best estimate is that the Delta variant is 60% more contagious than the more common Alpha variant. With hospitalizations now above 1,000, officials worry a third wave could delay England's plans to lift all remaining COVID restrictions in less than 2 weeks' time. Facebook plans to reopen most of its offices by October, but in a turnaround, CEO Mark Zuckerberg now says all full-time employees can work from home if their jobs can be done remotely. Last May, Facebook said it would only allow senior and long-term employees to work from home permanently if they wanted to. Back over to you guys.
Leslie, thank you. Leslie Picker. The National Retail Federation revising its annual forecast as the economy is proving to be more resilient than initially thought. Up next, we'll talk to the NRF CEO, Matt Shea, about what is driving all the spending. And June is Pride Month. All month long, we're spotlighting CNBC contributors, business leaders, and our own CNBC anchors and producers. Here's CNBC's Brandon Gomez.
My mom always told me that love should be unconditional. But it wasn't until I was 19 and coming out as gay that I realized it applied to myself. I also needed to unconditionally love myself. Stop letting fear keep me from understanding who I am. Take pride in it, because that's how you find people who are going to embrace you, lift you higher, and love you unconditionally.
Sales are down from last quarter, but we're hoping things will pick up by Q3. Yeah.
Doug?
Sorry about that. What? It's.
You all right?
Never settle with Power E-Trade. It has powerful, easy-to-use tools to help you find opportunities, 24/7 support when you need answers, plus some of the lowest options and futures contract prices around. Don't get mad. Get E-Trade and start trading today.
I have big news. You can now brush and floss at the same time. This is Waterpik Sonic Fusion. It's twice as effective as regular brushing and flossing. Go online or ask your dental professional about Waterpik Sonic Fusion.
Need more performance.
He wants more performance.
I can't hear you. That's better.
More performance.
Okay, we're on it.
Can you bring up that data?
Guys, let me show you this.
Should we switch to scenario 7?
Scenario 7?
Copy. Switching.
With WebEx, the McLaren Formula One team is making collaboration count. Introducing the WebEx Suite, driving hybrid work.
I wish that I knew what I know now. When I was young.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you'll have the freedom to live the retirement you want. This is what an annuity can do. Find the right financial professional to show you how. Learn more at protectedincome.org.
Digital transformation has failed to take off because it hasn't removed the endless mundane work we all hate. Automation can solve that by taking on repetitive tasks.
All right, guys, let's do some analysis. Let's look at these stocks. So the only reason why I was saying Wish, let's look at the daily here. The reason why I'm bullish on Wish, and Wish is one that I've traded a lot. I literally bought the options the day before it rallied, and I bought long-term options, so I'm not really concerned of the short-term moves. Wish all-time high was at 32.80, and right now it's currently at 10.80. This is a name that a lot of options players like to hit from time to time. I don't remember if it was this area or this area. There was a lot of options activity, and you see a lot of people going in here. Wish has a good, cash flows, good assets, and a lot of institutions own it. So this name overall, long term, is a great name, and it likes to get action from time to time. I wasn't expecting this crazy move in 2 days, but that's great. There's an opportunity there, and there's a lot of momentum. So the reason why I say that at these levels I prefer Wish over AMC is because let's just say you bought Wish at 13, just for example. It's a lot easier for Wish to hit 26 given the market cap and size of the company. It has more potential to double. Now, it doesn't mean it's going to double, this week. Potentially it could, or the next, if there's more momentum coming into the stock. But if we look at AMC is at $50. So say you have money to invest right now, you want a fresh position. AMC is at $50, has a much bigger market cap of 25 billion, which is massive. And in order for this to go to 100 and double your money at this price target, you're talking about a 50 billion market cap for AMC, which is very out there. It's not impossible. I mean, now anything goes. But if we do look at Wish, Wish has traded at 32 before. So this is why I'm bullish at Wish. It's seen these levels. It's very realistic, and a lot of institutions own it, and it has good numbers here overall. So it might take long, or just because of the momentum and the options that are in Wish right now, there's a lot of bullish activity on the call side. Maybe we see it go to 20 by by Friday or by the end of next week. If we see something wild by tomorrow, something's just bring more momentum. Let's take a look at Root. Root is another one that I saw on the options activity. The put to call ratio looks very nice. It's a finance insurance company, I believe. And this one also has potential to run up. Right now, it's kind of lingering at a very interesting place. It is consolidating. If we look at the 5-minute chart, it's just stabilizing on the 10 period moving average here. And Root has potential here as well. What we're not seeing is Root collapsing here, going back down, filling the gap like some of the other stocks that we're in. Root actually held very strong. So typically when stocks do this, and if they consolidate like this for a day or two, I mean, today that was very strong on Root because it gapped up and it held at these price targets. That's very bullish. So typically we'll see Root maybe go further up tomorrow, or if it continues to consolidate, that's a good setup for it to run up. Oh, May, you did buy at 13. Did you buy, May, did you buy options or did you buy the stock at 13? So Root is another one. I mean, there's a lot of activity right now. It's just putting on a position and not just holding. There's also data coming out tomorrow, inflation data, that I'm a little concerned. I have some buying power on the sidelines, but I'm just a little concerned for that. The stock. Oh, okay, cool. May, I don't know how much how big of a position you have for Wish, but if it's something that you can hold off for, you shouldn't have a problem. But you might have to hold for some time. I bought options for 2022, So those babies I'm gonna hold for a while. Since you have the stock, there's no time limit for the stock. But if you want something, if it's not exciting enough for you, maybe there's some of the other stocks. I just don't know how long you hold your positions and what you want to tie up that money. I don't know how much money you tied up comparison to your account. But yeah, I mean that's why I like Wish. Yeah. Yeah, no, absolutely. No, Wish will, and in my mind, I mean, I buy time just because I'm sloppy sometimes with my timing, so I buy time. But in my mind, no way. I mean, Wish definitely is a good company. So, and it just random waves that you see options activity hit it. The only thing is when you see that options activity hitting Wish, it's short lived sometimes, and that's my only concern. Yeah, they hit it. I don't remember it was here or here. I went a little bullish on it, and then it went back down, and I did sell for a loss. I did get caught, but that's why you're supposed to have like a mental stop loss, or risk what you can and have a mental stop loss. And I'm glad I locked in those losses, because I would have took a massive loss if I would have held all the way down here. I would have still been under, and that's how I trade. I give myself a range or a target where I'll lock in some losses, and then I'll come shooting again if I see the stock lower in the future. I don't like putting limit sales. I personally just look at just have a price target in mind. If it goes down below $9 or have something in mind as strategically, if you just like to hold positions for like a week, then yeah, I would put a stop loss. That makes sense for like a kind of a short-term swing trade. Now, if you're thinking something more like, you hold positions for weeks or months out, then you have no problem. But if you want to continue to rotate that money, then yeah, definitely put a stop loss. I personally think this stock will hold above $10. If it goes below $10, I'll be concerned for short-term trading. That's just my outlook. Let me see the 5-minute. You see this selling off right here. It's holding above a 1070. And just a overall mental note, round numbers like $10, $5, $15, those are pretty big support resistant lines. You see a lot of sell and buy orders at those levels. So if the buyers can hold the price at $10 in the short term, I see this, as a potential place where you might be seeing maybe, closing out some positions if you're a short-term trader. But overall in the future, yeah, I mean, I think this has plenty of potential.
Retail Federation revising its 2021.
Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more.
At Westcom Credit Union, we think your bank should be all about you all of the time. So we make it easy for you to do your banking wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
At JP Morgan, the only definition of wealth that matters is yours. It can be a smaller house, but a bigger nest egg, a goal to work toward, or the freedom to walk away. With 200 years of experience, personalized advice, and commission-free trades on an award-winning app, we're working for you. Planning, investing, advice. JP Morgan Wealth Management.
One big world of credit trading, where 1,800 trading firms access $16 billion in daily liquidity, saving over $1 billion in combined annual transaction costs. Market access.
Built to chew. Bite into our monthly box filled with tough toys and delicious treats designed by our canine specialists to keep your dog engaged and satisfied. Let's chew it. Get free shipping today at superchewer.com.
Stay restless with the icon that does the same. The RX
crafted by Lexus.
Lease the 2021 RX 350 for $449 a month for 36 months.
Experience amazing at your Lexus dealer.
I'm 53, but in my mind, I'm still 35. That's why I take Osteo Biflex, to keep me moving the way I was made to. It nourishes and strengthens my joints for the long term.
Osteo Biflex, plus vitamin D for immune support.
This is how you become the best.
Let's take a look at some of the other names right here. Everything seems like it's selling off. Clove got hit it hard here. We want, for those of you trading Clove, we want to see holding around 1650, which is, the gap here of, I believe, 2 days ago. So you want to see that hold this line for potential move going higher. If not, then it can melt away and gap fill here. We also have Wendy's at 25.27 here, melted away from 29. Let's take a look at AMC. AMC actually holding at 50 pretty nicely here. Although it ran up and it's been chopping around here, it's holding here at $50. That's a very good bullish sign. And GameStop at 300. We saw it rallying up at 350 aroundish yesterday. Gap down and slowly trending up. So this is a good sign for GameStop. Sundial Growers here taking a haircut here at 1 and 12, trading at 112. Let's look at Workhorse. Workhorse actually holding pretty well here. Workhorse at 16.71. Let's take a look at Go EV, $10, $9.92. Also gapped up to 12. Now it's at 10. So a lot of these high flyers pulling back. We'll see tomorrow if this continues. We'll see if the pullback continues, and or if we gap up and squeeze a little higher on some of these names. But the good news overall, regardless of we're up or down today, if you're taking a loss, the only thing I can say is the momentum is here and the money's back on these stocks. And if you've been trading these stocks if you've been holding positions or trading these stocks, you realize that we've been dry for about 2-3 months. And so overall, I'm just happy that there's action here and there's a lot of potential here. So just feeling optimistic for the next few days, weeks, and just happy that the money's back over here in stocks for the time being. We have Bed Bath & Beyond around that 35. What else do we have here? Let's see, Nvidia holding here at 694. And Ride here. Ride, wow, nice move here. Nice move here, Lordstown Motors. It's been having a lot of bad news. It's running out of cash. And actually, this hit almost $9 and it rallied back up to 13. I missed this move. Wow, look at this. That was a nice trading move right there. And then so Wish back down to 1043. Let me check where I have more of my money allocated. Let me check here. I want to say possibly right now I'm the most concentrated on Go EV. So I have shares and options in Go EV. That seems to be my biggest position right now. But this is also a long-term position. I bought into Go EV around 750, so I'm not really concerned. I bought the options and stocks around this area. So this was just a gift, and it's same with Wish. I know the bottom on Wish. I bought here on Wish and I have long-term options. So this could pull back. It could get ugly. But, overall, momentum is here. The money's here. And it looks like these stocks hit a low. So I'm optimistic going forward. Also, if you guys want to check out, the link is in the description. I have here Discord where I put my trades live. If you guys want to see my positions and my trades, overall. I put them here when I buy, when I sell. I also have tons of news here. I have tons of news coming in here. You could know what the market is doing 24 hours. I have Yahoo Finance, Bloomberg streaming all day. I also have a few podcasts, more news articles. So you can get lost here on Discord all day. I have Kathy Woods, Elon Musk tweeting all day. Streams, Fox Business. I have SPAC information here, numbers constantly streaming. Just for example, the top gainers, the top losers, top volume of the day. So I have a lot of information here. I have a beta trial here. You see new unreads, and you can just go in here. I also have crypto, Cointelegraph, constantly streaming here. You get the latest news on crypto. So I'm really pushing a lot of information on my Discord, and my trading is decent. So you can check my positions. I also have a long-term investment portfolio here. Click here. I update my portfolio. I give my positions and charts on my long-term investments. And I have a trading account, and that's where I trade my Robinhood account. So, and you can see here, this is when I bought Wish. I sent the alert here on June 7th, which is Monday. I sent that I bought Wish. I bought 20 contracts. I got filled. I bought the January 2022 for 5,200 total investment, 20 out of 20. So I sent the alert. I also have some NVIDIA. I bought NVIDIA that day too. So yeah, go check it out. The link is in the description if you guys want to see that.
Stories and crowd psychology.
Well, I read the Wedbush note on this is just so funny because they lay out the analysts, their bull case, their bear case, and their base case, and it's all just related to sentiment and what the retail traders do.
I love the
Nothing
point
to do
of
with
Mike said there's nothing to look at, and yet they get a live camera at their HQ for earnings. It's a sign of the times, and it will be fascinating to watch. But as you've said many times, Mike, I doubt it's the fundamentals that will move this. It's probably the different emojis that will be within the release and on Twitter as it comes out. We'll see what happens. What would Josh, you think is, I mean, you're laughing. I guess that sums it up. Nothing to say.
There's 4 analysts covering the stock now. It has 2 hold ratings, 2 sell ratings, and it had 9 analysts covering it in January. So 5 firms made the decision that there's absolutely no value they could add by weighing in on its current price relative to its fundamentals and walked. So that should tell you all you need to know about whether or not the estimates, the earnings, or any of that are really going to have the final say. I think if they talk a lot about the initiatives in terms of like bringing a new digital gaming platform online and stuff like that could be enough to hold the stock here and even juice it higher. And I think they know that. So probably that's what you're going to get. If I were asking a question on that call, I would ask, where is the secondary? Why are you guys not raising money? What is wrong with you? This is not a good business. Raise money, sell stock. Even if you have people on Reddit mad at you for 2 days, it's probably worth doing if you're serious about building a better GameStop for the long term. So that would be the only thing I would ask these guys. I'm not interested in their stores.
Respect to the 4 analysts who are still trying. More news on vaccines, meantime. Meg Terrell's got that for us. Meg.
Hi, Wolf. We just brought you the news that the U.S. has secured a deal with Pfizer to obtain 500 million more doses to supply to the world of its COVID vaccine. I've just learned the U.S. is also in negotiations with Moderna to potentially secure more doses. We don't know the precise amount as these negotiations are ongoing. It could be a similar size. We also don't know what the U.S. would potentially pay for these doses. We understand with the Pfizer deal, it is at cost, a not-for-profit price with the Pfizer vaccine here. But also this might signal the U.S. is not done with potential vaccine diplomacy, potentially securing more doses also from Moderna. Guys, we'll bring you any more if we get it. Back over to you.
Meg, thanks so much. Brokerage stocks taking a hit this afternoon after SEC Chairman Gary Gensler said he plans to look into incentives that exchanges use to attract orders, noting that payment for order flow is not allowed in many other countries. Gensler joined CNBC this afternoon. He also hinted he'd look into trading apps like Robinhood and whether there needs to be more protections for investors.
We have to watch out for investors. And so these behavioral prompts that are being put on our mobile apps to trade is that really the best thing? So we're going to take a close look at what's called gamification, all these little prompts and these encouragements to trade, and how do we protect investors in this new regime?
Robinhood have also responded in the last few moments. We're going to put up the full quote on the screen as we go, but they say, we agree with Chairman Gensler Technologies' expanded access to investing, that we're committed to providing products and services to all investors, particularly those people who are previously excluded from participating. There's not actually anything too definitive in that statement, but it is on screen for you now. Mike, clearly a big sell-off today on a lot of these exchanges, including Virtu Financial, the most, down about 6 or 7%. What's your take?
It's a shot at the business model. It's also a statement that the chairman wants to go after a lot of deferred maintenance and market structure issues that people have kind of pointed to for a while that represent some undue fragmentation, a lot of inefficiencies, incentives to keep volume off of exchanges and all the rest of it. So I think there are a lot of things in here that people have known for a while. The system we have right now is not necessarily the one you would build from the ground up. Part of the issue is the real exchanges are not really allowed to improve their quotation the same way that the wholesalers are, the payment for order flow guys. So a lot of things have to be looked at right here. It's not necessarily just like free zero commissions are going away because that's bad. It's much more about how much of the volume actually gets into the correct bid-ask spread at any given moment.
Sarah, you know who'd be the best person for them to hire to set out the new rules?
Santoli.
Santoli.
Oh, I don't want
He's
to.
a whiz.
You might not want to, but you'd be the best person.
That's a big pile of headache right there.
I agree.
Bob
I don't think
Asani
it'd be that
knows a lot
enjoyable.
about it, too.
I think Bob and Mike together would nail this. Maybe with guidance from Art Cashin. Done.
Yeah. There
If
you
you're
go.
watching Gary Gensler, that's my suggestion. 2 minutes to go in the trading day. Mike's got the internals for us.
Yeah, it's kind of eroded over the course of the day, Wolf. It started out being, again, more stocks up than down. That's been the pattern. We've had a little wear and tear. There you have the New York Stock Exchange. Slightly more declining stocks than advancing. It's really not been that dramatic. It's been kind of nip and tuck all day. Josh mentioned the transports. Take a look at how they look year to date. It looks like a pretty definitive little rolling over. And, you know, other stocks that are very levered to the recovery, like home builders, look like this. Equal weighted consumer discretionary kind of looks like this, a peak over the last several weeks. It doesn't mean it, again, it's not undoing the uptrend. It's just saying the moderation of expectations around just exactly how fast we're going to be levered to an economic acceleration, whether it's the shipping issues or housing coming off the boil. Volatility index actually had a bid all day, even though the market has been amazingly calm. The actual experienced volatility of the S&P over the last 10 days is 5, VIX equivalent 5 in terms of implied volatility, real volatility. So we see a little rebuild. We have a big number tomorrow. That's probably part of the reason it's a potential catalyst both ways. Plus, the meme stock volatility does keep a little bit of a hedging bid in there, Sarah.
As we head into the close, 1 minute left. We are near session lows. We've lost some steam throughout the final hour of trade. Take a look at the Dow, down 100.
All right, and the market is closed. So we're seeing here after hours, you know, it did a little pop, Wish did a little pop. So I'll show some of the short interest on Wish for those of you who are in Wish. Currently, let's see here. The short volume ratio is 18%, and this is the historical graph. So Wish previously yesterday was at 18. The new numbers refresh around 5 in the afternoon Pacific time. So I'll have new numbers for this in the afternoon. But yesterday it was up 18% comparison to the previous day to 15% compared to the previous day of 13%. So we have some short volume here, and this is a visual representation. So yesterday, you know, Wish has had much higher short interest before, around 30%. And right now it's a little bit on the lower side, and it's at 18% as of yesterday. So the new numbers refresh. I'll get the new numbers this afternoon, and this is kind of where it stands. So the short interest is rising. That could create some pressure for a squeeze and going higher, but we have to see. I think I have here, this is a borrow rate. So this was real-time short shares availability. So pretty much holding here around 7 million. So we had about 41, 4 million, 5 million, and then so it ended at 7 million. So possibly some people covering today. So I have these new numbers, but I appreciate you guys. For those of you guys who came and stopped by, I'll be streaming tomorrow again. I'll be streaming Wish again. Oh, look, it's up after hours slightly. Looks like it's at 1078 right now. Let's take a look here. After hours. My main concern in the short term was for it to hold above 10. I mean, if it were broke, below $10, that would have been the price point of concern. Right now, Wish is up after hours 19 cents, so it's at 1079, 1080, rising again. So there's potential here. There's momentum. There's activity happening. It's up 25 cents, 21 cents. This is great. This is great. So we want to see this kind of momentum. It rallied up, maybe locked in some of the people who bought up here, squeeze them out. Some people locked in losses. But the whole name of the game is, hold here and stay true and convicted to your, outlook and your trades. And right now it's at 1082. And just be concerned about the consumer price index tomorrow. Those numbers are going to come out tomorrow. And so, yeah, Wish going up slightly after hours. That's a good sign. And I'll take a look at some of the short volume ratio numbers later this afternoon as they update. I appreciate it, guys. I will be back on tomorrow, streaming Wish again, and see what other activities going on. And I appreciate it if you guys hit the like, and if you guys enjoyed this. Peace, and thank you guys. I'll catch you guys tomorrow again.